Hello, everybody. Good morning. Jeff Gibby here. It's good to see you. Thanks for coming to the event today. Like I said, it's good to see you. Let's go ahead and kind of kick things off. I'm going to start with a legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. Paulo, thanks for saying hi. Good morning. You should be able to hear me. Make sure to say hi. If you're watching GoToWebinar, there's a question box. You can do it right there in the chat. If you're in YouTube, just say hello. Tell us where you're from. It's good to see you. If you are watching us on YouTube, make sure to like and subscribe. It helps a great deal. We certainly appreciate it. So we do have some great sponsors today. I'm going to go ahead and kind of talk a little bit about them real quick. AAII is a hugely well-respected, well-reputed organization, and you can find out more about them at AAII.com. It's a nonprofit. They've been helping people. They do the AAII investment sentiment indices. They also kind of do a lot of reports and a lot of analysis, and they have a whole active investor division. And so if you're interested in kind of finding out more about AAII, go to AAII.com. All right. Also want to say thank you to Stocks and Commodities Magazine. You can find Stocks at Commodities Magazine at www.traders.com. Great sponsor of us that have been working with Metastock to help support the event for years now. They've been publishing articles since 1982, so our thanks. Do want to kind of mention the Traders Forum. This is a community project that we're doing with a partner, and it's great. You can go up there. It's absolutely free. You can chat with other traders. You can share market ideas. There's a lot of lessons. You can find out about the Traders Forum at thetradersforum.com. And then also want to say thank you to the CMT Association, cmtassociation.org. Great organization, also very well respected, well reputed. Do a great job of helping us support the event. And if you do have money under management, or you want to work with money under management, you want to work for a bank, a CMT designation after your name could be very, very helpful for that. You can go to cmtassociation.org. Kirby says, good morning. I'm joining from Ingram, Texas. Good to see you, Kirby. Thanks for saying hi. Okay. And of course, we are Metastock. Metastock can help you scan the markets. We're going to be talking about Metastock for a lot, off and on, over the whole week. It's been rated #1 in its price category for 31 years in a row. And I love the scanning in Metastock. I use it at least twice a day, usually. You can use it to test trading ideas. You can use it as a forecaster. 31 years it's been rated #1 by the readers of Stocks and Commodities Magazine. We are doing a special all week long where if you buy a month, you can get a second and third month for free. And you can do that at metastock.com/compromo. So I think that covers all of us from the beginning. Our first guest today is a very, very talented programmer. He's developed a number of systems for Metastock, and he does a really, really good job with them. He's going to show you. I really kind of like the methodologies that he comes up with and kind of what he does. He's going to show you an automatic optimized system that he's developed for the SuperTrend Bullseye. So with that said, let's go ahead and get you started. Daniel, how you doing?
Hey, Jeffrey. Hey, guys.
Right on.
How are you?
Good. How are you doing?
I'm great. I'm super excited to kick this event off, a 5D event. Super exciting lineup. And this makes it all more exciting that I'm the first one to come on today.
We didn't hold back at all. Let's see.
Perfect. And you should be able to see my screen now. I'm going to quickly also switch on my camera to say hello in person.
All right.
Hey, guys. Hello. How's everyone?
Good. I love the banner that kind of changes behind you.
Yeah, that's our Samsung frame banner. It changes every 5 minutes or so. So yeah, please look out for some more interesting messaging behind me. Okay. Anyways, guys, let's start this off. All right. So welcome everyone. Also from my side, my name is Daniel Sinnig. I am with tradingindicators.com, and I am super excited to be here today because it is not just the kickoff of this webinar of the Starters Conference, but we also have something brand new to show, something that nobody has seen before, and it's just fresh out of the box. It is the big unveiling of our SuperTrend Bullseye indicator for Metastock. We just completed it. We demoed it to the Metastock team a couple of weeks ago. They loved it, and we decided, hey, let's make this the headline of today's conference in the morning. So super exciting. And what it really is, and this is where the heading or the title comes from, it's really a version of SuperTrend, which is a fairly known indicator out there, but on steroids, a pimped up version of SuperTrend, which has features such as auto optimization or performance statistics, which can be very useful when you try to find interesting trend traits. And how this works and what this is all about, we're going to see together today. So please be comfortably seated and let's get started. And one more word before we really get into it. If you have any questions, please don't be shy. Put them into your Zoom comment window or into your webinar's Q&A box. And Nicholas, he's going to keep an eye on these questions and bring those to my attention as he sees fit. So please don't be shy. The more, the merrier. All right, so let's get started. So the first thing I'm going to show you is my trade of today. So this is a trade which I picked just a bit earlier this morning. It took me perhaps, I'd say 15 minutes to find this trade. And it is a long trade of AbbVie. Ticker symbol ABBV, a stock in the S&P 500 in the healthcare sector. And the idea here is to go long at current market levels. I know price dropped a little bit since the market opened. This slide is perhaps 1 hour old, but this trade is still very valid. So entry around market price with a target of 209.50 all the way up here at this green line, and the stop loss of 188. And this will give you an approximate reward to risk ratio of 1.88. It actually improved a little bit since the market gapped down just a little bit this morning, and it's probably above 2 right now. And in this presentation, I will show you why I picked this trade and how I picked it. And best of all, everyone in this room will be able to reproduce these steps. Because as you will see, these are actually quite simple if you use the right tools and the right platform. All right, so that's the idea for today. But before we get into it, let me briefly introduce myself, because you may wonder, who's that guy presenting his trade of the day today? So, well, my name is Daniel Sinnig, and I am one of the founders of tradingindicators.com, which is our online store where we feature all our flagship products. We've been out there for roughly 10 years, and over the years, we have built way over 700 trading indicators, fully automated strategies, trading dashboards, trading scanners, and trading tools. We have clients all over the world, and it's been quite a journey. But let me tell you one thing. Actually, my career, and Jeffrey mentioned this in the beginning, my career didn't actually start out as a trader. Back when I was at university, my objective was to become a professor in software engineering. So I went through all these levels. I did my master's, I did my PhD, my postdoc, I was teaching at various universities. But you know what? All these years, I was always fascinated by trading and how the markets work. So I started trading on the side. But of course, as you start out, you make mistakes. It's very normal. So I overtraded, I revenge traded, I took too much risk. I traded when market conditions were not right. And after donating quite a bit of money to the markets, I came to the realization, man, I need help. And more specifically, I need tools which will help me make better trading decisions. So as a software engineer, this was right up my alley because I started coding. And the first tools that we have written at tradingindicators.com were exclusively meant for our own purposes. And once we realize, hey, these actually help us, they help us make better trading decisions, we then release them in our online store, tradingindicators.com. All right, so this is how, a bit of a history of how we got to the point where we are right now. Okay, now, one more thing I need to mention, just for legal reason. If you trade, keep in mind that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is capital that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas or trades shared in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's get into it. And a quick reminder, this is our outcome of today's presentation. And the idea is how did I find this trade and why did I pick this trade and why do I think that this particular trade can be a good idea? This long trade of ABBV, a stock in the S&P 500s. Well, before we get to this point, let's back up a little bit. I'm going to give you, just for 1 minute, a bit of a history lesson right now. Let's talk about an indicator which has been out there for, I believe, at least 20 years, probably more. It's one of the classic indicators, and it exists for almost every single trading platform. And this indicator is called SuperTrend. It was developed back in the day, I forgot the year, but maybe in the 90s, by a French trader called Olivier Seban. He even wrote a book on the topic of this indicator, which loosely translated means that everybody deserves to be rich. This indicator has become one of the most influential trend trading indicators out there. And as mentioned, it is available for almost every single trading platform. And it specializes in what's called early trend detection. So when a new trend emerges, the indicator will attempt to give you a signal either to the long side or the short side. It has a trading stop to lock in profits, and it is based on what is called the stop and reverse paradigm. Now, what does that mean? Let's zoom in a little bit. So here's a bigger screenshot of how this indicator works. And I apologize for these very small signals here, but just bear with me. Okay, so how this indicator works is as follows. It will give you either a buy entry signal or a sell entry signal. And what this means is that a previous downtrend has come to an end and now is reversing into an uptrend. And when this happens, such a buy entry signal is generated. So the idea is that you go long when such a signal comes along, and you stay long up until the point where the trailing stop is hit. As you can see here, this is really a trading stop. It always tightens in profits. It locks in profits. It will never loosen them. So it tightens in things. Eventually, it is broken. And once broken, what do? Well, we reverse everything. Instead of being long, we suddenly now go short. You can see this here. The trading stop was broken. We then go short the market and we stay short all the way down until this trading stop is broken once again. And once the trading stop is broken, we go long. We go long again. And this alternates over and over again. And this is the idea of the classic SuperTrend indicator, a great indicator. And I think thousands of traders have used this indicator, the original one, successfully. But let's dig in a little bit deeper of how this indicator actually works. Because you probably can imagine, the success of this indicator lives or dies with how we define this trading stop. In other words, how much room should we give a trade so that it has enough room to not get stopped out prematurely, yet it's tight enough to not give away too much profits. So there's a sweet spot there, which we need to find. And in the original SuperTrend indicator, there are two parameters which can be used to adjust the trading stop. One is called the ATR period, and the other one is called the multiplier. And of course, by changing these parameters, we can adjust how far or how tight our trading stop should be from price. This, as I said, there's always a sweet spot. But you probably think now, if I have to adjust stuff and things don't work out of the box, that sounds kind of tedious and cumbersome. And maybe I don't have the time to, play around with these parameters to find the best ones. And you are absolutely right. This is actually a big problem because I believe finding the best parameters for a given symbol in time frame is not something that the trader should do because it's basically trial and error. You have to try out different combinations of these two parameters to find the best ones. Imagine how cumbersome that is. So that's not a good use of anybody's time, especially not of a trader's time, because a trader wants to spend his or her time on one thing and one thing only, to make a decision of whether a trade should be taken or perhaps you want to stay on the sidelines. This is where you want to focus your mental energy on, not on adjusting parameters to see which ones are possibly the best ones. So that's an issue. And the second issue is, and I reverse these here, is we also would like to know how well are these signals actually performing. There's no indicator in the world which works equally well on every symbol and time frame. That's impossible. Some indicators work better on some symbols, and other indicators will work better on other symbols. It's just how reality is in trading. But what is important with this reality is to know when signals are actually working well and when they are not working well. Because this is very useful information. It's very insightful because it allows you to make an informed trading decision. And anybody in his right mind, and I don't mean this in any degrading way, would only trade if the odds are stacked in his favor, if signals are actually working out properly. And if they are not, what would you do? Well, you stay away. And sometimes staying away from a trade is the best trading decision that you can make. All right, so these are two problems: not knowing which parameters are best and not knowing how well the signals are performing. Well, this is not a problem anymore because we at Trading Indicators, we have solved this issue actually. And we have developed an indicator which we call SuperTrend Bullseye, which addresses exactly these two problems. It will automatically find the best parameters for you, and it will also show you directly on the chart, or in case of MetaStock, directly in the expert commentary, how well the signals are actually performing. Sounds interesting? Well, let's check it out on the chart. As I mentioned before, this is brand new. We just released it for MetaStock just a couple of days ago for testing, and now it is officially out there. Okay, so let me switch over to my MetaStock platform. So let me just quickly find the right chart if I can. Just a second. Of course, MetaStock is hiding. There we go. Okay, because I had an alert open. Give me 1 second. Here we go. Okay, so this is a chart of Tesla. You can see it up here, Tesla, on the daily time frame. And what we have done here is we have already applied our SuperTrend Bullseye indicator to this chart. So let's see how this works step by step. So you can clearly see that every once in a while you get these green arrows pointing upwards or these red arrows pointing downwards. These are either buy entry signals or sell entry signals. All right, makes sense. Just like most indicators, you can see clearly when the indicator suggests to go long for the symbol or to go short. Perfect. You can also see this down here in this ribbon, which says either long or short, long or short. And it is clearly visible that these signals are always alternating. So a long signal will always be followed by a short signal, which will always be followed by a long signal, and so forth and so forth. Perfect. All right, so these are the entry signals. But of course, entering into a trade is one thing. Of course, it's important, but there are other considerations that every trader needs to be aware of when entering into a trade. When entering into a trade, what is perhaps even more important than the actual entry? It is the position sizing, because you want to make sure that when you enter into a trade and it doesn't work out, you will stay within your risk tolerance. So we need to know as traders is where do we get out of this trade at the worst case? If price goes below a certain level, when do we close it out? Where's our stop loss? Well, with SuperTrend Bullseye, you can see the stop loss by this blue line here. So for every signal that comes along, we know exactly where our stop loss is. And once we know where the stop loss is, we can then position size accordingly in a way that should we get stopped out, we will still stay within our risk tolerance. So this is what it's very important to know, where is my exit in the worst case. There's no profit target when it comes to SuperTrend Bullseye. It is a stop and reverse indicator, meaning that we stay in the trade up until the point where we get stopped out, where prices breaches our long trading stop. And when this happens, we then go short. We stay in the short trade all the way down here until price breaches our short trading stop, and so forth and so forth. All right, but you may ask now, okay, this really sounds like just regular SuperTrend. What's the new stuff? Where's the new stuff? Where's the cool stuff? Well, let me show you where it is. So for this, I'm going to open up the expert commentary of MetaStock. I'm going to go here to Expert Advisor and open up the commentary. There we go. This will now open up a little sub panel, sometimes below the chart, sometimes on the left or right hand side of your chart. And you can see here now that, okay, well, this is for Tesla on the daily time frame, and the current signal is long. So currently we are in a long trade, and we can see this here that, which date was this? On August 15. You can see it here. We got a long entry signal, and price has been also nicely trending upwards ever since. So we're still currently wrong. We can see where was our entry price back then, and where is our trading stop right now. So right now it's at 215, give or take, so somewhere around here. Perfect. So we can see all this. But we can also see, once I scroll a little bit further down, is what are the optimal, here we go, what are the optimal settings for this particular symbol and time frame? We can see here for this one, for Tesla, on the daily time frame, a multiplier setting of 3 and an ATR period setting of 20 is optimal. But this is particular to Tesla and to this time frame. What happens if I change time frame? Let me just give you a quick example. What if I go from the daily time frame to, let's say, the hourly? I can do this in MetaStock very easily. I do it. The indicator is recalculating. But if I now go down here to my settings, we can now see that the optimal settings for this chart, for the hourly time frame of Tesla, is now 7.5 for the multiplier and 20 for the period. Whenever I change time frame, or whenever I change symbols, we're going to see other symbols in a second, this will happen over and over again. That the indicator will automatically find the best parameters for you. And you probably can already see how much time this will save. Because doing this manually, I'm telling you, is extremely tedious. It can take minutes or hours sometimes. And as a trader, this is time that we do not have. But let me go back to the daily time frame. All right, so back on the daily, because there's one more thing I need to show you. So I'm going to go further down. We already know that our settings for the daily are a multiplier of 3 and the period of 20. But now I would like to know, okay, with these settings, how well or how poorly sometimes the indicator is performing. Well, let's scroll further down. So in the performance statistics part, we can see that Tesla on the daily time frame has a performance of this indicator of 55 or win rate of 55% in the long direction and 66% in the short direction in our look back period. By default, the look back period is set to, I believe, 1,000 bars. But this is the setting that the user can change. In this look back period, we had 36 trade and we had a profit factor of 2.93. And to me, typically, the profit factor is a more important metric than the win rate. Because, a win rate always depends on whether it's good or bad. It depends on how big your winners are, if you get a winner, as compared to how big your average losers are. And if SuperTrend Bullseye, this is a trend trading indicator. Let's the trend right if you catch a good one. Typically, the winners are way bigger than our losers. So sometimes even with a win rate of like 40%, you can still be quite profitable. All right, so Tesla on the daily time frame, a profit factor of 2.93, which is quite good. I mean, everything above 1 is considered profitable. The higher, the better. A profit factor of 2.93 is actually really profitable. But let's change it up. Let's see how all these things change if I go back, let's say, to the hourly time frame. So one more time here to the hourly. So the indicator is re-optimizing itself. We already know what the settings are because we saw them before. 7.5 for the multiplier and 20 for the period. And now we only have a win rate of 37% to the long side and 44% to the short side. 17 trades taken, but still a profit factor of 2.07. And this is exactly what I mentioned before. The win rate itself oftentimes is not as telling. Because once again, if your winners really outpace your losers in terms of how much you lose when you lose and how much you win when you win, then even a low win rate of 37% can be okay. You will only win every third trade, give or take. But if these trades are huge, these winners are huge, like look at this long entry signal here. It went all the way from here to here. It's a huge winner. So if you have huge winners, you can still be quite profitable. All right. So this is Tesla, but let's change it up. And guys, if you have any symbols in mind, please don't be shy. Put these into the Q&A box. All right, moving on. Let's look at Oxy, Occidental Petroleum. As you all know, oil has been struggling as of late. It is not surprising that we can see it here, that the latest signal that came in for Oxy was in fact a short entry signal, and markets have followed through quite nicely afterwards. All right, so once again, we can see we have the long entry signals, the short ones alternating normally. And of course, we also have our settings used for this particular symbol and our performance statistics, just like shown here. 2.92, another great profit factor. Okay, works nice on Oxy. Let's move on. Google. Google has been struggling. Yeah, price has been dropping as of late. And once again, it is not surprising that SuperTrend Bullseye has given us a sell signal towards the end of July. We can see markets have followed through since then. And now, this is something I want you to keep in mind. We can see price is now very near this trailing stop. And just please, just put a mental note to that scenario. Price now is really close to the trailing stop. So the stop is very nearby. And just for food for thought, we're going to get back to this topic in a second. What if you would reconsider entering short into this trade? What would be the benefit of that? Or perhaps what would be a disadvantage? Just think about this. We're going to get back to this scenario in a second. So this is where Google works nicely. Let me just quickly look at the profit factor, 2.93. Pretty good.
Daniel.
Yes.
Could we look at 2 more symbols we got requests for?
Let's do the symbols towards the end. I'm just going to go through the ones I have prepared because there's so much more to come. But yes, there will be time to do that.
Perfect.
Thanks, Nicholas. All right, so let's quickly look at Nike. Just another example here. Yeah, how SuperTrend Bullseye works on Nike. Once again, we can see our entry signals. I can see that here the best configuration is 8 and 20. And yeah, with a 60% win rate in both directions. So here, signals tend to work out quite nicely in either direction, short or long. This doesn't always have to be the case. In some cases, you have a very big bias towards the long side or perhaps towards the short side. Then as a trader, what you can do is, of course, perhaps only focus on the long signals because they have better win rates. Perhaps stay away from the short signals. All right. One thing to mention is also that this indicator doesn't only work on stocks on the daily time frame, of course not. It works for any asset class. So let's look at the futures contract. The S&P micro futures, in this case on the 30-minute time frame. Look, same thing, short, long, and so forth and so forth. It's the exact same principle. The indicator is auto-optimizing based on this, this chart. In this case, the micro S&P futures on the 30-minute time frame. And we get our profit factor here and our statistics. Or Bitcoin. Let's look at Bitcoin. Bitcoin on the 1 minute time frame. Let's go even more short. We just had a signal a couple of minutes ago, I should say. A nice long entry signal, which could have been quite nicely if you're a scalper. So Bitcoin as well, is tradable with SuperTrend bullseye. The principle is always the same. The indicator is auto-optimizing itself based on the chart and time frame at hand. It will tell you, okay, what are the settings, what are my win rates, and most importantly, what is my profit factor? So profit factor, just to give you a bit of background, I don't want to expand too much on it, is truly a metric which takes into account the size of your winners and the size of your losers, something that the win rate doesn't. And it also takes into account your position size. In fact, it doesn't matter whether you trade 1 contract or 100 contracts, the profit factor will always stay the same. And as mentioned previously, anything above 1 is considered profitable. Anything above 1.5 is considered very profitable. And the higher the better. So you can imagine a profit factor of 2.09 is indeed quite profitable. Perfect. All right. Before we get to your custom symbols, there's another very important thing I need to mention. So let me quickly go back to my charts. If I can find them. There we go. Perfect. Now, a quick summary of what we've seen so far. So we've seen SuperTrend bullseye, a pimped up version of the classic SuperTrend indicator, which comes with auto optimization and performance statistics. But there's more to it. I wouldn't have time to give you a demo because it takes too much time, but we have a bootcamp class for this. It has different reversal modes. By default, it's on close that's being chosen. Basically means that price needs to close below your trading stop for a long trade or above your trading stop for a short trade in order to reverse. Which is not always practical because perhaps if you want to set your orders in, you don't really know when the bar closes. So perhaps you want to use on touch, which means that the indicator will reverse whenever the trading stop is touched. Whenever price wicks into your stop, we're reversing right away. So that's a setting we can use. You can also tell the indicator, hey, I want to optimize so that signals work best in both trade directions, long and shorts. So the optimizer will try to find the best settings so that longs and shorts are working the best. But perhaps sometimes, or in some cases, you're not even interested in trading short at all. Maybe it's a registered account and you just don't want to trade short or cannot trade short. In this case, you can tell the optimizer, hey, optimize only for long entry signals. We don't care about shorts. I would not take a short. Don't spend time on short signals. Don't try to optimize these as well. Optimize on longs only or optimize on shorts only. So that's a setting that can also be chosen with the SuperTrend bullseye indicator. But now let's move on. Let's ask ourselves another important question when it comes to trading. How do I know which symbols currently have entry signals? How do I find a symbol which currently has a buy signal on the current bar or currently has a sell signal on the current bar? How can we do this? Well, luckily, we are with MetaStock, and Jeffrey mentioned it in the very beginning. One of his favorite things of MetaStock, and that's actually also one of my favorite things of MetaStock, is the MetaStock scanner. It is so powerful and it is so fast. It's really incredible, and I believe it's unrivaled in industry. So with MetaStock, in fact, you can, and our indicator, you can do something which is called Generation 3 scanning. Sounds complicated, but let me explain you very quickly what this is. So in Generation 1 scanning is basically a scan where you scan just for entry signals. You see which symbols currently has a buy signal or which symbols currently have sell signals. That's just what everybody does normally. It's Generation 1 scanning. But actually we can do better than this. Generation 2 scanning is to scan for signals or for symbols which currently have signals and check at the same time if our win rate and profit factor are actually profitable. As mentioned before, not all symbols work equally well with our indicator. So wouldn't it be better if we could scan for symbols and to see and to filter by which ones are most profitable? That's possible with Generation 2. But we have one more step, what we can do with scanning. Generation 3 scanning allows you to scan for signals which are profitable, and the scanner will do an on-the-fly optimization on a per symbol basis. So for IBM, the optimized parameters will be used. For Tesla, optimized parameters will be used. For Microsoft, optimized parameters will be used. And then these optimized parameters will be used to see if there are currently signals for this symbol. Sounds complicated? Let's look at an example together. So let's check it out. Back to Metastock. There we go. And I'm going to open up the power panel up here. There we go. And I'm going to drag this in, and let's set up a quick scan. So the scanning is available in this Explore box here. I'm going to go to our Exploration tab. And what we're going to scan for is, just deselect this. We're going to scan for SuperTrend Bullseye, STBE, that's the acronym that we've chosen, for buy and sell entry signals. You can see this here. And we're going to scan through, we're going to keep it relatively fast. We're going to scan through the S&P 500s only. That's enough for us. Just keep it simple. Of course, you can expand your scan universe arbitrarily, but since this is a live webinar, I don't want you guys to wait around while the scan is running for too long. So I picked the S&P 500, and let's start the scan. So start exploration. This will open up a new window, and we can follow along with the progress here. And Nicholas, while the scan is running, you can see it's running right now. Do we have any non-symbol or chart request questions right now which I could answer while this scan is running?
I think we're all caught up on the questions, Daniel. Let me just quickly review right here. We did have one from Vladimir. He wanted to know, are the optimized settings applied automatically, or do you have to put them yourself?
Yeah, great question. Yes, totally automatically. So the indicator will do it in the background. And as soon as it's applied to the chart, in fact, it will use the optimized settings. And you can see which ones these are. And yes, these are applied automatically.
Perfect. And even though we already answered in chat, we can just go through them now. Also from Paulo wanted to know, is there any way to get SuperTrend to filter like trades that are taken in flat consolidating areas? And I said the idea with the optimization is it'll find the settings that really tries to avoid those and catches the big trends. Do you have any take on that?
Yeah, that's a good take. And of course, what's really cool, so what Nicholas said, of course, is completely valid. And with the optimized settings, typically this trading stop will be chosen in a way that, even if you're in a consolidating section, we will not get stopped out. That's the idea. But what you can also do, and Nicholas, please mute your microphone real quick. Yeah, because I have an echo on my echo. Perfect. And what you can also do is combine the SuperTrend Bullseye scan with some other indicator readings, such as maybe an ADX reading or something like this, which can allow you to filter out symbols which are currently flat. ADX, for example, is an indicator which flags the trend or the strength of a trend. So the higher the ADX reading, so an ADX maybe of 25, would show you, hey, this symbol is currently trending. So by combining the ADX indicator, for example, with SuperTrend Bullseye, you can filter out some of the flat action as well.
Thank you, Daniel. And last question here we had from Kirby. He wanted to know, how does the indicator, the expert, determine how many bars of historical data it's using to determine these optimized settings?
Yeah, that's a great question. It's actually a setting of the indicator. It can be user defined. So all you go to the settings here. I'm not going to show it right now. We have a boot camp on this topic, but it's just a user setting which you can use. And by default, it is set to 1,000 bars.
Perfect, thank you. And that's all caught up on questions related to the expert and the indicators.
Awesome, and we can see we're almost done as well for scanning through this. This actually goes a bit faster if you don't do a webinar at the same time. And it also goes up with your internet speed and your laptop or PC speed, but you can see it's quite fast. So this one took 3 minutes. In fact, I ran this earlier today. It took only 1 minute. I think it's because I'm sharing my screen at the same time. In any case, the scan now finished, and we can see that for our scan through the S&P 500s, we had how many hits? Let me just see. 8 hits. Perfect. All right. So we can see that if I sort by this buy column here, that we had 3 symbols, these 3 ones here with buy entry sequence on the last bar, and 5 symbols with sell entry signals. So this is available, and this would be considered generation 1 scanning. But where does generation 2 come in? Well, generation 2 comes in by means of this column, and this column here, which is our profit factor, our long win rate, and our short win rate. Because now you can do something really, really cool. We can sort our findings, let's say by profit factor, from highest to lowest. And guess what? This allows us to focus on these symbols which currently have the highest profit factor, because we can't trade all these signals. That's probably impossible. And imagine we had scanned through maybe 10,000 different instruments. You would have gotten hundreds of results. So you can't trade all of them. But with this column here, we can now sort them and focus on the ones which have the highest profit factor. So let's do this. Let's look at Cisco Systems. Let's open it up. Look at my little chart tab here. Opening it up, and it will now load on my Metastock. And we can see here that, oh yeah, indeed, we did have an entry signal on the last completed bar, which was on Friday. So the way the scan was set up is to check for the last completed bar. So it's a long entry signal. And we can see here that our trailing stop would be all the way down here. And let's just keep this also in mind for 1 second. So entry around maybe 52, give or take. Stop loss probably around 47, 44, 46 maybe. So it's quite wide, I would say. Just keep this in mind for a second. And this is normal because, you know, in this case, you want to give our brand new signal a bit of time to actually pan out, which will take into account areas where we may have a bit of a pullback. Just normal when we try to predict a brand new trend move. So keep this in mind. Okay, this is Cisco. This is, you know, of our results, this one had the best profit factor, but perhaps let's open up one more. CrowdStrike. All right, everybody knows CrowdStrike. They have been in the news a couple of months ago because they brought down half the world with their IT security software, which was buggy. So here we can see this happen on July 18, huge gap down, but it is recovering. Oh yeah, and you know, actually we called out this this opportunity back then when we saw this this big gap down. You know, well-established companies, they tend to recover, and we can see already signs of recovery. And we finally now have a SuperTrend bullseye long entry signal here. But once again, see our trading stop is still quite far away. Entry around, I don't know, 280 or maybe 290, and all the way down here, 234 is our trading stop. It's far. Keep this in mind as well. But this is how you can scan for entry and exit signals of entry signals of SuperTrend, bullseye, and you can, you know, sort them by profit factor, which will allow you to focus on the ones which have the highest win rate and highest chance of succeeding. All right, but let me go back to my slides one more time, because now everything will come together. Let's try, just for 5 minutes, to optimize SuperTrend bullseye. And you may ask, rightfully so, what? How can you optimize an auto-optimizing indicator? That's redundant. That's a tautology. Doesn't make any sense. But maybe it does. In fact, actually, there's a number of things that you can do to further improve your odds. For example, you can adjust how the optimizer actually works, how exhaustive it performs, it tests all the combinations of parameters, or how loose it is. You can adjust the trading style to only focus on perhaps long trades or only short trades. That's possible. Or, and this is what we're going to look at right now, you can combine SuperTrend bullseye with another indicator called Trend Radar. Okay, why would you do that? Well, let's back up a little bit. So before I look at Trend Radar, in trend trading, what is one of the key recipes to success? Any trend trading is to buy the pullbacks, to wait until the market pulls back and then enter into the market. Why? Well, first of all, we'll give you a much better entry price. And secondly, it's a trade of less risk because your trading stop or your stop loss will be closer by. Thus, less risk is on the table. And Trend Radar is an indicator which allows you to find these pullbacks, among many other things. It's a very versatile indicator, but one of the things it excels in is to find symbols which are currently in a pullback state. And it does this by showing this heat map below the price chart. See these green and red areas here? These show how the symbol performs in terms of short-term trends, medium-term trends, and long-term trends. So the lowest row here is the long-term trend. So we can see here, for example, this particular symbol has been in a long-term uptrend. It's green. Green means up. But as of late, the short-term trend and the medium-term trend have turned red. These are areas of pullbacks. You can see here, price actually pulled back. We're still in an uptrend. We had a healthy pullback. We call this a healthy pullback. And now perhaps might be a good idea to re-enter into this long trade. So let's see, how can we now combine SuperTrend Bullseye with this Trend Radar indicator? Well, what about the following? We use SuperTrend to determine the trend direction, and then we use Trend Radar to find healthy pullbacks. And best of all, this is not going to be manual. We are going to use the Metastock scanner to do exactly this. We're going to use for trending symbols with a high profit factor of SuperTrend Bullseye, and then I'm going to use Trend Radar to find which of these actually are currently in a healthy pullback state. All right, so back to Metastock, and it's the last scan of today. So I'm going to go back to my power panel here. And the first thing, I'm going to quickly change the template just so that we can see both indicators on the chart right off the bat. So I'm going to use the proper template. Now I go to my explorations here. All right, I'm going to change the explorations from finding symbols with entry sequence on the current bar to finding symbols which are currently either long or short, but the trend or the trade could have been initiated a couple of bars ago. So this is one thing I'm going to do. And I'm going to use another scan which looks for symbols which currently have a pullback according to our Trend Radar indicator. You can see it here. Perfect. So two different explorations are selected. And now this is where the rubber hits the road. I'm going to combine these two explorations. I believe something, once again, which is completely unique to Metastock. I'm going to say, hey, let's scan first for symbols which currently have pullbacks, and then use the scan results of that scan and scan for SuperTrend Bullseye trades. So the results are linked together. So let's do this. I'm going to close down my exploration window here so I can restart a new exploration. Okay, this is done. And this should be possible now. I'm going to start exploration. And you can see by doing it this way, it actually will further speed up how fast this scan is running, because the Trend Radar scan is much faster. So by first scanning for symbols with pullbacks, we eliminating most of our symbols right off the bat, and then we just use SuperTrend Bullseye on the results of that first scan. So you can see here this is already running much faster. So this should only take a couple of seconds to complete. And Jeffrey, don't worry, I'm aware of my time. We are nearing the end. Okay, perfect. So this is running. And this takes only a couple of seconds, but because I am sharing my screen, it is delayed a little bit, but it should not be too much longer. And guys, once again, if you have symbol requests, there will be some time towards the end to look at some custom charts. All right, so this is running. Perfect, we're almost there. You can see the progress here. So 428 out of 500 symbols have been scanned through in this phase one. Actually, let me drag this a little bit here. You can see this is a two-phase scan. Right now, phase one is completed, check. And now scan number two, the SuperTrend Bullseye scan, STBE, is only scanning through the results of scan one. It's really cool. All right, so this is almost done. It's completed. And now we can just focus on the result of the second scan, because we know whatever we're going to see here is currently in a pullback state and has either a long or short trade with SuperTrend bullseye. Perfect. All right, so we've done this. And now what I'm going to do, I'm going to sort once again by my profit factor. Okay, and we can now see here, these are my results. Perfect. And we're only going to focus on the long trades. And in fact, actually, I'm going to do a bit of a shortcut here. I'm going to sort by my win rate, my long win rate, because, remember, since we are only considering long trades for this idea, let's focus on the long win rate because we want our long trades to be as successful as possible, not necessarily our short trades. So let's start with the first one here. CBOE markets, I'm going to open it up. Perfect. Okay, so it's opening it up, and we can see here both the SuperTrend indicator and our trend radar indicator applied to the chart very nicely. We can see, okay, this trend started here. We've pulled back a little bit towards the trading stop, but to me, this is not enough. It's still too far away. We probably can find even a better opportunity. This one would be a nice one too. Nice pullback here, but I think that's a bit more coming. So let's skip this one. Let's go to the next one. The next hit was Old Dominion. Let's open up this one. Open the price chart. All right. Old Dominion. Let's see what we have here. Okay, once this loads, we can see, okay, not bad. We had, once again, a pullback. You can see the price has been pulling back, but to me, this is too sideways in general. We had like some bigger moves here, and the trend duration of every uptrend here is not too long. So this may, I believe, not last for too long, even though it could also be a nice opportunity. In fact, it doesn't look too bad. So this could have been also my trade of the day. But let's move on one more time. Baxter, this one here, opening this one up. All right. This is loading. And once we see the chart is, okay, here we had a bit of a pullback here. Okay, not bad. We can see SuperTrend bullseye is reddish here. But to me, this is a very bearish stock. I'd be very off going in long here. It's just overall, it's been bearish for too long. I'll be careful with entering short here. All right, so we can do the same exercise for most of these ones here for the long trades. But finally, we're going to get to AbbVie. All right, so AbbVie, if you remember, this was also our trade of the week. So I'm opening it up here. And once this is loaded, we can see that AbbVie, in fact, is in a nice uptrend overall, like long-term uptrend for years since 2020. We're making higher lows and higher highs. Very nice uptrend. But now you can see here that we did have a bit of a pullback. We went all the way up to 200s here, and now we're pulled back to around 293. Exactly. So this is where we are, and we already tightened up our stop loss. It's only at 188. So that's quite tight. Market is at 193, stop loss at 188. And this indicator has been very successful in picking, these long trades. And just look at this example here. Price went up, it then pulled all the way back to our trading stop, but it was not, we didn't close below it. Wouldn't this be a great opportunity to re-enter long? Because this is a pullback in an uptrend. Our stop loss is super nearby, like really $1 or $2 nearby. This allows you to scale into this trade at a great price with a very close by stop loss, with very little risk on the table. And this is exactly what we scanned for here today. And this is why I have picked AbbVie as my trade of the day today for exactly these two reasons. Because we had this pullback after this trend moved towards our trading stop. So now our stop is very nearby. If this was just a healthy pullback, and trend radar suggests here, see these 3 levels of red here, this was just a healthy pullback in an otherwise long-term uptrending market for the symbol. So if this trend continues, this could be a great re-entry opportunity. Entry around 193, target I would say around 209, would make to take out our all-time high here around 200, and our stop loss just where SuperTrend bullseye stop loss is at 188, which would give us approximately a reward to risk ratio of 1.88. And this is exactly how I found this trade, by combining SuperTrend Bullseye with our trend radar indicator. All right, now to wrap up, and we're going to get to some charts in a second, who are these indicators for? SuperTrend Bullseye and trend radar. Well, really for any trader, whether you are a day trader, a scalper, a swing trader, or investor, it doesn't matter. These indicators will work on all time frames and chart types. It also doesn't matter whether you trade futures or FX or stocks or cryptos. These indicators will also work on all asset classes and symbols. And now, as mentioned before, we finally have released our SuperTrend Bullseye indicator for Meta stock. This is brand new. So if you're Meta stock, I think it's super exciting. If you are using other platforms, just be aware that we also offer this combination of indicators for MetaTrader 4 and 5, NinjaTrader, TradingView, Think or Swim, and Motive Wave. Just one more word. If you are a little bit like here and believe that tools can make your life easier and good trading tools can make your trading life easier, then these indicators, especially in combination with MetaStock, are definitely for you, because they will do all the heavy lifting for you, especially when you take advantage of the MetaStock scanner. Now, to celebrate the arrival of SuperTrend Bullseye for MetaStock, we have put together an incredible bundle offer for you, which first of all contains, of course, our SuperTrend Bullseye indicator with its auto optimization feature, with the performance stats, which will tell you how well the signals are working. We have put this bundle together for $797 normally, which is for life, but it doesn't stop there. We're gonna add in a couple of bonus offers as well. Bonus number one is exclusive access to our weekly members session. Normally at $997 a year, we're gonna give you lifetime access completely for free if you take advantage of this bundle. And bonus number two is our trend radar indicator, which complements SuperTrend Bullseye very nicely. And also an ebook on how to trade trends with trend radar. And everything here is for life. But there's one more thing. To celebrate the arrival of SuperTrend Bullseye for MetaStock, we decided for this event, for this MetaStock conference, to slash down the price for the lifetime version to only $597. This is a limited time offer. And if you want to take advantage of this, simply go to tradingindicators.com/bulls. And Nicholas, please also paste this link into the URL, into the chat box. Click on it. It will redirect you to a MetaStock page where you can take advantage of exactly this offer. All right. Now, Nicholas, do we have any charts to look at real quick?
Yeah, Daniel, the first ones we got were, one second, Microsoft on the daily chart. So MSFT on the daily chart.
Perfect. Let's have a quick look. And Jeffrey, I'm nearing my end. Don't get nervous.
I'm good here.
Perfect. Okay, let's try to find Microsoft. I believe that's MSFT.O.
That's right.
Yeah, let's do this. Let's open it up. This is the daily chart. Let's have a quick look, see how the indicator performs on Microsoft. There we go. That looks pretty good. Yeah, you can see once again our sell and long entry signals. We just triggered actually recently here a nice sell signal a couple of days ago. This was last week with a nice follow through already. Let me look at the settings, 5 for the multiplier, and a great win rate of 70% for the long direction. Actually, this is a very interesting one. We had a bit of a pullback today, so maybe another opportunity to re-enter into a long trade of Microsoft, 1.58 profit factor for both longs and shorts. Cool. Anything else?
Yeah, we also had NVIDIA, and I think that was the daily chart as well.
NVIDIA Berichtets.O as well. All right, let's open this one up real quick. Everybody talks about NVIDIA. Let's see what happened here. The indicator is loading. Oh, cool. Yeah, of course, we caught all the big rights here with SuperTrend Bullseye of NVIDIA. And once again, NVIDIA is a hugely bullish stock, and we probably can also see this here in our performance statistics. Yeah, win rate, long win rate of 80%, short win rate only 25%. We did have a short signal about a month ago or so, but with these kind of win rates so biased to the long side, I'll be very careful to take any short trade. These statistics are showing it to you here that short trades for NVIDIA have not worked out that great in the past. So if you get a new buy signal here, that could be a great and stellar opportunity potentially to go long NVIDIA.
Cool, Daniel. And do we have time for one more?
Sure, yeah, let's do it.
Okay, so can we get micro NASDAQ futures right now with our connection?
If I can find that symbol. Jeffrey, you may have to help me with that symbol, what it is on.
I think it's MNQ uppercase, lowercase c1.
MNQC1.
I could be wrong.
Yeah, it might be wrong,
If
but
not, yeah, could we try BITU? That's a stock that might be a little easier.
yeah. Okay, yeah, maybe I'm just gonna do Metastock has an interesting naming convention for stocks, and I believe this is because you use the Reuters connection. Is that correct?
That's right, yeah.
Yeah.
It'll be BITU.
Oh, BIT. Oh.
And that's on the no specified time frame, so I guess the daily.
Okay. It's just
Something's going on with you. That shouldn't be grayed out.
It's just a bit slow, right? I think I have an alert somewhere open. I think we're gonna skip this symbol. And this is something if you come on board, we can definitely look into at our member session, which will take place tomorrow. Our next member sessions, and in fact, they are every Tuesday at 12 p.m. Eastern. These are all recorded, and if you come on board, you will get access to all these sessions and of course all the recordings, including our Discord channel, and as mentioned, our trend radar indicator, which complements SuperTrend Bullseye in a very unique and interesting way, because it allows you to find symbols which are currently trending with a great profit factor, but which currently have an interesting pullback, or a healthy pullback, which could be a great re-entry opportunity into the trend move. And once again, special offer, only $5.97, normally $7.97 for SuperTrend Bullseye alone. But as to celebrate the arrival at Metastock, we decided to make this great offer at $5.97, which also includes our trend radar indicator. Great. So, Jeffrey, with this, I'm at the end now. If there was a question, and I apologize, I went a bit over time. If there was a question that was left out, you can always reach me through our homepage, tradingindicators.com. In the main menu, you see a contact form. Click on it. It will open up, a form to enter your question, submit it. It will go straight to my inbox, and I'll make sure to, get back to every single question as soon as possible.
Awesome. And I do know a lot of people are looking for symbols. If you guys want to get symbols, you can actually come over to me at metastock.com/saleschat. We've got a team that are more than happy to pull up symbols or answer questions that you've got and that kind of stuff. So unfortunately, we just sometimes ran out of time. But Daniel, great job. I appreciate you coming in and spending some time.
Thanks, Jeffrey. Thanks, guys. Enjoy the rest of your conference. Have a great time. Bye-bye.
Right. Okay. Ooh, I just got a huge image of me. All right. Cool. So if you want to do that, normally it's $7.97. Here at the event, it's $5.97. It includes Trend Radar, the weekly lunch, and learn sessions, 30-day money-back guarantee. If you don't have Metastock, Metastock's been rated the #1 platform for 31 years in a row. We'll give you a free trial. You can try it out. You can do all that by scanning this little QR code right here. You can go to metastock.com/conf promo. You can call us. Any questions? I know there's a lot of questions we just didn't get to. 800-882-3040. I know Nicholas got to most of them though, so that's cool. And then metastock.com/saleschat. Thanks a bunch, guys, for coming in. I appreciate you. Daniel, such a great job in terms of the stuff you've designed for Metastock. So with that being said, let's kind of move on a little bit. I want to say thank you real quick to the AAII. AAII is a nonprofit. They've been doing business for a number of years as a nonprofit, and they do a lot of research reports. They have an active investor division. They do the AAII investor sentiment surveys. A lot of really cool stuff that they do. If you want to find out more about them, go to AAII.com. And actually, our next presenter actually is well, let's see, what is his official title right here? I mean, there's so many of them. Our next guest is Ray Rondeau. Ray does a really, really good job of actually kind of doing system design, system development, and that's what he's going to talk to us quite a bit today. As you can see, he's done a number of things with AAII. He's their investment strategist, their senior market technician, and their video education and suite developer. So let's go ahead and get him started. Ray, let's go ahead and I'm going to go ahead and kind of have you unmute your mic right now, and we'll walk through getting your screen set up. So we'll go ahead and do that. Send unmute request. Okay. All right, Ray. Let's get you started.
Check.
All right, there you are. Woo! Cool. I can hear you, Ray. Can you hear me okay?
Oh, I can hear you fine.
All right. So now I'm going to make you the presenter. It's going to pop up on your screen and say, hey, do you want to share your screen? And that's all you have to do is say yes.
Let's see which one, though. That's the issue, right?
Correct, yeah.
I'm going to share the wrong one. I'm going to try this one.
I'll let you know if it's the right one. Yeah, first try. All right, cool. I'm gonna go ahead and let you go. I know we're starting a little bit late. I think I'm next, so I would take the time you need, and I'll let you take the floor from here.
Okay, I'll stop my timer now.
Okay.
Oh, God. All right, guys. Well, welcome to today's presentation, Evolving Your Approaches to Today's Investment Markets. We're going to talk about older indicators, some of the issues with them, and how we can make those indicators really more efficient. And I'm going to give you a bunch of information on how to develop strategies and some of the strategies that I have or that we have. I want to thank Kelly, of course, and Jeff for having me here today and congratulating them on the new release of Metastock 19, which is pretty cool, right? If I sound a little groggy, I just got back from a 10-day 4-city lecture tour on the West Coast. I'm on the East Coast. I mean, I literally just got back from it. And I'm also in 3 weeks at the Orlando Money Show, and I have a money master class. And I'm going to be talking about this very same stuff, but a 2-hour version of it. So if you're there, you can check me out. I also have a keynote with live market analysis and a breakout session. The reason that we're doing such a big push, or that I'm doing such a big push right now, is we have a new product. It's called AI's Essential Investing course, and it's essentially it's made up of classes. The reason I'm telling you about this is because anybody in attendance can get a free class, and you can also get classes on this very topic that I'm going to be covering today. So I'm going to spend like 2 slides on this, and then I'm going to get into the analysis. A little bit about the course. You can see it in this video. The course has 17 classes and over 12 hours of material. I believe we're going to partner with Metastock on this also. The classes and the courses are not simple recordings of a single instructor standing in front of a camera. They're not repackaging of a webinar or some live events like so many products being offered. The classes are professionally produced. They're full-featured, interactive, multi-camera, studio-grade recordings that focus on essential investing principles and strategies and trading strategies. They're taught by people like Christine Benz and Paul Merriman, Fidelity Mutual Fund legend Bruce Johnstone, and Ken Fisher. The course is housed in a professional learning management system, the gold standard for online learning. The course contains dozens of instructions and navigational documents and videos. If you have questions, it has an exam, and if you pass the exam, you become certified. You get a certificate of completion and an extensive list of AI certification benefits, including membership and premium products. Each class has a number of different components to it, including a bio page where you can contact the instructor, excuse me, a survey, a discussion forum. They're really well done. They're also scorum formatted. You can jump to table of contents. They're keyword searchable. They have ongoing quizzes, so you learn as you go, interactive hyperlinks to external content like Metastock, and they're also ADA closed caption compliant. So there's a lot there. In addition to the presentation videos, we give you learning materials, including preliminary documents, all the slides. And after completing the required minimum viewing percentage, you just can't pass the video. You have to actually watch it. We give you a wealth of post-presentation resources where you can learn more on the topic. There's a words of wisdom benefit, complimentary premium benefits like books and services, bonus videos. Again, you get credit accruals and a certificate of completion. And you also get bonuses at the class level, okay? And this doesn't even include one of the biggest benefits of the course, that we do give some AI tools with it. And we give you a full year to complete the course, and include the 60-day money-back guarantee. And this is not hyperbole. It took us 5 years working on this, a team, to get this course out. So it's really well done. And again, we're going to give you a free class if you like. We're a nonprofit organization, so we're here to help investors and traders. That's our primary purpose. To get the free class, you can just go to this website shown, aai.com/AAII chapter event offer, and you can just click right there and use the code, and you can get a free class. Why not take it? And if you're also interested in taking the entire course, we do have a special price on that, and I can assure you that price will never be lower than the price you see on that website. All right, that's it for that. That's not my thing. As you know, I'm a trader, an investor, and a tool developer. And that's why we're here. So these are what we're going to look at today: gaining an edge, volume and conviction, conviction strategies, and improving system performance, which is improving all performances. Now, I've been doing this full time for decades as a researcher, a tool developer, and more importantly, as a trader. So I always ate or eat my own cooking, and if I don't do well, I don't eat, right? And as detailed, this is a Kiplinger article they did on me about some of my core beliefs. And I just want to touch on these. Belief one, to be successful, you need technology. Others have it. You also need it. Metastock, why we're all here, right? It's a great platform. Belief two, you need proven approaches. Proven. What we're going to look at today are certified results, and we give you these trade by trade. That's important. Belief three, you have to evolve with the markets. I'm going to show you numerous examples of this. In belief number four, you have to have an edge, and this is only logical. And there they are right there, the four kind of core elements that I believe. And now my edge is backtesting and letting computers do the bulk of my day trading for me. And that's just how I do it. A large portion of my findings and research, and what you're going to see here today, is evidence-backed, and it's a foundation of AAII. And you can see on the screen here the amount of detail that goes into testing and creating these indicators and tools, right? Indicators, tools, and strategies are programmed often with thousands of lines of code, and then it's back-tested extensively over decade-long time periods on hundreds of thousands of issues. And again, establishing factors and then synergizing them factors to get the most efficient systems. We look for apex, V, linear, or Gaussian distribution relationships. We're not looking for outliers or artifacts. I work for a nonprofit, a very conservative organization. I have to prove everything, and I can't skew data to make something look good. So here's an example of a factor right here. In this table, you can see backtasting optimizations of bar length for an indicator called R reversion. And R reversion is a new indicator that we have coming out in November with Metastock. But you can see right here on the far right, as we're increasing the bar length from 20 to, it looks like, 80, we can see that our profit right here is increases to a certain point and then starts to decrease. So this is just a simple example showing you how, I'm going to see if I can grab my pointer here. Let's see if I can do that right here. Right here. You can see how it increases and then decreases. And this is a simple, very simple example. How we would create a factor. We establish the factor and then we look to create it. And you would do this. This is another example right here with our reversion, and just the difference between returns between an exponential and a simple moving average. So we have our reversion, and just changing one letter of thousands of lines of code can have a dramatic effect on the outcome. And John Bollinger was right? Simple moving averages works better because our reversion is somewhat similar to Bollinger Bands, but it takes it clearly to another level. And if you think that this doesn't matter or make a huge difference in return, I'm going to give you a little test here. For perspective, how much do you think improving your returns, we'll say by $10, we'll say 5 cents on a 200 share trade, on a buy execution only, how much would that improve your financial situation 35 years later? In the future, we'll say at an 11% annual return, which is the average return of US equities over 90 years, and we should all be able to do 11% a year, especially as traders. Well, the answer is $375 for every $10 gain on an entry or an exit with these parameters due to compounding. Think about that. That's $750 on each trade, round trip, 35 years out at an 11% return. We're talking about hundreds of thousands of dollars difference by fine-tuning and by learning. And it's important, and it's what separates a professional investor from everybody else. So you need an edge. We don't guess. We use technology and we evolve with the markets. Really, that's my approach. And it's kind of the primary theme of this presentation. And here we can see an example where we're comparing Bollinger Band stochastics and RSI to our reversion. And we can see where if it's green right in here, how much better evolving indicators from all the first generation indicators can make a difference. And this is really the key area right here. I mean, we're talking about 20, 36, and 22% differences in improving efficiencies. So this is an important study, and it can make a real difference, especially when we put the element of timing and the element of interest in. So anyway, so that's our reversion, and we're going to talk about conviction today. This will be the last time. I mean, the point we're trying to make here is our 85% hit ratios with a 3.5 profit factor, and our profit factor is a different definition than the previous speakers. Are these realistic and attainable over various market conditions? And can I produce evidence to support the viability of this goal? Volume, I think we all know what volume is, right? Simply the number of units of shares or contracts transacted in a given time period. And here we can see examples of some daily volume bars, and the amount of volume is represented by the height of the bar. And volume can be plotted as a single color or two colors, red if price finishes down from the opening, green if price finishes up. An important point here is that volume and conviction, as we will see, levels are only relevant when compared to the issue's historic levels. For the most part, volume levels are not absolute unless you're using them for liquidity analysis. So what's high for Tesla may not be high for GE. So we have to keep that in mind. That's an important point. So now that we have it displayed in the bottom, how do we use volume? Well, it's believed that it's logical that price movements on days with relatively high volume are more important and relevant than price moves on days with lower relative volume. Just think of it like with a significant other, a teacher, or your boss. The higher their voice gets, the higher the volume, the more serious the meaning, the event, and the message that is trying to be conveyed. And we can see relatively high volume for a variety of reasons, like when a new unanticipated revelation about a security causes a price shock, right? The big boys are coming in, they may know something, and we can see their footprint. Another reason is technical events. This is a chart of gold right here, and you can see on this major breach of support, we had gold move 11.3% in a 2-day period. And you can see the intensity right here. Technicals have relevancy, and that relevancy continues to increase as we go on because computers are becoming such even a bigger part of the trading and investing landscape. Now, expanding the theory to volume and trends, what we were taught was that volume extending with price moves in the same direction of the trend, right here, is supportive of the continuation of that trend, green arrows, and similarly lower relative volume levels and diminishing normal natural price retracements back towards the trend are also considered to be supportive, because we know prices are going to pull back, but we want to see it on reduced volume or intensity. And this theory is logical, it's straightforward, it's been around for a long time. But unfortunately, our markets have changed dramatically since the tools that plot and analyze volume were first developed. And on this slide, you can see several of the reasons. So what we're going to look at now is not necessarily a paradigm shift on the analysis techniques, but an adjustment to the way the intensity is measured and displayed. And this brings up the term conviction. And to be clear, this is just kind of a term we're using. In fact, in its most basic form, conviction is almost identical to dollar volume, with both values representing the approximate total dollars exchanged over a given time period. So how does conviction differ from dollar volume? We're not going to spend a lot of time in the math examples here. You can review this and go through each slide at a later time. Conviction uses the average of each bar's high, low, close, and open, as opposed to just the closing price as per the dollar volume definition. And on this slide, you can see the differences in calculations. And we're just trying to get a more accurate representation of what's really going on each day. Now, this is a key slide, and there's a few of these. Here we have single colored volume bars plotted in the middle plane, and conviction dollars with the RCM indicator plotted in the lower plane. And I should point out that RCM stands for relative conviction momentum, and it's a tool in Metastock that we're gonna look at a number of tools today. But look at point A here on this downward movement. Here, the amount of selling pressure seems to be increasing with the volume bars on this downtrend. And because of this, we would conclude, according to traditional theory, that the downward intensity is increasing and likely to continue. But when looking at the actual dollar value, the true conviction, it's dollars, not volume at point B, we can see that the intensity is actually decreasing from a total of around $100 million per day to $80 million per day from the start of the downtrend. Yes, the volume may be increasing, but that's only because the stock prices during that period are less than half of what they were when the downtrend started. It creates an intensity illusion that's not understood by a lot of traders and investors. Here's another example with Tesla, where the price dropped from $300 to $100 between the yellow vertical lines right here. Volume at point A is again displaying the increase in intensity illusion. Oh, the downtrend is going to continue. Look at the intensity. The selling is increasing. But no, when we look at the actual dollars, not just volume, at point B, we can see that the selling intensity as measured by dollars is not increasing. And intense, it supports the turn in upward prices. This is logical and reasonable. And this obviously works both ways when prices rise dramatically. Here's a long-term example of this with PBF, where prices went from $5 to $50. RCM at line B is supporting the continuation of the 18-month upward trend through this entire move. But if you looked at volume, it's skewing it, again, giving us that intensity skew, and it's insinuating that, oh, the volume is decreasing. The volume's only decreasing because the price of it is so much higher. This is an important relationship, and we're going to use this to hopefully improve our tools that we're going to use to analyze volume or intensity, and then I'm going to use that to develop systems. Unfortunately, this phenomenon has hurt many investors who have attempted to use volume in this manner, not because investors or traders don't know the rules, again, but because of that skewing. So we're going to dive into a little deeper into this with RCM, and RCM obviously addresses this. So what should you be looking for with intensity readings? Here we have a chart of AT&T, and the primary signals with RCM are these dots. And our indicator places the signals in the commentary right on the charts to help you, but you can do this yourself. Green dots show areas of potential bullish turns. The slowing of diminishing prices on less conviction, the true selling pressure, seems to be losing steam, and we can see this in the yellow arrow. The red dots will show you areas of potential bearish turns, identifying the slowing of increasing prices on less conviction. And it does a nice job here. We're looking for multiple RCM signals along with a flattening of price. And again, these are indicators, but we're going to use the indicators to build strategies and hit our 85% hit rate. That's really our goal. So intensity readings in RCMs can also be used as a secondary signal for reinforcing the primary direction of the trend. And you can see right here, as the price is going up, we're getting a lot of these little green plus signs. This is reinforcing, but here we have upward moves, and you can see there's none of those right here. So this is looking at something different, which I won't go into, but this is another way we can use it, not only with the primary signals, but the secondary signals. Now, RCM not only displays if the security finishes up or down, but it also adjusts the intensity of the color to reflect the magnitude of the price move. It's not just red and green. Brighter green colors highlight larger relative upward price moves, and brighter red colors highlight larger relative downward price moves. The height of the bar reflects the intensity of the color. The height of the bar reflects the intensity, and the color of the bar represents the magnitude of the price move. This makes it much easier to identify important price moves like blow-offs, high volume, large upward price moves, and selling climaxes, high volume, large down price moves. And here you can see a classic blow-off of micro strategies right here. Rapid acceleration of prices on high intensity during an established trend. This is something that we see very often. Notice how RCM picks it up very well, and volume just doesn't see it. A couple more things on this. Now, even if you only use primary intensity signals, it's important to remember that RCM or any intensity momentum readings are best as short to intermediate term trend retracement signal generators. Here's another example with the Qs in showing RCM identifying short-term turns. And it does a nice job right here. You can see multiple. But again, it's only bringing us back to the same downward trend. They're tradable. Now, it's critical to note that RCM and all intensity-based indicators only display areas of a potential change in trend. It's not an absolute. I know you know this, but I want to say it. And this is true with all conviction indicators. More evidence is needed. But as you're going to see, when we start to combine RCM with other intensity readings, they start to synergize and give us very accurate signals. Here we can see the same chart and the same theme. And the point here is if you're going with the trend, then you only need a few signals. But if you're going to look for a true change in trend, you need multiple signals. Okay. Our second study for intensity readings and the tool that we're going to look at, and another one that we have with Metastock, is called OBC, and it's referred to as optimized balance conviction. Now, RCM looks at increasing or decreasing volume in relation to trend, but for trend continuation or trend reversal appraisals, there's another way to do this, and it's by evaluating up volume versus down volume, or in our case, up conviction versus down conviction. And again, we call this optimized balance conviction, or OBC. Now, OBC analyzes up versus down intensity like Granville's OBV, or on balance volume, but OBV was created literally 60 years ago in a completely different market environment and era when we were using pencils and papers for calculations. As you would expect, OBC uses modified dollar volume or conviction, and that has the same advantages to prevent that skewing, but OBC does something else that's very important. It proportions the amount of the intensity or the magnitude of the price change into its readings. And this is the most complex part of this entire little lecture that we're giving here. And here is an example of the calculation differences. See, OBC proportions the intensity of the side of the move, and OBV doesn't at the bottom. Now think about this. With OBV, the stock could literally drop 0.1% or 50%, and OBV will subtract the same amount of volume in both circumstances. From another perspective, if stock finishes up a penny, right, OBV will add in all that as positive volume. If that stock finishes down just 2 cents from there, then OBV would subtract all of that. It's all or nothing. That's not logical. And we can kind of prove this, or at least produce evidence that this is not the best approach. Now, that table showed an extremely simplified example just to illustrate the basic concepts of the calculation. But in truth, the percentage factors and thresholds for determining the percentage amount of conviction in OBC are very complex. And we don't guess at them. We use computers to develop and time these thresholds, okay? But in a sentence, just to cover ourselves, OBC proportions a percentage of the dollar volume up to a certain ATR threshold, and then takes a linear one-to-one measurement up to another ATR threshold, and then buffers extremely high readings over that threshold to prevent outlier skews. I know, it's complex, but again, our markets are complex, and the reading of the indicator isn't. So the takeaway here is with this approach, accumulated conviction is more representative of the intensity of the moves. And our moves on high volume and large price moves, they're given more weight than moves on high volume and smaller price changes. We're factoring in another factor, and it does it on both up and down move. But there's another difference that I also want to mention here. Here's another math example, and again, we won't cover it, but this one compares Chaikin's accumulation distribution. The catch here with Chaikin's accumulation distribution, it doesn't include overnight price moves. I don't know about you, but those factor into my overall returns. I'm not kidding here. A stock could lose 30%, but if the close finish higher than the open by even a penny, Chaikin's accumulation distribution would say that's a positive day, that's positive volume. It only calculates from the open to the close. With OBC, it includes the overnight price action, as it should, because we have a lot of gapping in today's markets. Enough math. How do we use OBC? Well, like OBV, we plot it over price, and its interpretations are the same. In this chart, OBC is in white and OBV is in magenta. The primary signal is a divergence from the price action. Now, you won't find many of them, but when you do, they're often very meaningful. And for those who are unfamiliar with the concept of a divergence, this occurs when price and an indicator are just heading in different directions. In OBC, bearish divergence occurs when prices are heading upward or sideways, and an OBC starts heading downward. And here's a good example of an OBC bearish divergence on KLAC. Right? The intensity of the moves on the up days is less than those on the down days, which the naked eye just can't detect. And you can see it here, price heading up, but OBC is clearly saying, yeah, price is heading up. But when we look deeper into the analysis, this is really not bullish price activity. In OBC, bullish divergence occurs when prices are heading down or sideways and OBC starts moving downward. It's just the opposite. And here's an excellent OBC bullish divergence on Tesla. Now, unfortunately, most are not this obvious, but you can see it. Where prices are heading down, we get this beautiful bullish bull. We get the gap. We get the gap right here. Here's our breakaway signal. But we can see OBC was starting to read the inherent changes between up and down. It's giving us something else to look at. And if we zoom in on this example, we can see the differences between OBC in white and OBV in magenta. And in the blue square, we had a number of down days. I showed these days as dots on close. You can see, yes, there was a number of down days, but the down days were very, very small. Here, OBV kept subtracting the full value on the volume, propelling the line further downward, but the moves really weren't meaningful. But OBC only took a very small portion of the conviction amount, and hence the line started heading upward, plotting the correct forecast divergence, at least in this case. Here we have a chart of the ETF SPY, the S&P 500 in 2022. At point A, you can see a significant divergence occurring. Prices are still heading up, but OBC is clearly heading down, creating a significant bearish divergence. And it correctly forecasted a 6-month decline in prices. Looking at the bottom right at point B, we can see OBC printing a bullish divergence. from the declining price trend, again correctly forecasting a 17% intermediate term rise in prices. So it seems when we look at it visually that it's very effective, and then we're going to look to prove that with the strategies. Like with RCM, if you're having trouble spotting these divergences at first, we have an expert advisor that can assist you with the analysis. Here it is right here. And here we can see a chart of Kellogg. Again, another beautiful divergence. Prices are going down, but OBC is going up, signifying continuation of a strong trend. And again, there you can see we give you a ton of statistical data, and we also give you written commentary to help you interpret it. So it'll actually tell you if you're in a bullish or bearish divergence. It just makes it a little bit easier for those new to it. OBC also provides a divergence strength rating when a divergence is occurring, and it's pretty simple, highlighting the intensity that larger, stronger divergences are more meaningful. So positive values are more representative of bullish turn in prices from a current downtrend, and low and negative values are slightly more representative of possible bearish turn. We try to do as much of the analysis as we can for you. If you're going to use up-down intensity indicators like OBC, there are a few tendencies that you should be aware of. And this one, I think you probably already know, but the most important thing is that bullish divergences are harder to find, but they also seem more reliable. And this is just a ramification of fear and greed. When markets sell off, down days tend to be higher in volume or intensity. So we don't see as many. There's some other general elements of OBC that you should understand. To save time, I'm going to skip these. But again, if you'd like to learn more about OBC in RCM, I can give you free classes on those. And that's in addition to the free class that you can get from Ken Fisher or other big name speakers. Okay, kinetic convictions are third and final tool before we look at the strategies. I'm going to go through this one a little bit more quickly than I normally would. Define the problem. We know this. High frequency trading distorts intensity readings like volume conviction. And I'm not sure anybody knows how much HFT activity there is, but we know there's a lot. Okay, and it's hard to quantify, but we need to try to adjust and filter out the HFT because it can distort the true intensity readings. Here's another mass example. Just look at the bottom right here. What we can see is because of HFT adding volume or intensity into every day, it distorts the true intensity readings. So here we have the same exact true change in volume, and with HFT we only see a 16.7% increase, where if without HFT we would be seeing a 25%. And that's what it's doing here. We're trying to reduce the size of the denominator by reducing the influence of HFT. Now, dark pool activity is another thing that we have to deal with here. And again, because of the nature and complexity and confusion surrounding dark pools, which is really a full presentation in itself, we'll just define what it is. Dark pools are private exchanges for institutional investors that allow them to trade large blocks of a security without adversely impacting or shocking the market price. Right? They exchange shares where the public can't see them, and there's pros and cons to this, but they do exist. For our purpose, the key thing to keep in mind is that with dark pools is that they don't disclose their intentions. So our order books don't show them over here, but at some point it will be shown over here and it will be reflected into the charts. And we know this activity is significant, and we know we want to incorporate it. So that's kind of the theory and the reasoning for the tools, or at least part of the reasoning. So what is kinetic conviction? It's an indicator that highlights important activity by increasing relative sensitivity through the means of measuring price, volatility, volume, and conviction dollars. And it does this by calculating and displaying the difference between the current bar's conviction and its exponentially weighted average conviction differential. Casey displays the conviction differential, not the level, the difference from its average, and it's plotted as a histogram. And it's easy to view and interpret than kind of explain mathematically. And here we have standard volume bars in the lower pane and kinetic conviction in the middle plane. With standard volume bars, it's not always easy to see if the day's intensity is noteworthy or even if the recent volume levels are above or below average. And this is what kinetic conviction does. And remember, kinetic conviction is not a zero band. This is actually exponentially weighted moving average. So it's giving us more near-term relative changes in conviction and if they're meaningful or not. Okay, if KC values are above the zero line, which again is an exponential moving average, then the bar's conviction differential is below its conviction average. If it's above, it's above, and if it's below, it's below. KC price moves with intensity values above 150 or the upper green standard deviation band is considered more relevant and meaningful. The move is greater importance. KC price moves with intensity values below -50 or the lower red standard deviation band are considered less relevant and meaningful. Here, the associated price moves are less relevant and maybe want to be questioned, and they're less relevant again to recent action, not years back. Bottom line, if things move outside the bands, that's when you really want to take notice. And not only is kinetic conviction beneficial for single day evaluations, and it is for day traders, but it's also useful for trend evaluations. Here's another example on how to use kinetic conviction on Tesla. And here we have high supportive conviction. You can see it's above average to its recent with the uptrend. Then we have this flattening, but notice the flattening is on low conviction. It's very easy to see as opposed to just standard volume bars. And then we talked about the price changes, how that would skew that. And we see it's low conviction. We would stay with the trade. Here's our gap, our price break, and then it continues onward. So that's kind of a clean example. KC has the expert advisor and commentary reports with more statistics than you're ever going to want. But again, we show you and tell you everything. One key measurement that I do want to point out is the KC dollar intensity. This displays the dollar percentage above or below its exponential moving average. A value of 0 would represent that the bar's dollar conviction is equal to its average. A value of 100 would indicate that the bar's dollar conviction is twice its average. And a value of -50 would indicate that it's half. And this is probably the most important single measurement, at least quantitative measurement, of the conviction indicators, providing a quick assessment of the overall day's intensity. Now that we've covered all three indicators, this is kind of the money slide here. And this is the recommended setup for a complete conviction view. Certainly better than applying just volume. On the bottom at point A, we would have RCM for classic trend intensity momentum analysis, which we've discussed. In the middle pane at point B, we have kinetic conviction to highlight recent moves, a move or moves of relative significance by plotting conviction differentials over or under standard deviation bands of them conviction differentials for spotting selling climaxes and blow-offs that often start or end trends. And on the top at point C, we have OBC that measures up day, down day conviction, and its key signals are divergences, showing potential areas of a change in trend. The expert advisor is usually set to RCM, which is probably the best for investors, but it can be adjusted to kinetic conviction for short-term traders. So we normally use the signals, the red and green dots, base of RCM. So you have kind of complete analysis in one window, very easy to interpret once you know the theory. But then how do we know it works? Or can we at least produce some evidence to suggest that it works? And this gets to the conviction systems. So here we look to validate the indicators and use them to reinforce our investment analysis. And for traders, we're going to use this to generate ideas in the Metastock Explorer. So you can use that for your own trading strategies. Before we start, a little housework. Again, I work for AII. This screen basically states, don't steal our stuff. The next screen basically tells you all the reasons why the material may not be 100% accurate, and there's exceptions to every rule. And we have one more that I think Metastock wanted me to put in, and this one's on the CFTC. And if you have questions on this, you can direct those to Jeff. Anyway, let's get to the strategies. All of these results that you're going to see are from a 10-year study from 2014 through 2023, through the entire year, on all the components of the S&P 500 at the time of this study. When a signal occurred, $5,000 worth of whole shares of stock was purchased, rounding down, and all signals were considered end of day. Okay? We're trying to do as clear as we can, because what will happen is, as we see sometimes, where signals only work good for long strategies, but they don't work with short, and that's really not telling us anything, right? Well, of course, a strategy is going to work good on a stock like NVIDIA that was just covered, 70, 80, 90% of the time, because the stock's going nothing but up. So we're really trying to fine tune this down. So here's the results for the long-term scan, and LT stands for long-term. Highlights a good number of candidates at 1766 and a strong 2.66 profit factor. And I should add that profit factor is different than perhaps some of your other speakers are using. Profit factor is total wins divided by total losses. LT generated an average trade return of $215 on a $5,000 investment at 4.35%, with a modest holding period of about 11 weeks, resulted in over a 20% non-compounded annual return, and had an incredible maximum consecutive win number of 48, which is good, but the negative is it lost 13 in a row. And this is a ramification of a long-only strategy during the COVID drop. When you held it during COVID, it lost 13 times in a row. Here's the equity curve. It did have a minor drawback again during COVID crash, but held up well over the latest bear market that we had. This is a little while back. This isn't appropriate for investors and traders with a longer term time horizon or focused on total return, including dividends. Keep that in mind for our last section here. And who are currently looking for a system to identify potential positions, or to assist with the timing on a group of securities that they're currently interested in. And I might add that this system is also better for options trading, which I will cover in the last section. Here's the results for the short-term scan, ST, and highlights of the number of candidates at 1873. And this is maybe the more balanced approach. You can see 1873 right here. The ST system generated an average trade return of 2.24% with a modest holding period of only 31 days. And these are days, not bars. Keep that in mind right here. Negatives, it had the lowest profit factor, although respectable at 2.5 to 1. That is respectable. Many traders look for 2 to 1. It had 9 consecutive losses at one point in the 10-year period. Max consecutive wins were 35 in a row. And this is the equity curve on that. And I should add that this is the realized equity curve. I'm giving you a little different view. And these are exact from the program, okay, that anyone can replicate by backtesting. These are not hand-drawn lines, which you're going to think we did on the last strategy. The realized equity curve shows results after the closing of the position and not on a day-to-day closing price valuation. You can see during COVID, it didn't, because it did not get shaken out during COVID. This is a beautiful, consistent equity curve, fast acceleration after COVID. This is appropriate for investors and traders with an intermediate term time horizon, looking for a system to identify a list of potential positions. For optimal performance, investors can apply additional analysis methods to refine the larger number of candidates to improve the reported baseline results, something that we will cover in the last section, which you should do. Here's the results of PF. PF stands for profit factor. I defined it, what profit factor is. This has extremely impressive results. A baseline 82% hit rate at a 3.73 profit factor. But on the downside, it only generated 3.5 trades per month. That's on 500 stocks. So you have to keep that in mind. We're getting so refined now. Everything has to line up so perfectly. I believe there's 7 factors in here. Everything has to line up so perfectly that we're not going to get many signals, but we're looking for the best of the best. Because this system is so selective, generates very consistent returns with no losing years over the 10-year period, as we would suspect. And incredibly, and I would not, during this study, it never lost more than twice in a row. It never had 2 consecutive losses. I would not expect that to continue. Please do not bank on that, okay? We are showing you theory here, and system evaluation and design. I would say this system is probably best for investors and traders with a shorter term time horizon who prioritize risk and the consistency of returns and are willing to scan a larger universe of stocks for potential positions. Now, if you're interested in the conviction systems, Metastock has them, we provide each conviction user with extremely detailed performance reports for all three systems so you can make an informed decision. I can give you these simply for attending the event if you want. You can just reach out to me. We give you system parameters, hit ratios, projected returns, popular ratio, transaction entry and exit efficiencies, drawdown measurements. And we want you to be aware of the performance of these strategies in the worst of times to see if it matches your risk profile. We also provide you yearly return consistency. We had all three of these systems. This is an extremely important slide, in my opinion. We had all three of these system performance reports results certified by an independent third-party company called QuantKey. QuantKey is a leader in system design development, appraisals, and evaluations. I can come up here and say anything. This hits 93% of the time, 95% of the time. I can give you the data and the reports to show that it does, but you're not necessarily doing the back testing. So we want you to know that we had these results certified. And I think that is absolutely critical in the investment and traders world. Now, that sounds pretty good, right? But I'm going to show you how to improve all of these results in our last section coming up. If you have an interest in these tools or systems, we also give you manuals. You can see a manual right here. I believe there might be some of these manuals altogether. I think you're going to give you 60 or 70 pages worth of manuals. We give you onboarding weekly emails with tips and suggestions. And I have full educational classes on these tools that I can also give you if you're interested in learning more about conviction and about volume and intensity readings. If you decide to go with Conviction Plus with Metastock, we give you a free year of AI membership and a 30-day money-back guarantee. And I believe there's a show discount, but I don't get involved in this stuff again. I'm more of a techie. Okay, lastly, we also included in this package AAI's Prove. Improve is a tool that indicates how much of each security to purchase in the rebalance as portfolio balances change. What this tool does is it proportions risks. It gives you the position size in shares and dollars so that each security should have an equal end effect on your performance on a risk-adjusted basis. For instance, you would say, I only want to lose $50 on an average down day for this security's volatility, and it would tell you, well, then only purchase this many shares or this much dollar amount. And this can be really extrapolated into much more because it can determine how much to hedge a portfolio. I've got these 12 positions. I'm leery about this next release coming up. How much do I have to short of SPY or Qs to try to offset my risk down to delta neutral? You can use it for delta neutral and equity market neutral strategy, so you can go long short. You're eliminating market directional bias. It can do a lot of things. I believe that there's a class on this that Jeff has on the website. I believe that tool's included in this conviction, in the conviction offering today. All right, we're still short of our 85% hit rate and 3.5% profit factor, which is the goal. So in this section, we're going to look at 6 methods to improve the performance of these systems. And these can be used to improve the performance with any system, investing or trading approach. And just for the record, Jeff out there, I think I'm about 6 minutes from my end. You started me late, but I'm going to try to get you back on schedule. Okay. Our first method to improve performance is you don't have to do anything at all. The conviction studies don't include dividends, which would greatly increase your returns. Studies show that 40% of the total return of the S&P 500 are dividends, which is our study group. Performance is measured on price appreciation only. Factor that back in to our certified published results. When you add back in the dividend amounts, not only would this obviously increase returns, but many of the conviction system reported small losses. You can see these small loss amounts right here, 0.01, 0.02, 0.04, 0.05, 0.07, right, all the way down. When you add in that you might have been getting dividends with many of these positions, it would have changed these quote losers into winners. And it's very likely now our 82% easily jumps over to 85%. Okay, number two, another method to improve our performance and your performance with whatever strategy you use. There's no market timing mechanism included with my conviction systems. This is absurd. This system takes and shows only entries in long entries only in obviously bad time, in good and bad times. You don't want to do this, and you wouldn't do this, right? We don't want to fight the tide. Unfortunately, as a system designer, I have to do a long only strategy without another layer. And that is not logical. It's something that you won't do. And I'm assuming that you would greatly improve your performance by incorporating other methods of chart reading and saying, this is just a bad time to invest. I'm not taking any long strategies here. A third way, in the way that I love and how I'm a day trader, I'm assuming most of you, is other technical elements, of course. Scans are built from systems that are designed for research purposes and to identify factors. From an execution standpoint, scans' purposes are to identify securities that meet the system's criteria and to reduce a large number of securities down to a manageable size for further evaluation. Even someone with modest trading or technical analysis skills is going to be able to filter out the bad setups, improving performance significantly. Yes, you may get 20 signals, 20 symbols today, but go through them and pick the best of the best. Start to use support resistance and relative strength and all the other techniques that you've learned, certain pattern recognitions, and apply them, and you can easily improve results, and it should be significantly. Fourth, these systems did not incorporate fundamentals. Just so you know, these are all technical-based systems. Anyone who gets the conviction package will also get a complimentary one-year membership to AII, and that includes some excellent fundamental scan tools like you can see on the screen here. This video shows some of those scans that are based on the philosophies of some of the world's all-time greatest investors. My favorite is shown here, and it's called the My Screen scan. And what that shows you is the individual stocks that appear in the largest number of fundamental systems. Hey, this stock is appearing in 8 of our 15 fundamental scans as fundamentally sound, or we'll say as a good investment. For some investors, the integration of fundamental stock selections at some level is an area that it can improve performance, and it certainly would work excellent if you're just using the indicators themselves. Next slide. Number 5, compounded returns on the profits factor system back-tested to well over 40%. That's what it compounded if you wanted to compound. But for professionals that like to be even more aggressive, integrating options is a consideration, as these systems target very quick, high probability executions. Obviously, the effectiveness of this method is dependent on the skill of the investor or trader, but I would not rule out using options if you're experienced and comfortable using them, especially with the LT system. Last one, number 6, money management. First, we did not compound returns for the systems. Think about that. We didn't compound returns. Reinvesting profits would greatly enhance your overall returns. Remember our original example of just about 5 cents on 200 shares accounts to $750 35 years later at 11%. Additionally, you can increase returns by incorporating money management techniques, like moving stop losses to assure profitability, minus gapping, of course, or scaling out of your positions to let those profits run and keeping your returns, let them increase, because we know as traders that we have a tendency to want to grab profits. So a nice way to do this is I'll take the position, I grab some profits early, maybe on the sell signal of the short term, and then I'm going to let it continue to run and wait for the long-term signal exit to increase our profits. And if you want to learn more about convictions, you can just email me. Again, I can send you free classes on the topic. I can also send you the reports. And that's in addition, you can still get the free VES class by going to this website. So it's not one or the other. It's both. You can get both the best of worlds. And again, you can see the course if you're interested in that. That really is soup to nuts. If you'd like to learn more on conviction, you can go to aai.com VES, and that's just showing you pretty much the same thing. And that's my final slide because it's 11:59 a.m. and I respect and I appreciate Metastock giving me these premium spots. So my serious hope is that you learn something in this presentation that you can use to improve your trading and or investment returns or your system design. And remember, we have our reversion coming out with Metastock in November. It's really a new indicator. It's something novel that greatly improves Bollinger Band efficiency, stochastics, RSI. If you want to use a single indicator that incorporates numerous aspects as a single buy-sell indicator, that's the best thing that we measured. And my name is Ray Rondeau, and I'm an investment strategist and senior technical analyst with AAII. I have tremendous jet lag. I was just in LA. Thanks for sticking with me, and I hope that you got something from this. Jeff, over to you, my friend.
You did great. In terms of do you have maybe a chance to answer a question or two?
Yeah, we can try them.
Okay. One question that we've got is, what kind of time frames do you recommend? Do you primarily use the daily? Will this work on multiple time frames, et cetera, et cetera, et cetera?
Yeah, I really would say daily on this particular set of tool. I'm not. Okay. I haven't utilized it on minute charts, hour charts. I haven't. But I would say this. I guess the best rule would be I would not use it on weeklies. Put it that way. I would say days and then perhaps hours. And I think the efficiency of these tools would go down the shorter the duration.
Okay. And do you have experience working on other instruments that aren't U.S. equities like futures, forex, international equities, those kind of things?
Again, I'm with AAII, so we use S&P 500 as our benchmark. So I have to. Have I used it on different ones? Yes. Are the results similar? Yes. On like the Russell 2000, etc. But we didn't have them results certified. So I don't normally publish them or talk about them. But yes, so it is very close as effective, if not more effective, at least in US. I have not done it on foreign equities.
That's a nice thing about charts and stuff like that is you can always look at them for as long as you want to to decide if you want to trade with them and do some analysis too, right?
Right. Well, I mean, the fundamental principle of technical analysis and a huge advantage is, right, the markets are considered fractal, right? We know that. And that what's applicable usually, I mean, with some modifications, what's applicable in smaller time frames is applicable in larger time frames. The rules don't necessarily change that much. And of course, what's representative over different asset classes is usually pretty standard.
All right, last question. What is Mr. Rondeau's email to request the items he mentioned?
That's a good question. I should have had that there. Let me see. So we'll just go with it's not here, and I should have had that. I apologize.
Yeah, no worries.
So let's do. I think it's Rondeau, RONDEAU at AAII.com. Yeah.
There you go. I got it for you. There you go.
Yeah, thank you.
All right, very cool. I appreciate that. Thanks for also getting us back on track a little bit with time. Big thanks to you, Ray, for coming in and spending some time with us today.
All right, Jeff, glad to be here, and I look forward to November with reversion, right?
For sure. Yeah, I think we need a little bit of feedback from you, but yeah, let's get it done.
Great. Well, thank you, sir. Have a great day. Good luck in your trading, guys.
Thank you, Ray. All right, let's do this. Okay, you should be able to see my screen again. And included in Ray Rondeau's AAI Conviction Plus, just 7 indicators. You've got scanning, so you can go in and find the scans for the systems that he talked about, the expert advisors, some templates. Very, very cool He also includes the training courses, the 1 year of AAII membership, the access to the learning research module portals. All that stuff is included. $14.95 is the normal cost for that. Here at the conference, it's $747. We also, as always, are going to throw in that 30-day money-back guarantee so you can try it out. If you haven't used Metastock, I'm going to talk a little bit more about Metastock now. But if you haven't heard about Metastock, Metastock's been the top-rated software in its price category, and it's been rated that way for 31 years in a row. And you can get a money-back guarantee on this. If you get it with Metastock, we'll give you a free trial to kind of evaluate it. That means you have a very low risk, high reward opportunity. So give us a call. You can call us at 800-882-3040. You can go to metastock.com/sales-chat, and you can go to metastock.com/conf promo to take advantage of that. Big thanks to Ray and all the work that he's done on that. As you can tell, he's done such a great job of kind of putting those together over the years. Do want to say thank you to another one of our sponsors, Technical Analysis of Stocks and Commodities Magazine. Oh, this is not that. This is not that slide. But anyway, they've been rated #1, or they've been a great partner of our summits. They've been sponsoring them for 10 years. You can find out more about Stocks and Commodities Magazine at www.traders.com. You should also come check out a partner website that of ours, thetradersforum.com. You can join us. There's live chat with other traders. You can share ideas. You can read PDFs. You can learn lessons. We do classes there. It's great. It's a community of traders. The idea is it's a community of traders to hang out with traders, share ideas with traders, learn with other traders. Thetradersforum.com to kind of check that out. All right. This means it's my turn, so I'm going to go ahead and put it to this slide so you can kind of read this slide. And before I get started, it's prize time. So Mr. Lewis.
Yes, hello.
Hey, you want to help us give out a prize?
That sounds awesome.
Okay, let's do it. Real quickly, let me go over to my prize sheet. I've got one here. And the very first, actually, we just talked about Stocks and Commodities Magazine. I think what we should do as our very first prize of the September conference is give away a 1-year subscription to Stocks and Commodities Magazine. So
that sounds very nice.
$90 value. It includes, if you're here in the US, it's a physical magazine that they'll send out to you. And it also includes a digital edition, which also includes like all of their historical archives that go back into the 1980s. Really, really cool prize. Greg, what I need from you.
Yes.
I need you to guess a random number. And that number can be anywhere between 1 and 4,832.
4,832.
Correct. Or is that your number?
No. I'm going to say 2,037.
Okay, let's see if this works.
By the way, you don't think our boss is watching today, do you?
Oh, I know he is.
Oh, because I'm not exactly prepared for public consumption with my baseball cap.
Oh, I can't see you.
So,
actually,
don't tell Kelly I'm wearing a baseball cap.
I don't know. He'd be a fool not to be watching today.
I'm telling you, he should be watching if he's not. And by the way, have I mentioned how charming and attractive and wise Kelly Clement is?
Oh, you didn't say that, but
okay, he is.
All right. So the winner is actually in the U.S. and Eric, first initial C of his last name, Eric C. Let's just call it that way, with an AOL address. So Eric, congratulations. You just won a task prize. I'm just going to type that in real quick so I do not forget. All right, Control V. If I forget to write it down, I have to go back and watch the video and find the video. So Greg, thank you for the assist there.
You are welcome, and break a leg on your presentation.
Yeah, okay, cool. All right, let's go ahead and get started. Actually, I'm next. We updated my picture because somebody asked, where's the next speaker? And my picture was a lot younger at that point. So in any case, anyway, I would like you guys to help me out a little bit with the presentation today, if you don't mind. I generally don't go in and pick a lot of symbols when we go in and talk about the stock. So if you have some symbols you want to look at, type them in the chat. I've got GoToWebinar chat open right here. I've got YouTube chat right here. If you type in a symbol, we're going to look at your symbols with kind of the methodology that we're going to talk about. As I've said before, well, let me start with me, actually. Well, let me let me start with a legal disclaimer, actually. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Thank you for the symbol, Cynthia. That's not part of the disclaimer. We'll definitely look at a couple of those. If you have some symbols that you want to look at, type them in the chat. Metastock does not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. So, thank you, Kirby. Good to see you. Marlene, I see you. Greg, Costco. You know, we love Costco. I might go get myself a Costco dog after we're done today. So anyway, my name is Jeff Gibby. I've worked here at Metastock. This year is, I believe, 26 years. Great company to work for. I remember I had a buddy that kind of hired me up, called me up. She said, hey, you should apply for this job. It's a company called Metastock. We deal with trading and all that kind of stuff. I didn't know anything about trading at the time. So I started here as a sales guy, and they taught me everything that I know. But I started in inside sales. I did that for almost like 15 years, I want to say. No, I'd say it's closer to 10. And so if there was questions that you had about the software or your trading or what you wanted to do, I'd answer them for you. Or there's a good chance that I'd be one of the team members that would actually come in and kind of talk to you a little bit about what you're doing, what you're looking to improve, where you thought you could improve. After that, I moved into our business development team, worked with some great experts. All of the people that are speaking over the next 5 days, I consider all of them friends. I've learned a lot in that role, and that's kind of what I've been doing. I do a lot of our online events. I do manage our inside sales team, and I manage all of our partner relationships. And so it's been great. I've learned a lot. I trade myself every day, maybe not every day this week, just because of my schedule. But I also love to do scanning, love to look at charts, love to kind of look through charts and evaluate them. So in any case, hopefully you had a chance to read this slide as I babbled about me for a minute. But it is a great company. We've been making software since 1982. And there you go. Anyway, one of the things I will talk about with Metastock that we like to talk about, there's a couple of things that I like to brag about when we start to talk about Metastock. This is one of them. For 31 years in a row this year, our Metastock program has been rated #1 in its price category. And we're very, very proud of that. The other thing I like to brag about is how good our support team is and how good our software is. So there's a few things like that. Okay, lots of symbol requests. Thank you, Option Leo, for Mr. We'll try and take a look at that. The question I want to start out with you guys, and you can answer, I've actually put some answers up here for you. And I'm curious to know what your thoughts are. What is the best profession for trading? Is it an A, a psychologist, B, an engineer, C, a teacher, D, a pilot, or E, an artist? What do you think is the best profession for trading? And I'm going to just kind of wonder, do I have the right size? I do, yeah. So give me an answer here. Cynthia says psychologist. That's a good answer. I'm going to tell you a couple of psychologists that I know. That Jake Bernstein started his career as a psychologist. He's going to be speaking in a little bit. He started trading, I believe he took his first trade in the early 70s, maybe even the late 60s. But he started as a psychologist. Also another one, great technician, Dr. Alexander Elder. So I don't think there's anything wrong with that answer. I think there's some truth there. Frank says D, a pilot. We've got teacher. We've got A, psychologist. So, and the actual answer is, it is a pilot. And the reason I think that is discipline. So, and there are a couple of pilots that we work with. Chuck Hughes, a very good technician, does a lot of work with us. He was an airline pilot. Greg Morris, who did a lot of work with us before he retired a couple years ago, actually managed about some billion amount. I don't remember the exact billion amount, but he was actually a literal Top Gun for the Army or for the Air Force, I guess. Anyway, so a pilot. I've kind of thought over the years in terms of why it might be a pilot. The answer that I've come up with, Ray says it's always a pilot. The answer I've always come up with is discipline. When you're a pilot, you are very disciplined in terms of the approach. When you take off from a runway, you have a very, very clear checklist of what you're going to do and what order you're going to do it, and you never kind of forget the steps. It's always important that you kind of stick with that. The same is true with landings and emergencies and stuff like that. Everything's written down in a trading plan. And here's one of my favorite quotes when it comes to trading. Richard Dennis, if you're not familiar with him, very, very famous trader, one of the founders of the Turtle Traders. They did an experiment where they taught a bunch of people how to trade. It's a very successful experiment. One of the things that he said, one of his quotes is, I always say you could publish rules in a newspaper and nobody would follow them. The key to trading, I'm mad at that part, is consistency and discipline. So I think consistency is important. It's critical in terms of what we're doing and how we do it. And one of the things I love about trading in particular is, with trading, it's the only profession where you can go in, kind of say, well, how does this work on paper? And like test the idea. It's also one of those things there you don't ever have to trade. You can always kind of take a look on paper to see how well things would do. When you're trading, I'd always recommend that you use discipline, test your strategy, come up with a really good business plan. And really, that's what MetaStock is all about, helping you do. What strategies work best in the market, that kind of stuff. As we go through the week this week, we're going to talk a lot about using the power tools of MetaStock and how they can help you kind of test trading ideas to see what works well in the market, find opportunities. We'll talk a little bit about that today, and understand different trading methodologies. And so that's kind of there you go. And what I want to talk about today is finding breakout stocks. Okay, one of the turtle methods from the slide earlier, they looked for stocks that were breaking out of a Keltner channel. I'm going to show you some of the hidden gems in MetaStock. One of the things that's nice about MetaStock that sets it apart from a lot of other software is it's just been around for so long. As such, there's tons of methodologies that are in the software that you might not be familiar, even if you've been using MetaStock, you might not be familiar with. So I'm going to show you just some methodologies that are in MetaStock. Probably maybe get through 2 of these with the time that we've got, and maybe 3. But I want to kind of just show you, if you're a MetaStock user, if you're kind of interested in MetaStock, the name of this particular presentation is called the Hidden Gems of MetaStock. And that's just because there's so many things in MetaStock that it's kind of easy to lose track of all the functionality and the features. So let me go ahead and kind of get into MetaStock. We'll take a look at a couple of slides. And I want to talk a little bit about finding breakout stocks. Okay, and the tool that I'm going to use it for that is what we call the dynamic trading tools. And I've actually opened up a chart of GE for that. And GE's been a great stock today, today, but also all year. If you kind of take a look at where we've been, I'll just do kind of a bit of a rescale right here. You can kind of see where kind of things have been. I mean, GE just has been taking off. It generally last week kind of broke up again. Starting another maybe leg up. We'll see how that goes. I'm not going to guarantee that GE is going to continue to go up. This is a template you can apply to MetaStock. It actually looks to kind of help you understand exactly where the support and resistance levels and any trend lines. You see this big, huge trend line. Where did this actually even start? Let's kind of go back. Started here, it's run all the way to here. Big long-term trend line that's been kind of drawn on the chart. You can see where support and resistance have kind of come into the chart. It'll also find descending and ascending trend lines. So let me kind of just zoom into the chart a little bit to kind of help you see these lines are automatically actually generated. And I'm just going to kind of change the scale a little bit so I can kind of go through this. One of the things that a lot of people trade is trendline breakouts, support and resistance breakouts, and that kind of stuff. The problem with trading a breakout is how do you find them, right? And so what they've done with the Metastock software is they've actually created, and this is a method that's been in the program for a really long time, but they created a methodology to actually go in and label and identify where these actual support and resistance areas are on the chart. So right here, I'm just going to hover over this top line and explain to you what this is. This is a trend line down in a shorter term. And so you can see there's a little bit of a trend line that's kind of been poked. We just penetrated that trend line. I guess this would have happened on the 13th. Wait. Okay. All right. Down below that, you can see right here where there's resistance. We've been in a resistance phase with GE for quite some time. You can kind of see where that's been painted on the chart. It's moved a couple times, but that's really kind of where we're at. Okay. Down here, you've got support. This support is going to be a shorter term support. They also draw on longer term and shorter term support and resistance. So to just kind of itemize what's being automatically drawn on the chart, there's going to be support and resistance, and that'll be long term and short term. If it finds uptrend lines and downtrend lines, you can see kind of a little bit of a shorter term here. It'll look for those both shorter term and longer term as well. This is automatic. And if you're using Metastock and you want to use this template and kind of look at where these lines are being drawn, what you can do is just right click on your chart, and the template that you'll be looking for is called Dynamic Trading Tools. Okay, so this is all just automatic. Now, one of the things I love about Metastock, so if I'm looking for a breakout, this would be a pretty good breakout for me. It's been channeling for quite some time. I've actually been watching GE to kind of find a breakout. And I think we've got one. We definitely are at an all-time high right now, at least, right? But here we've broken out of this the shorter-term resistance the shorter-term downtrend trend line. And then also we've kind of broken through this resistance area as well. Okay. As a trader, if I want to find stocks that have kind of broken through resistance, I can run an exploration. With Metastock, it's called a scan, or actually it's called an exploration, but it's a market scan. And with Metastock, it does scanning and filtering. So if I want to find something that just has a breakout, I can very, very easily come in here, and we're just going to run it to find stocks that have a breakout. So I'm going to open up the Power Console right here. And what I'm going to do is I'm going to come to the scanning tool. And what I'm going to do is I'm going to go to Dynamic, or DT. Dynamic Trend is what that stands for. And I can do support and resistance on a long term. I can do dynamic support and resistance on a short term. I can look for longer term breakouts of trend lines up or down, or short term. So just for the purpose of showing you kind of how to find maybe some of these things on a chart, let me actually kind of come in here and make this the only scan that we're going to run right now. So we're going to run the longer term. And what I'm going to do is I'm going to go ahead and click on Start Exploration. So what this is going to, oh wait, I didn't even select what list that I want, but I always run the same list in here. So typically the list that I'm scanning right now is the Dow Jones, the S&P 500, and then the NASDAQ 100. Out of those kind of three indices, you get about 520 stocks. And it's just going to go through and kind of identify which ones have a breakout of support and resistance and when that happened. And when it's done, I'll show you exactly how that works. Okay. Metastock, great answer. Yeah. D. As this is running, I'm going to take Metastock's heads up and say, if you are enjoying the conference this week, I'm glad. If you've learned anything, I'm glad. If you like them, subscribe. I'll be even more grateful. So in any case, So now out of this, we've kind of got our results back, and we went through those 520 stocks pretty quickly. But what we've got is we've got a list of instruments, and you can see right here, this is the list of instruments on this side. You've got their close value, and whether it was a break up, this would be a break up through resistance, a break down through support, and how much volume that break happened on, okay? Whether that's up or down. And then you got your symbol, okay? So the way that you read this, I actually kind of like the way that they put this together. This number equates to how long ago the breakout happened. So if I'm looking at 3M, it broke up 100 days ago. Okay, so that 100 means it was 100 days ago. I ran this scan on a daily basis. You can run it on whatever you want. So that's a little bit far back in time for me. I want to find something a little bit more recent, maybe even like 3 to 5 days, so that I know that it's holding. Okay, so let me go ahead and kind of just sort this on the breakup column. And what we're going to do is actually just kind of go down to where we see kind of stocks that have more recently broken up. Okay, Stanley SWK broke up about 3 days ago. We've got US Bank Corp. I'm going to open up that one that opened a few days ago. You've got Ingersoll and Run 2 days ago. Cummings fact sheet, and I bet if we found it on here, GE is going to be somewhere on here as well. But I'm not going to kind of spend time actually looking for it. Let me go ahead and open up just a couple so you can kind of see what this looks like. I've just selected 2 of them. What I'm going to do is open up the charts. So click on this one. This will open up the 2 that I've selected. And we'll just take a look at kind of where things are for this. Interesting. Did I have something? Has somebody been playing around with my scan settings? Let's take a look. That's current. Okay, interesting. That wasn't exactly what I expected. Let me go ahead and go over to US Bank Corp. Okay. And you can see, okay, with this one, this is why I kind of like to look at them a couple of days later. You can see where this came up through support a couple of days ago. It broke through, but this line held. So in that case, I'd probably want to look at a different one. Let's go ahead and kind of just scan over to a different one real quick. That one is Ingersoll and Rand. Okay, let's kind of go to Cummings, CMI. Here you kind of have where the line comes through, and here you're breaking up through that resistance area. So that's how you can kind of run the exploration, kind of see exactly what's going on. So just a hidden tool of Metastock, the dynamic support and resistance. These lines will be drawn on the chart for you automatically, and you can scan them and find them. So let's go ahead and kind of move on there. Okay, go ahead and close this out. And let's just talk a little bit. Now I need to get your symbols. So let's take a look at, this is a methodology. Let me go back into my PowerPoint for a minute. I want to talk about the Rahul Mohinder oscillator. So this is actually the first methodology that I ever started trading with. And it was put together by a good friend of ours, a great technician, a gentleman by the name of Rahul Mohinder. Rahul Mohinder is a seasoned trader. He's a panelist on CNBC from time to time. And one of our best dealers in the world is actually Rahul Mohinder. They've done a lot of Metastock business over the years. So the way we kind of came about this system and this methodology, which is actually exclusive to Metastock, is Rahul was in our office. This was a long time ago. I think we're talking about Metastock 10 years. And we're like, one of the things is we were just talking to him and we're like, hey, show us what you teach people. Show us something that you do. We're very interested to kind of see what you're teaching people in India. We really didn't have a good idea. And what he ended up showing us was the RMO, or the Rahul Mohinder oscillator, which I think is a very, very streamlined way to kind of look at markets and kind of evaluate what's going on in the market. So there's a couple reasons. Well, first of all, it's a trend following system. So it's going to help you identify the trend. When we start to talk about trend with Rahul Mohinder and the way he looks at the trend, we're going to talk about long-term trend, or the primary trend. And we're going to talk about the medium-term trend, and we're going to talk about the short-term trend. And he's got an objective way to look at all of those and kind of evaluate a stock to see if it's objectively, if it's in a bullish or a bearish trend, that kind of stuff. So There's a couple reasons that I like to show this particular methodology. I've shown it all everywhere. Like I've shown it in India, I've shown it in London and Australia and Saudi Arabia, and you just name it. I've gone across, and I really do like to show this method. And I've made a list of the reasons why. I think it's easy to implement. If I do a pretty good job of showing it to you, you'll understand how to do it. It's objective, so you're not ever going to be going, okay, well, are they going to drop it a quarter point or half a point or 3/4 of a point or leave it unchanged? That's going to do? What is that going to do? We'll try and work on language here. It employs solid money management, so whenever you actually kind of put a trade on, you'll have a stop in place. You'll know exactly kind of where that's going to be. And I can actually usually do what I do today and go into a session and say, hey, tell me what you want to trade. Tell me if you're interested in Costco, Greg. Tell me if you're interested in, whatever it might be. Let's look at those particular stocks and kind of I can help you using the rules identify kind of good entry spots. Because it is a trend following system, it never gets in at the exact bottom and it never gets out at the exact top. But what it looks to do is actually help you identify better parts of the trend. A good friend of mine, Robert Deal, the late Robert Deal, he always used to say that bulls will make money, bears will make money, but pigs will get slaughtered. This is a method that really kind of looks to identify what those underlying prevailing trends are and help you take advantage of those. So let's kind of take a look at them and kind of how they work. Since it's an objective method, the first thing you want to do is identify the trend. So from an objective perspective, am I trading in the direction of the trend? Well, the first question you have to answer is, what trend is it? And so we're going to start to talk a little bit about the trend and kind of how it works. Let me open up a few. I'm actually going to close this chart up. I'm going to go ahead and click on no. Now what I'm going to do is actually just open up some charts here. We're going to open up Costco for Greg. We're going to go up a little bit. And again, if you have questions as we go, Kirby says his symbol is SEG. We'll go ahead and put that one in here. We'll go ahead and put in, Cynthia, I'm going to put in HLNE. And we're going, I'm going to guess that's an O. Okay. And then we'll do, for Marlene, we'll do AEP. Okay. And those are probably, we probably won't have a chance, just due to time to look at all of those. But we'll kind of glance at them for sure. Okay. What I'm going to do here is if you use Metastock, you want to use the RMO trading tools, just go ahead and click down here. And what I'm going to do is I'm going to apply a template, which is going to apply everything we need to look at it. And the name of the template, there's actually a few that we've created. We revitalized this for 19. I'm just going to come down to RMO. So you've got RMO bull and bear, pulse. Pro mode is actually my favorite mode, but I'm going to actually just go with the new model that we used called the shaded. I'm more comfortable talking about kind of how to read it in the shaded model, but I would recommend that you take a look at some of the new methodologies or this new ways to look at things that we put in 19. They're pretty cool. This one is just basically like, it's a reskin of the same model that you're used to. So if you've been using this for a while, what you'll notice when these come up is this is just a little bit easier to read for you. So let me go ahead and it's going to load all of the data in, get this all ready for me. And we'll start right here with Costco. So if you're familiar with the RMO already, you'll notice we changed the transparency on these. We changed them from histograms to filled lines. That just allows us to see, allows me to easier see where the crossover points happen. And those are important, obviously, if you know a thing. Just gave it a better aesthetic view. Okay, so we've got AEP. It's actually, I think I got the wrong signal in there. We've got HLNE right here. We've got SEG. Okay. Not a lot of data on SEG. I don't think there's enough. This must be a new instrument. Is that right? Trying to figure out who said SEG. Kirby. SEG, we just don't have enough data on SEG to use it with RMO. And that might be, yeah, that's it. That's all we've got is a couple months. We need a little bit longer than that. let's start with Costco. Okay. Let's talk about the rules. There's 3 rules that you need to use on to understand RMO, to be able to implement it well. The first one, again, it's a trend following system. So what we want to be able to do is trade with the trend. In order to do that, we want to be able to identify the trend. Okay. Now, the way that we do that with from our primary trend perspective is using the Raymond oscillator, which is this. I point to my screen. This one right here. This one right here. You should this, and it's called RMO. Okay. Now, it's very, very simple to read. I like the simplicity of it. Forever, for a long, 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 long time, this RMO oscillator has been above 0. Okay. If it's above 0, it's bullish. Okay. Long term. If it's above 0, it's bullish. So you can see that it says RMO bullish. There's a trend ribbon down here. I had to scroll back really far to see if we're actually bullish or to find a bearish territory. This RMO has been bullish on Costco since May 30th of 2023. Okay. During that bullish period, the price of Costco has risen from 503, almost a double, not quite, 907. It's gone up quite significantly. I'd say that from 500 to 900 is very significant. Okay. During that whole time period, the primary underlying trend based on RMO has been bullish. So without even going through any of the other rules, I'd say if we're just looking at going long, while this is RMO is bullish, we're already putting the odds in our favor. And that's the rule. Okay, so rule number 1, 3 rules. Rule number 1, is our primary trend bullish or bearish? How do we read that? Is it above 0? If it is, then our primary trend is bullish. What does that mean? Well, that means we're allowed to go long. It means we're not allowed to go short. Okay, that's all it means. Okay, so step number 1, if we're looking at this every single day since May 30th of 2023, if we looked at this, our initial assumption when we're looking at the hard right edge of the chart is we are allowed to go long, we're not allowed to go short, and it's not a trigger. Although I have had, over the years, I've had a lot of people go, well, I just like the RMO, so I put that on my chart as an initial filter for my other trading system. And if you want to do that, you can. Okay, well, I'm going to teach you the other 3 rules first. So step 1, we want to identify that primary trend. If it's bullish, we're allowed to buy. If it's bearish, we're allowed to short. It's not a trigger, and we'd never want to trade against the trend because it's our friend. Okay, all right. Hopefully that's easy. Step 2, what we want to do is, so we've identified the long-term trend, and with Costco, it's bullish. It's been bullish for a really long time. The second thing we want to do is identify the short-term trend. Okay, with the short-term trend, let's go ahead and go into my Costco chart again, and we'll just talk a little bit about how to identify the short-term trend. Okay, what I'm going to do right now is actually kind of just come in here. And I'm going to draw your attention to this kind of this pinkish indicator, not the blue one, just the pink one for now. Okay. And you'll notice it's a lot more reactive to prices. It's a lot more volatile than the primary trend. If you get a bit of a dip down, it dips down below 0 a lot faster. And the reason behind that is it's looking at the short-term trend. Okay. So we read it the same way though. If you're up above 0 like you are here, then it's bullish short term. If you're down below 0, as it is right here, it's bearish short term. Okay, so this is just looking at the shorter term trend of the stock and helping us identify short term, are we also bullish or are we bearish? Are we getting mixed signals? Okay, and you can read it the same way. If it's above 0, it's bullish. If it's above 0, also you're going to see the bars are painted blue. If it's down below 0, like it is right here, they're painted red. So it's up to you in terms of how you want to read this. Rahul says to keep this simple. Size of these indicators don't matter. The shape of them don't matter. It's either above 0 or bullish, above 0 and bullish. Okay. And so step number 1, we identify the long-term trend. Step number 2, we look at this pink, and we can tell you that it's been bullish on Costco recently since right about here. Okay, And you can kind of see where that happens just by either seeing where it comes down below 0 or where it doesn't. So just to reiterate step number 2, we want to use it to identify the short-term trend. If the primary trend and the short-term trend is bullish, we're allowed to buy. Okay. We're still not allowed to short, and it's not a trigger. If they don't match, you're allowed to wait or you're allowed to scan. Okay. If they're both bearish, great. If you like to take short positions and they're both bearish, you can go to step 3 to kind of structure a trade, which I'll talk about in just a second. We're on step 2 still. Okay. The one thing I want to reiterate is if the primary trend and the short-term trend do not match, you can use a scanner and find something that does, but you don't want to trade when there's kind of a bit, you want to trade when the long-term and the short-term matches. Okay. Lowell wants to know if I can look at Kroger. I'll throw in Kroger there for you in just a second. Yeah. Thank you, Lowell. We probably won't have, I will also reiterate that if you do want to look at this with stocks, and I don't have a chance to show them, my apologies, we're time limited, but we'll always be happy to pull a chart for you if you go to metastock.com/saleschat. We can always happily pull you a chart of RMO. Okay. All right. We've talked about the long-term trend. We've talked about the short-term trend. Let me talk about the triggers, because I'm sure you've seen the buy and sell signals on the chart. And those are literally the triggers. So if we come in here just a few days ago on Costco, this was on 9/9, so I guess it's a little bit more like 20 days ago, we had a trigger. Okay. If we're long-term bullish and we're short-term bullish, and we have what Rahul calls a shift of momentum or a shift of force, a buy or sell arrow will happen on the chart. Okay. I want to be clear about why that happens. I want you to understand exactly what's going on from the chart. Okay. We talked about this chart here, or the pink line here, and that I talked about how that's the short term. This blue line is actually the medium-term trend. The medium-term trend. Let me try using words. What will happen is, like, when the trends kind of like right here, you had a little bit of a shift in momentum, a shift of direction, a shift of force. And what happened is the short-term trend came down below the medium-term trend and drew an arrow on the chart for you. Okay. Had it again right here where it came back up, had it again right here when it came down, and you had a bit of a pullback into even just like a negative territory here. When this short-term trend crosses above the medium-term trend, or to put it as specifically and simply as I can, when the pink line goes above the blue line, Rahul calls that a shift of momentum, a shift of direction, or a shift of force. When that happens, and you're bullish long-term and you're bullish short-term, and you get a buy signal on a chart, you're allowed to buy. Okay, and I'll show you exactly the rules that he uses to buy, how he gets out of the trades, all that kind of stuff. But you want that shift of momentum, that shift of direction, or that shift of force. Now, I'm going to go back on this chart. Our most recent signal, if we were just looking at Costco on the 9th, we would have got a trade opportunity. And based on just looking at this, we would have gotten into that. Okay. But what I want to be able to do is go specifically through exactly how the method works, how you move your stops, how you get out of the trade, all that kind of stuff. And to do that, I'm just going to go back in time a little bit. I'm going to start right about here. Okay. And I'm going to zoom in on this chart a little bit, just so we can see a little bit of kind of more what's going on. Let's go back. This right here is May 31st, 2023. Okay. Maybe if we ran a scan and we found that this had a buy signal on May 31st, 2023, it would show up in an exploration. And we came in here and we looked at it. We're bullish long-term, we're bullish short-term, and we had that shift of momentum or that shift of direction or that shift of force. We can now do a structure of a trade. And based on Rahul's rules, there's some very, very specific things that we want to do right now. Okay. The first thing is I'm going to take a look. Remember, this is the day we're looking at. I'm going to look at the high, and I'm going to look at the high the day before. Okay. And I'm going to say, okay, well, this high is just a little bit higher than this high. So I'm going to take a horizontal line, and I'm going to identify that as the area where I'm going to get in. Rahul wants a little bit more upward price movement before we get in to confirm that that shift of momentum is happening. Okay, So I'm going to go ahead and do that. Okay. The other thing that I want to be able to do is I want to evaluate exactly where to get out, right? If I want to trade with a very disciplined approach, it's really, really helpful if I know, okay, well, if Costco goes down below this value, I want to get out of it, because that way I'm not making that decision when I'm all in on the stock. Well, don't go all in on the stock. You know, you want to properly size your positions, right? But when I'm invested, I want to know where I'm getting out before I get out. So there's a couple of methods that Rahul likes to talk about when he talks about stops. One, I can look at, and I'll tell you which one I prefer to. I could look at the low of this bar and the low of this bar, and I could put a horizontal line right below that bar. Okay, right there is where that would be. Okay, that's the first method. It's not the one I use. I'll typically go back and look for what Rahul calls a recent support zone. Okay, the way that I define that recent support zone is I look for a pivot low. Now, you might not be familiar with that terminology. I have to go faster right now. But a pivot low, if I just kind of look back on the chart, here I've got a low, but this low is lower. Okay, and this low is higher. Here I've got a low. This low is lower than this low and this low. So what I'm looking for, because I think I said that more complicated than it needs to be, when I'm looking for a pivot low, I'm just looking for a low that's surrounded by two higher lows. So if I look right here, this low is higher, this low is higher. This is where I'm going to put my stop. This is the area I'm going to define as a recent support area. So I'm going to go ahead and put this on the chart. Okay. So this is the line I'm going to go with. You can play with these. You could use this line if you wanted to. It gives you a tighter stop. I prefer, especially with a stock that's trending for a while, to kind of give it a little bit more room. Okay. So in my particular case, my entry price is going to be right here at 504. I'm just going to write that on the chart so I can remember it in a minute. I think it was 504 and 30 cents, right? Something like that. Okay. And 38. Okay. And right here, my stop loss is going to be 488.89. Okay. Oh, wait. That was the higher value, 465. Okay. It's a pretty big stop loss. And in that case, you might want to go with the higher number. I'm going to go ahead and use 465 here. Okay. Now I do know a few things now. If I get into the stock, I'm going to try and get in as close to 504 as I can. As soon as the price, it doesn't have to close above the price. As soon as the price goes above that level, I'll go ahead and get into the trade. Okay. If I get into that trade, I'm going to give it to 465.18. And if it goes down below 465.18, I'm going to go ahead and cover, get out of my position. Okay. So what do I have now? I think this is important for trading. What do I have? I have a good idea of where I'm going to get in. If it gaps way higher than where it's at right now, I can kind of reassess my risk, right? And I have a pretty good idea of where my risk is going to be, because I know if it comes down to 465, I'm going to get down. Now, you always have the scenario where it's going to gap sometimes. So it just gives you a pretty good idea of risk reward. Sometimes you get in a trade where you just gap down, and that's kind of part of trading. Right here we get the entry point. Right here is where we'd be entered. Right here we get our stop loss in. Okay, and then I'm going to move just a little bit quicker, just because we have to. Initially, the stock kind of moves up, kind of comes back down, and we get an initial change of direction to the downside. Change of direction, just to refresh your memory, is the pink line goes down below the blue line. It's showing a little bit of a weakness, and this is natural. Stocks don't go straight up. We love them when they do, and we're in them, but generally they kind of go up in more of a step straight. 2 steps forward, 1 step down. 2 steps forward, 2 steps down. 3 steps forward, you get the idea. It generally isn't a straight line, okay? When this change of momentum happens, we're not going to do anything. As long as we're bullish long-term and bullish short-term, we're going to kind of keep an eye on the stock, make sure that it doesn't go bearish long-term and short-term, in which case, if everything goes against us, we'd be looking to kind of get out of our position and possibly reverse. But we kind of expect this in terms of momentum, right? Things are going to go up. They're going to come back down as the sellers take profits, and it's going to set a new support zone. So right here, you'll see it comes down. It sets that up at the very low. and then prices start to rise again. Right here, you have that shift of momentum, that shift of direction, or that change of force. There's a couple of things you can do when this happens. One of them is optional. The second isn't. So the first thing Rahul says that you can do when you get a signal in the same direction is you can buy more. I don't do that. I generally take a position size that I'm comfortable with, and I just let it ride. Okay. The other thing that you can do, and this is not optional, you should do it, is you want to move up that stop loss. Okay. And it makes sense to do it because the price has moved up, it's pulled back and set up a new low. So when we see this, what I'll encourage you to do is put your stop loss higher. And you can do it in either method. You can look for the lows for these 2 days. I'm going to look for that pivot low, which I'm going to identify as right here. And now what I've got is, instead of a stop loss, I've got a profit protection in place. Okay. Here we have another bit of a ride up. We have that change of momentum. Again, we're just going to start to pay more attention, right? If we kind of come down here, we actually have enough of a pullback that it actually kind of goes negative short term, but we're still bullish long term. Okay. And in that case, we're going to kind of stay in it. Okay. Once we start to kind of get this new shift of momentum, shift of direction, I'm going to move up my stop. And it becomes very, very easy at this point. What we want to do is kind of, again, just kind of, as the price of the security increases, ratchet up our stops to kind of help us, right? Here, this is the buy signal we're on. Here we have a pullback that gives us a change of momentum. Here we get another buy signal, and we're going to move up our stop. Okay, and so we kind of follow a kind of a similar pattern. I'm going to go ahead and put in a stop loss right here. Okay, if it triggers right here, we can always buy back in, right? If we get kind of the symbols in the right direction and that kind of stuff. A good mentor of mine, a gentleman by the name of Steve Bigelow, always said you can always buy back in if you're wrong. If the market still goes up and you get a stop loss, you can always buy back in. And there might be sometimes, like with Costco, we kind of hit an area where we got a little bit of whipsaw, right? But if we kind of keep a strategy around this, what we're looking to do is take advantage of these persistent upward and downward trends. And that's the whole idea for this. Okay. So in this particular trade, which is probably the trade that we'll go blow by blow on, we would have gotten in right here at around 504.30. I wrote it down. All right. We would have gotten out of that initial leg right here when we hit the stop loss here at 530. So from 504 to 530. I would say, and we won't kind of go through it just due to time, I want to respect Martha. Martha does a great job. She's going to be up next. But I would say we'd kind of enter another trade here. We'd move our stop here and here and here and even here. And then stop out here. We'll probably even get to take advantage of this next leg up. And the whole idea behind this is to kind of help us in a very practical way take some of those, not the whole thing, because you're never going to get into the bottom and you're never going to get out of the exact top, but just chunks out of the thing. Marlene says, why not use a trailing stop? You certainly could if you want to. I'm just kind of teaching the method the way that Rahul teaches it. You certainly can kind of implement this. You can implement anything that you want to with it. Particularly, I like this as a methodology because I like to use because questions because it does give us room to kind of come back. It does, but every time we kind of get like that stair step, we have a chance. Every time that support area is set up, if we just look at this from a, if let's say we got in here, we went up, we pulled back, and we put our stop here. We kind of have a trailing stop, but we're giving the stock, we're letting the stock kind of tell us where it's going to go. We have a pull up, and here we have another chance to move the stop. We have a pull back, and here we have another chance to move that stop. So we are kind of trailing a stop, but we're not using like an exponential, like a chandelier stop or anything like that. And I do like that because we're taught, a lot of people kind of come into the marketplace. I'm not saying there's anything wrong with trailing stops. I like to use a stop under like an 8-period exponential moving average as a close. But I do like to let the market, like whenever I look at risk reward, I'm not basing a trade based on how much I can afford to lose because the market doesn't care about that. I'm looking at where support is, and I think there's some value to that. So very good question, Marlene. Why not? Play with it too. That's the other thing that's really nice about trading. If your performance gets better because you're using a trailing stop, do that. Okay, let's look at, oh my goodness. Okay, really quickly, we'll look at Kroger. Kroger, we've kind of been in a pretty sideways phase. Right here, you had a pretty good bullish zone. I'd say there's better stocks probably than Kroger to look at. This has been pretty sideways. But even here, if you look at kind of this last bullish zone, you went from 45 and it was bullish to about 54. It's not a great one for that one at first glance. SEG, I don't think we had enough data for. Let's take a look at HLNE, Hamilton Lane Incorporated, and just looking at kind of the hard edge of the screen, like right here, we went bullish. Okay. During the time period that it was bullish, it went from 113, it's up to about 153. We'd only be looking to go long. I'd say that's a great way to kind of put the odds in your favor. Here, there you go. So play with it if it's something you like. Do it. Greg says, I like the idea of adjusting stop loss. I can never get, it's not my idea. I blame Rahul, but I do like that too as well. So the challenge with stop losses are always like, how far do you put them? Where do you put them, et cetera, et cetera. So that's RMO, and I need to kind of move on. I might come in and talk a little bit about Haguro at the end of the day. Just want to kind of reiterate some things real quick. 31 years in a row, Metastock's been rated the #1 software in its price category. 31 years in a row. We have two versions. We have what we call our Metastock real-time version. It's $265 a month. And it includes actually some of the best news platforms on the planet. The news that comes with the news and information is actually, I'd call it institutional quality. Very, very similar to what you get out of a Bloomberg. One of has all the Reuters news in there, $265 a month. Okay. We also have an end-of-day version. It's $69 per month. Either one of those, it doesn't include the news. It just includes everything I showed you here today at the session. What we're going to do, and again, we're going to kind of show you a lot more as we go through the week. But what we're going to do as part of the special for the event is if you buy a month, we will give you a second and a third month for free. That'll include Metastock 19. It'll include data for the region that you want. We'll include having somebody actually help you install it and kind of walk you through the program. We've got a home study course that talks about RMO and scanning and how to do all that kind of stuff. And yeah, if you try it out, you'll pay $69 here in the US for 3 months if you do end of day, and $265 per month. That's about $20 a month. That'll be running on, what day is it today? Till 2 days before Christmas, 12/23. If it's something that's valuable for you, you're just going to become one of our customers. You'll use it, you'll run your scans, you'll be happy with it. And I think there's a reason we've been rated #1 in our price category for 31 years in a row. I appreciate all of you that have been using Metastock for years and years and years. Thank you. I really, truly appreciate that. I myself wouldn't trade without Metastock. I love the ability to scan and included methodologies and the tools that are in there. If you're interested in signing up, give us a call, 800-882-3040, metastock.com/salespchat, metastock.com/promo. So, oh, good. I was worried that we would go over. I do want to say thank you to CMT Association for sponsoring the event today. CMT's been they've been a good sponsor of ours. You can find out more about them at cmtassociation.org. You can call them at 646-652-3300. Martha Stokes, our next speaker, is actually a CMT, and it's a really, really great program. They also work as a nonprofit. You can get more information about them at 646-652-3300 or cmtassociation.org. Of course, we are Metastock. It's been rated #1 in its price category 31 years in a row. Give it a go. See if you like it. If it helps you find better trades, how much is that worth to you? So, in any case, Greg, if you're listening, let's do another prize real quick.
Yeah, I'm here. I'm sorry. It takes a second for me to find my mute button.
With or without you, I know, right? Every time somebody says, "Hey," and it's always okay. Where'd my mute button go? I have to find it. All right, let's do this real quick. The next prize that we're going to give away is this is actually a 1 hour of coaching from Anne-Marie Bain. She's going to be speaking later this week. She's a big she's a friend of Metastock. She's going to do 1 hour of coaching with you, and that's a $250 value. And the winner is Jeff Gibby.
Can I just have that?
Yeah, all right. So
the random name is Greg. Metastock.com.
Can you give us a number between 48.1 and 48.32?
628.
Okay. Now, the winner of that is Carmelita with a Comcast address. So congratulations, Carmelita, you won. For anybody that wins a prize, what's going to happen is we kind of run a really busy week this week, as you might imagine. So what we'll do is the beginning of next week, where I'm just kind of cleaning up, I'm going to send all the prizes over to the winners of the prizes. So I'll let Anne-Marie, in your case, know that you won, and she'll reach out to you to kind of help you get that set up. Congratulations, Carmelita. Great job. Thanks for registering. Also, Greg, before you go,
yes,
how can somebody win a prize?
Oh, well, if you haven't yet registered for the event today, which is the Traders Conference, go to metastock.com. Well, the easiest way is just go to metastock.com and you'll see a big old banner on the top. You click on that and then you can just register and just give your name and email address, or you can go to metastock.com/traders-conference. Either way, you might get one email from us, but you can quickly unsubscribe if that's not what you want.
Yeah. Also, if you're watching us, you can go to webinar right now. You're already registered. You're already on the list.
That is true.
All right, very cool.
People who are watching us currently on YouTube.
Cool. I want to talk about our next guest. Thank you for the assist, Greg.
See you later.
All right. Another great friend of Metastock, Technotrader. You can get more information about them at technotrader.courses. I'll put this link in the chat. Technotrader does a great job. Martha, I remember I had a chance to go up to kind of the Washington area, state, and tour their production facilities. Very, very nice compound out there. One thing that I'll always say about Martha's one of the smartest technicians you'll ever run across. She's done such a good job over the years of actually kind of putting her courses together for Metastock and creating tools for Metastock. And we just absolutely love her. And she also does a really good job. Hopefully she's here. I didn't even check. Of course she's here. Okay. And she also does a really good job. Martha, we appreciate you like crazy. How are you?
Thank you. Can you hear me?
I can hear you. Yeah. Let's get your.
Is the sound good enough? Yep.
You sound great.
Awesome.
Like an angel.
Yeah, I have a really sophisticated unit here that I use for this. I'm going to show my screen. And we're going to talk a little bit differently. Usually I really go into the heavy text, but right now what I want to do is I want you to get the idea of what's happening in the market and set aside all of this. It's volatile, it's this, it's that, because something very exciting is happening and it doesn't happen very often. So I'm going to cover something a little different than I normally do. We're going to be trading the Supernova Fall Rally. I am Martha Stokes and these are my credentials. I've been teaching for 26 years in my retirement and I love to teach. I have professionals and beginners that I teach, and we have a very special gift for you. So hang in there till the last slide because it is the absolute last slide. As always, I am just an educator. I am a buy-side institutional professional. So you're going to get a point of view that is different than people who have always spent their time on the retail side and have created things for the retail side. What I do is I have professionals who are learning, CMTs who are learning, but also I include a lot of people who want to trade as a business, who want to become a semi-professional and have a trader's tax status in the IRS or other nations. As always, everything presented is in the Metastock charting, and we love Metastock charts. We've been with them for almost about 24 years. Getting ready for the fall rally. We normally have a fall rally. Everybody knows the fall rally is a common event that occurs during the last 3 months of each year and into January and February sometimes. Although there are years when the market goes down or starts a bear market in October. October is the most common month for a bear market to start. We're not going to have one. More often, there is a rally or surge of buying that moves stocks up with momentum and velocity for high profit trading. Reasons why the fall rally occurs. You must always understand the what, when, where, and why of the market. If you do, you will make more money. You will make fewer mistakes. You'll be happy. If the market has been down for many months or years, then a fall rally is more likely and will be more profitable. If the market has been sideways or a trading range, a fall rally is very likely. We've had a lot of sideways things and, oh, the market's going to crash. Oh, we're going to have a recession. Oh, it's so volatile. It's like, oh, come on, guys, relax. New investors tend to invest in the fall and the winter. They tend to believe that you should go away, Meg. Some of the best trading is in the summertime. Pension funds are funded fully at this time. Dark pool accumulation that occurred in August and September often is discovered by HFTs and professional traders starting in October. Why? Because the quieter hidden accumulation takes many weeks or months. And I'm sitting there all during August, July, they're accumulating. August, they're accumulating. September, oh my gosh, they're still accumulating. And it's like, okay, this is the big one. This is the big kahuna that's coming at us. There tends to be more consumer spending, even in a recession. Even in a recession, because people, if they feel like there's a recession or the economy is lousy, they spend more money. They do. It's typical. Why a supernova? Reasons why a supernova fall rally occurs. New product cycles occur approximately now every 8 to 12 years. They used to occur every 40 years and then every 20 years. They're getting it's getting a tighter thing because more and more technology is advancing more and more technology, which is advancing more. A supernova fall rally occurs after a major catastrophic event such as a global pandemic. We are still in that recovery mode. We're still waiting for that pendulum to come back so we can have this super powered stock market, which is going to have a very strong, great bull market. Great bull markets are rare. The last one we had was in the 90s. More than 20 new technologies have been under development over the past few years and decades and are now poised to move from R&D, because that's done, to market introduction phase and then to market acceptance phase. So we have this momentum that is building simply because we have a whole lot of products. When there is a higher than average number of new technologies that boost business growth, corporate financial improvement, and cause displacement technology, get rid of the old and in with the new, a supernova rally often occurs. These technologies will shape which stocks dominate with huge growth and the economies of the world in the next decade. So we're looking at some new stocks that you've never traded before. You trade the big blue chips, they're safe. You know them, you know the company. These new technologies will create many new big blue chip companies in the next few years for stock trading and long-term investing, and you want to know where to find these and what to do before they become huge. Okay, so a supernova cycle, this happens to be the Apple, and I took it off of Metastock charting software, and it started out really slow years and years ago. Well, we can see this momentum coming from the volume that is going on in this, that the dark pool accumulating Apple before their iPad, before their all their different things that they had, before it was the iPod, then the iPhone, then the iPad, and so on and so forth. So they had all this new technology. Now they've reached this pinnacle cycle, and their cycle is trending down. Even they're still going up, Apple is in a major market saturation contraction because enhancements only go so far, and this recent enhancement hasn't improved the situation. They aren't selling more iPhones. People are happy with the ones they have. So why professionals expect the fall rally to be huge? In the 1980s and into the 1990s, there were 6 major new technologies and a bunch of sub-technologies came in afterward. Semiconductors, PC computers, software for business and consumers, the then new young internet, communications and networking, and stock trading online. So those were the biggies. New technologies that displace or disrupt older technologies are the major force behind every great bull market. The stock market is poised for a massive, and I mean, I've never seen anything like it, displacement technology revolution that is already underway with the first of many new technologies, artificial intelligence. It's very important because it will infiltrate all kinds of technologies that are advancing right now. So it is the catalyst for the future. And I've been in the stock market. My first investment was at the age of 12, so I've been in a very long time. I've seen everything. Artificial intelligence, of course, is now going on, and everybody's saying, oh, it's the end of artificial intelligence. Oh, well, the thing is over. It hasn't even begun yet. Now we're going integrated artificial intelligence, augmented reality, cryptocurrencies. Cryptocurrencies are and technologies are becoming a mainstream financial market. So now we have 12, not 11, 12 mainstream financial markets in the United States. The United States is the largest financial markets in the world. The stock market is so gigantic, you could add all the other stock markets in the world and put them against the US, and it would still be ginormous. The one huge strength that the US has is it has open financial markets that everybody around the world can trade in. It has all of the, most of, not all, most of the huge corporations of the world. And we have a huge stock market that is regulated and safe, because a lot of stock markets aren't. We're also going to see coins, crypto coins, or crypto securities. There's going to be a breakout there because coins are not a security, or tokens and non-fungible tokens. Pretty soon you'll be able to invest or trade in Amazon's huge supply chain that comes across with their own ships and all the inventory in there. You'll be able to trade that. So it's going to be pretty amazing. Integrated advanced robotics manufacturing. The US has been pulling all of their manufacturing. It's just this quiet thing that nobody knows about. But Apple has this huge new US-based manufacturing plant. It's all done with robotics. They're very advanced, very sophisticated. You only need a couple of human beings in the whole gigantic manufacturing plant. Saves a lot of money for the corporations, so they're going to make a lot of money. They're going to have a lot of revenues. They're going to have a lot of earnings, and their stock is going to go up. Robots are replacing human workers everywhere. Amazon now has somewhere between 250,000, 300,000 robots in place in all over the world, replacing, because they couldn't get human workers to work. So they found robots. They created robots to do the work. That's what's happening. That's not good for the wage earner. But what's great for the wage earner is you can now trade as a business. You can have a trader's tax status and trade like a professional. And I can talk about that later. Sensors and image sensor technologies are also advancing rapidly. There's a lot of new technology that is coming out for that. Hyper automation of corporate IT is hidden. You don't know anything about it. The IT departments got all convoluted with the PCs and all that stuff. And they were having 100, 200, 500 people in IT alone. Corporations can't afford that. They have to ratchet down because they're paying higher payrolls. So what they did is that IBM and other companies created hyper automation that takes everything and puts it under umbrella, under one massively huge mainframe. And so they are able to have a very small IT department run this huge thing, and it's far more efficient. A lot of corporations have done that. Most of the giants, most of the top 500 have already, but there's still the other 500 more that are doing it. So that's another area to look at. And there are 8 types of biotechnologies that are rapidly assembling, and the dark bulls, for some reason, have been buying biotechs like crazy. Supply chain reinvention and platooning is coming as well, because they're going to be automating it. There's going to have integrated artificial intelligence. There's going to be hyper automation. So the supply chains are totally changing now that the pandemic is over. So let's talk a little bit, let's take a breather from all those new technologies. And we're going to see that we have an innovation phase. So this is somebody that comes up with a great idea. Steve Jobs says, I hate this stupid cell phone. I hate having to type like this. Why don't I make a smartphone or phone that has a face and I can see things? And he changed everything. Innovators and inventors are incredibly important to corporations. The R&D phase can take a few years to a few decades. It just depends. Introduction phase is where we get the early adopters, the people who are techie like me, who love every new thing that comes out and want to experiment it and then give feedback to the companies on what we don't like or what doesn't work. So that's the introduction phase. And that's where we are. We're right at this cusp of where we are right here in many new technologies. Now that we've gone through that 2 phases, we have the mass market acceptance phase where more and more people go, I have to have a smartphone. I have to have this. I have to have AI in this. Small businesses are going, I gotta have AI. I gotta have AI. And so this is a surge of growth in the product cycle, high demand for product cycle, and it continues on to market dominance phase. 3 companies will dominate in each specific new technology. 3 companies. You know, it was Google, Amazon, and Microsoft in 2010. They were all going for the cloud technology. Guess who won? Amazon. They were the dominant force. Now Microsoft is coming through and pushing through. There's a lot of changes. So there's this constant battle, but there will be 3 top companies, and I always identify them for my students. So if you get into even one, it's sweet. Market saturation phase is when the product has been bought by everyone who could possibly want to own it, and they have to, now they're the slowing down of revenues, and so now the CFO is moving expenses to the balance sheet to keep the expenses low, and that only lasts so long. Then we have market decline phase, where Apple is right now, and it needs to go down, 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 and Apple needs to reinvent, and when it does, it can take anywhere from a couple years. Microsoft took 16 years. Because they had lousy CEOs. CEOs matter. We need to pay attention to that. So new technologies that are coming later, enhanced connectivity technologies. Voice user interface is here, but it's awful. It will improve dramatically. Solid state batteries will be here in a few years. If the first one there, this is a huge investment opportunity. So you should know who is making solid state batteries. Right now, Toyota has the lead. Advanced integrated dark data mining. Everybody wants to know what you think. Everybody wants to know what the chat rooms say. Everybody wants to know if you're part of a guru group. Everybody wants to know who's training who and who's doing what. I keep all of my students in a private area, so nobody can tell what we're doing, because I don't like that they front run. Personalization of internet technologies is coming. I'm not really fond of this because I'm going to have to use some pseudonames so I can get where I want to go, and Google is making a decision for me, and I don't like that. Machine vision and scent identification is coming. Machine facial recognition, we have some, but it's not nearly good enough because faces are very similar. Machine advanced language and audio interpretation is also coming more advanced than what we have now. And machine pressure recognition. So machine, AI, all this stuff is coming very rapidly. And then personalized healthcare using AI has started and is going along nicely. So all of these areas are industries that are going to boom. And we have 130 industries now. We will have 150, 200 industries in the United States in the future years. So let's take a look at the stock market new technology cycle. So we have the early adopter phase. Somebody comes up with a great idea. They present the product out after R&D. It's brand new. Early adopters are crazy people who want to buy everything new, and like the box computers, the little computers that you put together with the PCs and then finally evolves. And early adopters slows it down, because early adopters are going back to the company saying, I don't like this. You need to do this. You need to do that. Oh, Steve Jobs saw that the face of his smartphone scratched. He was furious. Back to the labs. Fix that. Secondary adopter moves the stock up because there are enough of them to move it up, and that's a group that's very important to watch. Then it kind of plateaus a little bit, and then the stock market moves up with this huge velocity as the mass market consumer, everybody wants to buy it. And late adopters who say, well, I have to have one because everybody else has one. And then we have a market saturation phase. This happens with every new technology, every company has a cycle. I'm explaining to you why we have cycles. And when we have a strong bull market, the cycles are shallower, and the runs up are stronger, and the corrections are shallower and shallower until it peaks, and then it falls very rapidly. So this is all important to you with the fall rally and what's coming and this sort of thing, because it gives you confidence. It gives you assurance. Oh, it's correcting a little bit. No big deal. And so you can make more prudent decisions. Market saturation has a decline because there's only so many people that will buy an Apple phone. There's only so many people buying an Android, and that's the end of it. And then it will go into this long, boring, this is actually Microsoft, and will just sit here forever and ever and ever. And then it will attempt to reinvent and then fails and has a lousy CEO. And finally, we get a new CEO right in here after 16 years, and the market takes off because the CEO knows what to do. So, NASDAQ private market. How many of you heard about this great new thing? It's incubation of new startups and small private businesses, technologies. Internet of behaviors. As analyzing your human behavior to maximize and influence your activity. They're trying to change humans. Great, right? Extended reality, distributed ledger technology has been around. It was part of the cloud. It was taking blockchain and making it commercial. It's in phase 3 now. Metaverse is in phase 1, and it's not getting off the ground very well. There's lots and lots of programmers and people trying to make metaverse. It is a long, long, far away thing at this time. Electric solar vehicle technologies are going to have solar technology on the electric vehicle, which will eliminate all the problems of keeping them charged. You want to go from here to Nevada, Washington State to Nevada. As soon as you hit the warm climate, you have that solar panel on top, no problem. Humanoid robots are coming out of Japan. Japan has the oldest aging population in the world, and they have no people to work the jobs. So humanoid robots started in Japanese care facilities for their elderly. They respect their elderly, and so they want the greatest care they have for them. And what they've discovered, and what our nation, the other nations are looking at, is that people who are sick or old trust a humanoid robot and talk to it more than they would a human being. So this is coming to all the other countries very soon. Sensoring, monitoring, advanced wearables are also coming to the market. So we have that coming. And we have decentralization of the monetary systems, huge. We don't need banks anymore, hurrah, 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 because big banks have caused every major bear market in the history of the past 130 years of the US stock. They caused it. Goodbye. Integrated wearables that are self-cleaning. You won't need to wash your clothes anymore. Integrated solar technologies into everything. Integrated alternative energy systems into everything. Quantitative computing technology is coming along very rapidly, and I wouldn't be surprised if we don't start seeing some of that technology at the end of this first decade. Atomic technology fuels are new. Autonomous vehicles are a long ways off, but they are coming. Nanotechnology is phase 2. We had paints, we had metals, we improved. Nanotechnology was an improvement of basic materials. Now we're advancing into actually going in and actually changing the chemistry and the biological aspects of many things with nanotechnology. So where and how to find new technology stocks? Yeah, traders and investors know all about semiconductors, new AI technology that has had the semiconductor industry booming in 2023 and 2024. Many traders assume that this is a brief phase of AI that will end soon. That is misinformation by the banks, who would really love you to think that, oh, this is phasing, we should, and then they want to sell the market short. They always want to sell the market short. They're just determined to do this. Hang in here. We're going to have a really great thank you for you that's free for you today. So the advance is in semiconductors and artificial intelligence applications and uses, and the impact it will have on almost every one of the 130 industries in the US will continue for some time. It's not over. It's just beginning. And we've had these little dips, and we've had these little scares, and we've had sideways things, and we've had bottoms that are taking forever. Yeah, that's the pandemic. Shake it off. It takes a while to get rid of a pandemic. Okay. We are on the cusp of an explosion of new technologies, not at the end. I have never seen in so many new technologies. It is mind-boggling. It will create far more industries than we have now. They're going to have to break them out independently. Biotech has its own industry, 690 stocks in it last time I checked. Choosing new technology industries for stock trading. There are 130 industries in the US. The number is going to grow exponentially over the next decade. They will break it out. They didn't used to be a software industry. There didn't used to be a semiconductor industry, but there will be new technologies based on these. 130 industries is far more than the mere 28 industries that make up the components of the Dow 30 Industrial Average. Why are you looking at the Dow and assuming It speaks for the whole broad base of 6,000 or 7,000 plus 3,000 or 4,000 ETFs, stocks, ETFs, and other derivatives. Why do you think the Dow speaks for the whole broad market? Get over it. It doesn't. It doesn't. It's useless, except for the 28 components that are in it that are all aging technologies, and none of them, except for a couple, are reinventing. Dow 30 Industrial Average typically holds the aging technologies that have reached market saturation, and then they add them to, oh, we need to put this on because now it's going to have dividends, and it's an older company, so it's safe, and it's in market saturation, market decline. So, yeah, and then they get rid of companies who have reinvented and are starting to grow and starting to create new technologies. They get rid of those ones. So don't trust the Dow. The Dow no longer represents the entire stock market anymore and hasn't for several decades. Many of the new technology companies will be coming to IPO from the NASDAQ private market. You can type in NASDAQ private market and go see what's up and coming as far as an IPO. Isn't that cool? And also what price tag they're at. If they're $6, that's not going to be much. If it's $223, well, that's going to be a good IPO. This is a relatively new professional and buy-side institutional marketplace. You are not allowed in it because you're not a professional. Buy-side, also known as dark pools, invest in young startup companies now right from this market, and these companies are growing under the umbrella of the national private market, which gives them an opportunity to shrug off venture capital and all the components of that, and it eliminates the need for underwriters. Yeah, it's a big changing world. This means more IPOs will be strong companies with completed R&D phases and with revenues and earnings instead of IPOing too soon. And the underwriters, $10, $15, they're just trying to get some money from you. And stock tanks because it doesn't have any revenues or earnings. More and more IPOs will be ready to present themselves as a strong company that is growing. And so when you get into that, it's going to be a great stock to trade, great investment. Private means the company is not yet a public company. So it can be private or startups. And there's the mess. And here, $223. I would really pay attention to that one at IPOs. $40 is a good price. Even 30s aren't bad. Discord at 14, Rippling is kind of Ripple is kind of low, is facing SEC regulation problems still. So this, you can go to their website, check it out. Very exciting. Can't trade it. Now, there's a huge difference between how professionals trade and how you trade. And you have Metastock, and Metastock is amazing. I love Metastock. I've written indicators for it. I've written tools for it. I've written scans and sorts for it for all my students so they can just, it's all set into Metastock when they become a student. All they have to do is start trading. It's awesome. But they do have different things that they're going on. So we want to follow the buy zones of dark pools and professional traders' footprints. We don't need their technology. We have Metastock. We don't need their technology that costs $10 or $20 or $50,000 a month. We can get Metastock for $69 or $200. If you want the live event, you can get it for more. So that's great. So the IPO market has changed. You need to know this. The reliance on venture capital rounds or private individual venture investments, I used to be a private individual investor, is ending. The NASDAQ private market is an exchange where smaller companies and startups can have the opportunity to grow with investments from the buy-side institutions. This cuts out the money center banks' huge profits from underwriting IPOs. They used to buy all the shares and then they jack up the price 50 to 100%. And sell it to the buy-side institutions, then they jack it up again for you. And then, of course, the stock tanks. Buy-side investment money will give the company a huge head start before it IPOs. Instead of IPOing too soon, before R&D is completed and without revenues, startups can be listed on the NASDAQ private market and sell stock to buy-side institutions to grow. It's super cool. Finding stocks to trade in the fall rally. There are some basic rules and methods for finding stocks that have patterns that indicate dark pool accumulation. Dark pool accumulation, dark pool accumulation. If they're accumulating, that stock will eventually have momentum. Dark pool zones are followed by professional traders, nudges, and setups. And I teach this to my students. What you have to remember is the professional side trades on the millisecond, that's 60,000 times a minute. So you have seconds. So you have lots of transactions. And every time you type in a trade into your broker, everybody can see it. Slip. These trigger huge HFT gaps, ups, and stocks because professional traders do little nudges and then HFT gaps up. Wouldn't you like to get into more of those gap ups? They're fun. The result is momentum runs as smaller funds, and then your retail groups such as you create huge speculative runs because you see this running and you think, I got to get in, I got to get in. Most retail traders get in late and are chasing stocks rather than sitting back and enjoying the ride up. When a stock is already running speculatively, professional traders start taking huge profits, but they can take it on the ping on the penny or half penny spread. So they don't cause the runs down. Okay. So you got to pay attention. You got to learn that using scans to find potential stocks. TechnoTrader embedded scans for MetaStock combined with sorting criteria to speed up your stock pick selection by reducing the thousands of stocks to a few that meet your personal criteria. Using scans to create a watch list of stocks for momentum swing trading or day trading or trading is a simple and easy way to improve your profit margin with less time, effort, and work. The thing with momentum is nowadays it starts with this itty bitty teeny weeny candle that doesn't move price. You've got to pay attention to the new candlestick patterns and stuff, and I teach them because the old books were great, but the reversals and continuations didn't have a millisecond scale penny spread. The penny spreads have changed everything. Some of the fastest moving stocks are not big blue chip stocks, but stocks you have never heard about yet, but are creating these new technologies. And the buy side is going, oh, why? Oh, let's get into this stock. Oh, let's get into that stock, because they like to buy bargain prices. Why? The dark pool buy side institutions often hold 80 to 100% or even higher of all the outstanding shares of a fast growing new technology. You can go to NASDAQ or other companies and you can see what percentage are held by institutions, and the giant institutions will be listed. Sometimes I see a stock that has 120% institutional ownership. How can that happen? They went to the company itself and they bought shares of stock, and those shares haven't been included in the outstanding shares yet. So the percentage goes down. That's another indication that you want to get into that stock. You want to put it on a watch list. When that many shares are held in trust accounts, buying by HFTs and pro traders creates a huge energy that results in either a velocity run, which is a straight up shoot up run, or a momentum run, which is one that steps back a little. Both are ideal for high income generated trades this fall. You want to be in these. You want to learn how to trade these. MetaStock charting software has excellent tools for scans. TechnoTrader scans and MetaStock are provided to each student. So you have this in the thing. They are part of our system. So here are a whole list of our scans. We have a ton of them. They set it out. They give you all these kinds of information. MetaStock chart layouts are awesome. We also give you the proper aspect ratio for a golden rectangle, which is imperative. I'll show you one in a minute. These are all important in the explorers. I call them scans because I'm old. But the explorations are great. And it's a way of sorting through thousands of stocks very, very quickly and finding those with buy-side institutional accumulation or pro traders nudges, which is what you want to chase, get in with, and then let it go. What is a watch list? A lot of people say, what is a watch list? A watch list is just what the name implies. A list of stocks to check every day if you're a day or swing trader until a buy entry signal that is a pro trader based on pro trader candlestick patterns. Watch lists are easy to set up in your MetaStock charting software based on any criteria you wish. Then it is a matter of quickly checking the chart after the market closes to find the excellent entry signals for the next trading day. Woo-hoo. Make it easy, make it simple. You don't have to listen to retail news. You don't have to listen to any of that. You just go looking for this stuff. Whether you swing trade, platform position trade, which is a longer hold, or day trade, watch lists will make your trading more profitable, simpler and more reliable because you will see the signals. A lot of times you are using moving averages and things, and the price has to move up. The pros don't move price that way anymore. So ETF strategies for fall rallies. You can also use ETFs for fall rallies, and you can find those that are moving up. This is the SPY. This is a buy signal right here. And we have the indicators below. So this is a golden rectangle. It's very important to have your aspect ratio so that the candles are not skewed and distort sense of volatility. The market moves sideways. The market moves sideways. The market moves sideways. The market moves sideways, 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 sideways. Why does it move sideways? Because the dark pools, buy-side institutions, control price, and they wanted to stay at a certain price when they're buying, and they have all the money. They have $150 trillion in assets under management right now. Do you think they worry about the U.S. debt? They could pay it off like that. So they control price, they manage it. If price goes down too far, then you'll have a little nudge here because price has gone to below its fundamental values. So there's all kinds of things to learn, because when you look at a chart, when I look at a chart, I see bipolar buy zones, I see fundamental level values, I see the changes going on, I see more than black and white candles. And that's what the professionals see, because I'm a professional, they also see it that way. Professional traders and nudges and setups happen way before these speculative moves. You see these runs and your heart starts palpitating and your blood pressure starts going up. And then it goes up even further, and it goes up even further, and you get in here, and then you have a loss. If you have a watch list of this stock, you would see that there's nudges going on in here, and a little push, and a little push, and a little minor retracement. No big deal. Like Jeff says, these retracements are common. No big deal. And then it moves up, and then a little sideways pattern because everybody's trying to sell because they think that's the end of it. And like Jeff said, you know, it's just a little correction, no big deal. And then boom, up it goes. Lovely, lovely. And the indicators that I have show dark pool accumulation indicators, shift of sentiment patterns as they start to get in. So this really helps, because now you're looking at the chart and you're not looking at it as black and white candles or volatility or anything like that. You're looking at it as a language of the market, as a piece of music or a piece of programming that's telling you exactly what's going on. Isn't that sweet? Is the market volatile? Oh, the market's volatile, up and down and up and down and up and down. It's not volatile. It moves sideways now more than it ever has in the history of the stock market. Why? Because we have penny spreads, and we have millisecond trading, and we have controlled bracketed orders, TWACs, and other controlled bracketed orders. We teach a controlled bracketed order that keeps your stock doing that price entry safe, instead of a limit order where you could put a limit order and it buys you in, and then the stock goes down and you get depressed, and so you sell and sell at loss, and then the stock market's moving. The stock starts moving up again. Don't do that. Just stop doing that. Limit orders buy you into weakness. You need a controlled bracketed order entry system. And these are the indicators that come with the course, and they're extremely reliable. Tools for consistently successful trading in a fall rally. You need market condition analysis. This is my creation. I created it many years ago for my trading floor. And I wanted to make sure that all my traders could know what the market's going to do, because futures don't tell you what the market is going to do the rest of the day. They only tell you what the indexes are going to open at. That's all they tell you. Relational technical analysis is my advanced and technical analysis. It goes beyond the study of TA. All of you have learned TA, and that's great, but now you need to learn the relational aspects. Trade management planner, you need to plan your month out, and we have a little free course that shows you how to do that on our website. A daily trading journal. If you ever want to be more than a hobby trader in the eyes of the IRS and have to fill out all those long sheets and everything, or whatever you have to do for your own country, you need to get a trading journal. I give out my trading journal layout to my students. Metastock charting software that includes scans and sorts. Yay, we need Metastock. Great company, really, really good company. I don't recommend many companies. Metastock is the premier company we recommend these days for all of our students. Hybrid leading indicators, which I have embedded in Metastock. Hybrid leading means they lead price. I have an indicator that when it goes up and it's still a white candle, is saying sell, sell, oh sell today, because the next day it's either a pro trader nudge down or a sell down. Controlled bracketed order types. Howard created a controlled bracketed order type that we still use, and it has been stood the test of time. When he asked a market maker named Herzog from the New York Stock Exchange, I will never forget my shock that he was talking to a market maker to check out to make sure his bracketed order was a good idea for our students. The market maker said, could you please let me use your controlled bracketed order type on my floor? And Howard was so smitten, he says, sure. And so to this day, you are trading a professional controlled bracket order that is used by professionals. Buy entry signals, sell entry signals, not continuation or reversal patterns. The professional nudges. Exit signals or trailing profit stops for taking profits. We go into it in a lot of different ways that approach it completely different as a professional. Run gain potential calculation. Are the runs getting longer or are they getting shorter? Do you do this calculation? Because it tells you whether it's a good idea to get into that run or not. Trade calculators that we've created that are come with the course, accurate risk analysis that comes with the course, stop loss placement, entry price, share lot price, price range, risk to profit ratio, estimated hold time, and exits. Professionals have it all laid out, like Jeff was trying to show you. But we go a little bit further on this, a little more detail, because I'm teaching professionals as well as retail. You want to do trading as a business. You want to have a trader's tax status. You want to stop having to fill out all those ugly forms. You want to be able to take off all of your expenses of trading, including Metastock and your course from TechnoTrader. Yeah, you need to become a student. Okay, so I have market condition analysis scans. The scans are 7 that I created many years ago. They stood the test of time. I say, give me all these stocks that are trading with high momentum to the upside. Give me all the stocks that are trading with high momentum to the downside. I compare the two. That's the bias of the market for the next trading day. I say, okay, how many stocks are under institutional accumulation and HFT activity? And this gives me where the institutions are, because I can see the stocks. It brings up the stocks. And I say, how many stocks are in bottoming formations? This tells me how many stocks are bottoming in short-term, long-term, and intermediate term, and where to find stocks that are going to, a bottom creates momentum. And it's hidden nowadays, it's pressing down. So you want to find all these bottoming stocks before they complete, because they take off like rockets. Consolidation scans are for finding pro trader nudges. And overbought is for when the market is actually turning into an intermediate term or bear market. It has been very low for a long time. We don't have any risk of that at all. And then I compare price over time. So I say, give me, compare the price of this number of days back to this current price, and is price improving or not? This tells me whether we're in a sideways or choppy market. So these are all provided to you in Metastock. It's amazing. Everybody likes it. It gives you all kinds of information. Metastock is astounding, so you want to have Metastock. Understanding large lot versus small lot. The fall rally is the largest rally of the year. The biggest fall rally occurs in cycles about 8 to 12 years. However, most retail traders miss out on the big runs. Retail traders use recommended stocks or chat room stocks or stocks in the news. You can't do that anymore, folks. You can't run with the herd because they're late, very late. They often see a stock running and then rush to buy the stock only to have the run suddenly reverse for a loss. You shouldn't be taking losses, very few. This is due to the balance of power between small lots and large lots. Small lots win. Retail traders, small lots, are always going to lose. The professionals in the market trade large lots. The average lot size for a professional trader that I have trained is 1 million to 5 million share lot. Okay, so those 500,000 share lots are 100. So what we have, Metastock charting software shows us that this downtrend is running. All of a sudden, the brakes are putting on, the brakes. Oh, and then all of a sudden it stops. Bottoming formation, buy zone, and pro traders nudges running up, and another pro traders running up and up. Before it even completes its bottom, we have a bottom formation, and the buy side institutions are who create the bottoms every single time. You want to know what it looks like. You want to know how to trade it. You want to use it. Fall rally indicators. This means you need more than price and time indicators like MACD, stochastics, RSI. MACD was in the 60s, stochastics in the 50s, RSI in the 70s. What you really need are the large lot versus small lot hybrid leading indicators that didn't exist in those eras. Didn't need them. These new professional level indicators show you which side of the transaction the large lot was on. Are they selling or are they buying? Because eventually they're going to move that price in that direction. You don't want to be in the wrong place, and you are. Hybrid leading indicators actually indicate before the price moves. They signal you. These are based on uptick, downtick price action. What we're doing is we're looking at volume, large lot versus small lot, and so on. Most have very complicated formulas and were written for the modern automated marketplace. So, Metastock custom hybrid leading indicators are included with our course. They are unique, and I have to teach you how to use them. They are not available. I keep all of my things private rather than public because I don't want all my hard work smushed into ugliness and uselessness. I want it to be something you learn how to use properly and are successful. I put too much time and energy. I have tons of money in these. Common HFT and DP technical patterns. In the Methodology Essentials course, you will learn the shift of sentiment, one of the most important indicator signals you will learn. This is a combination of candlestick patterns and large lot hybrid leading indicators. The shift of sentiment patterns occurs as HFTs search for dark pools draws of liquidity. At times, HFTs trigger orders accidentally trading against the dark pools. They make mistakes. It's just a computer. This creates a temporary one-day sell down, which often reverses the next day. Why? Extreme price action is caused by HFTs. The shift of sentiment occurs prior to the HFT action on the upside. So when the HFT realizes it's on the wrong side, then it shifts to the upside and moves with the momentum. Candlesticks have a specific pattern and formation on the chart. So you want to make sure that you have these indicators to tell you which direction it's going to go. Because you're here and you're thinking, oh, sell short. Boop. Oh, I've lost money. Well, because you didn't understand the chart. That's all it is. Everything you've learned is useful, but you have to do more. Who controls price wins? You need to learn the market participant groups. Giant buy-side institutions, sell-side institutions, money-centered banks, and all that. They short-term trade. These are long-term investors. Professional traders, floor traders, proprietary, also called prop desk traders, independents, and so on. They're actively trading, and they're making tons of money. The billionaires of the US and globally are long-term investors, high-frequency trading firms, fully automated, large to mid-size asset management companies also are in the mix. Retail side, small funds managers with less than $3 billion under management. If they have less than $3 billion under management, they're retail, and they haven't got a clue what they're doing. They need Metastock charting software. They need to learn technical analysis, but they all think they can figure it out with the fundamentals. Get real. Retail traders, independent, and so on. We have memes, we have trading groups, and we have retail investors, AII, Investor Business Daily, meme stock traders. Odd lot, fraction lots are retail traders new to the market, and they don't have any money. So they're gamblers. They want to get rich. They think the stock market is a lottery. This group thinks the stock market is a lottery. Oftentimes, this group thinks the market is a lottery. Learn relational technical analysis. Relational technical analysis is the evolution of technical analysis. It's an advanced course. It includes being able to see the fundamental levels within price patterns. This is taught in the premier and elite courses. The concept is based on an understanding of all parameters and data that is present in the chart at any given time. If you have taken other stock trading courses and are not making high income, then this is what is missing in your education. Everything you've learned is usable and keepable, but you have giant holes in your education. Identifying which market participant group controls price at that time is crucial to developing a good professional level trader income. So, from the professional side, fall rallies are a high energy trading activity, upside action to speculation. Stocks tend to run longer and have more velocity. Often day traders or swing traders who are trading with scared money will take tiny profits and lose out on the huge profits. I want you to stop doing that. It is common for stocks to gap up and open up with long white candles. Therefore, it is imperative to be ahead of such fast price movement instead of chasing it. Learning to read candlestick charts and to recognize the entry signals that professional traders create by using hybrid leading indicators will be a huge advantage to you during the fall rally and thereafter. Trading stocks is a skill. Learning spatial pattern recognition skills is part of the Methodology Essentials course with Metastock charting software. There are many trading tools, new skills, and new order types that only TechnoTrader teaches because we teach in a professional manner. So, trading tools. The final pieces are your trading journal, which I talked about before, your personal trade management planner you need to have, your trade calculators to get rid of mathematical mistakes, scans, sorts, layouts, and parameters for your trading style, Metastock based. Trading simulator, it has to be a real simulator, not a game. Market condition analysis scans, which are embedded in your Metastock when you become a student. Controlled bracketed order types, what are taught in the course. A broker account that is intended for trading. I'm sorry, guys, but Robinhood on your phone doesn't work. Morning market reports from me to help you show you where to trade, how to find stocks. I give you 2 stocks each day to study. Daily market educators, discussion groups, and communities within the TechnoTrader students only campus that nobody can get into but students. Yeah, I know what I'm doing. Summary. The TechnoTrader difference. You are learning from professionals rather than retail traders. You can learn a lot from retail traders. You can learn a lot from retail gurus, but it's not enough if you really want to make them big bucks. We have been in business for 26 years. We have a stellar Better Business rating, and it's astounding. The TechnoTrader staff continually updates and improves the quality of our education because we're always learning. I'm always learning every day. I say, Martha, you don't know everything about the stock market. What are you going to learn today? Because I know that it's constantly changing. We keep our students up to date with all the new trading instruments, changes to the internal market structure that you never hear about, and how the professionals are trading the market. We have many communities and discussion groups where professional level students and beginners can share ideas. Now, wouldn't that be cool? You're a beginner and you could listen to a professional level student. Wow, where can you get that? Not in your chat rooms. TechnoTrader has the most extensive support, guidance, and mentoring and so on, with access to vast library of help files, articles, and evolving market structure. We offer different courses designed around your individual training needs. So you may only need this or that. Some students advance to professional level, and some of my students have gone on to work for institutions. I'm very proud of them. The one manages a $100 million hedge fund. The course can be taken at your pace when you have time and when you're ready to learn. Our courses contain the body of knowledge, experience, and expertise of Howard Johnson and me. This foundation of knowledge is taught nowhere else. You have to be a student. So that's the only criteria. Steve was a student of mine. He's in the front few months of volatile curve offsetter for IMC for their SPX group. And they are profited from the second best profit producing market making group currently in the world. I worked for Consolidated Trading, a smaller prop group, for 14 years, mostly as a SPX floor trader before working for IMC. These Dutch firms both profited over $1 billion. This is huge. The skills you have taught me have made me, I think, one of the most elite traders in Chicago. Thank you, Steve. I think you are the best educator I have ever learned from. The respect I have for you cannot be told in words, but God bless you and all you do for this community of professionals and retail traders. You really are one of a kind, and I have never learned from someone who is so driven and so passionate. I strive to share this motivation in my own career, so much thanks. So that's one of my professional students. So if you're not yet convinced, that's okay. You will be. Visit technotrader.courses. Jeff can type that into your feed box. This is our most popular for people who have been trading for a while. It's how to put together a professional trading plan, because you need one. You need to have a plan instead of just going, oh, let me see, what am I going to trade today? Leading candlestick patterns teach the modern candlesticks, the nudges, the pole vaults, the hurdles, the push, all these others that are brand new that are not taught in the candlestick books. Swing trading, how professionals trade 1 million shares or 5 million shares. How do you swing larger lots, or how do you swing with, and how do you trade with the professionals? These are all free. You just have to register for them. We don't harass you. If you don't like it, you can just unsubscribe, no problem. If you do subscribe, you get the Profit Hunter, and that's super cool because that's an area where you can study also. We have 3 methodologies: Standard, Premier, and Elite. The Standard is for my beginners. Yes, I want this only means that you get to go and see the the course outline and the syllabus. What are you going to learn? Why are our courses different? How does this work? So these are just all how you get that very long list of all the things that we have. The Premier is for people who are maybe 2 to 5 or more years. They're wanting to trade successfully. They're going to be retail traders. They're very happy. This Elite course is for people who are professionals, who are trying to get a CMT, or for people who want to have the trader tax status trading as a business so they can write off all their business expenses, their Metastock charting software, their education from us, their expenses for their desk, and expenses for electricity, expenses for a new computer, an expense for a tablet so they can trade while they're on vacation, this type of thing. That's what this is for. And it's designed as a very in-depth. The Trading Entrepreneur course is brand new. It's on right now. I will let a few more people in. We just started it. And it is teaching you exactly what you need to do to set up as trader tax status for the IRS step by step. So if you're interested in that, you can give us a call. And your free gift, if you've all stayed put and waited, is huge. This is my most popular report I write every year. I write sector and industry reports. I write the market structure report. I have special reports that I write, new technology reports, all these things that I write each year. It's pithy. It shows you in what's going on the professional side of the marketplace. It helps you to start understanding how to position yourself. This is the first thing my Elite and Premier students read. And every single student says it is mind-blowing. They had no idea. It is so full of information they have never heard of before because they've been on the retail side. But even my professionals, I have professionals who just say, you know, I'm a professional, I want to buy your market structure report for this year, and they pay $1,000. You can get it with your Premier or your Elite course when you sign up as a student. You can also get it free for 1 hour, because this is a big gift from me to you. Because I would really like you guys to raise your expectations, to get more into this, to say, all right, this is so cool. I can really make money. And stop thinking that $200 a day is a lot of money. It doesn't even pay your expenses. So for 1 hour, Jeff, you can either use the QR code, or Jeff can type this in for me. This is free for 1 hour. You get an introduction to the modern structure. What does it really look like inside the professional side? Market participant groups and how they really function, way more than I taught today. And the changing market structure, where is it going this year, next year, what's happening? And this is so important. So if you can get this and get in, that you will find it extremely useful. And this is my gift to you for putting up with my craziness and all of my stuff that I do when I teach, because I have a great passion for teaching. And now I will take some questions. We have 2 minutes or 3 minutes left.
Yeah, okay. I got the link in there too, so click on it. Cool. Martha, Bob says, I bought a couple courses from you. I'm wondering what the best indicators are for swing trading the SPY and Qs.
The SPY and Qs, again, anytime you are trading an ETF, you have to remember that it's not a stock. You're trading a derivative. So the derivatives, the best indicators for that are your indicators that are showing dark pool, quiet accumulation, like TTQA, TTVA volume, your TTVA volume oscillator, and volume are the critical ones to watch. Those are the ones that you need for swing trading.
Cool. Let's see. Steve says, awesome presentation, Martha. Are you exhibiting dark pool accumulation?
Am I exhibiting? I'm sorry, I don't really know what that means.
Okay, all right.
Do I see dark pool accumulation right now?
Do your indicators, I think
Yes,
what,
yes, that's what the
yeah.
indicators are all about. I wanted to be able to see the dark pool quiet accumulation. And they're unique indicators because they work very differently. Actually, there are 25 giant buy-side institutions, so their gray bars are lower. When smaller funds are buying, then they turn bright green and are spiking off the chart. So it's a very interesting indicator because you don't expect it to behave the way it does. That's why I have to teach it to you, to show you how to do it. It's a big part of the course.
Let's see, Marlene Watt says, what do you mean by saying moving expenses to the balance sheet later in the market cycle?
The GAAP, General Accounting Principles for the US, allow CFOs to take certain expenses, things that would normally be expensed because they would be used or exhausted within 1 year, and move them to the balance sheet. Okay, you can have software development and you could say, well, let's move that to the balance sheet as a long-term asset, or you could keep it as an expense. That's just one example. There's tons of these things. So as revenues start to decline, they know that all of you only worry about earnings. It's like, don't do that. You have to worry about both, and you have to worry about quarterly. Dump the yearly. Please don't use the yearly. Worthless. It's ancient history. So they look at their expenses and they say, we to the CEO, the CFO says, we can move this to the balance sheet as a depreciable deduction. So they depreciate it over 5 or 10 years instead of an expense. When they take the expenses off and move them to the balance sheet, what does that do to the earnings? It takes some of the expenses away from the earnings. So the earnings go up. So now you have a stock that reports great earnings, but weak revenues. Everybody buys the stock because it has great earnings. And this is meeting year over year. And it's like, oh, and of course it goes down. Because they've manipulated there, and it's legal, perfectly legal. When you see expenses moving up and revenues have been declining, they have done this.
Bob wants to know, how do pros control price in a very small candle for the whole day? Do they buy and sell all day in a small range?
They have a small range that they tick on, and because they're in the dark pools and not on public exchanges, they have access to vast quantities of money coming in, and they can also reach out to the public side and pull something in, but they're on the millisecond, so they can strike that penny millisecond, hold, millisecond, so they can actually catch that. Because intraday doesn't show you all the movement of price action. It just shows you the minute. Within that minute are milliseconds.
All right, and then let's say, and for your trading, do you recommend intraday or overnight for the S&Ps and the Qs?
I recommend overnight because intraday doesn't have all the data. Intraday only has the public exchanges. You have to wait until all the money is in, all the orders are in. The dark pools delay their orders until after the market closes, and then they send them to the national clearinghouses. So end of day on an intra, you don't have all the data. So you have to go and wait for a couple hours. And my market condition scans change that, and they actually show that accumulate all those orders coming in into Metastock. And then I go and study it and see, okay, what's going on here? Because it changes the indicators, changes volume, it changes. And I see it every day.
All right, last question. Steve wanted to know, does the ticker symbol U exhibit dark pool accumulation? You might not be able to actually answer that one on the fly.
If you send your question to info@technintrader.com, I'll print off a chart for you and tell you what it is, okay?
Perfect. All right, very cool. That's it. We got through all of them.
All right, thanks. All right,
Cool.
well, have fun. I enjoyed it. I hope you loved it. I did. I love
Links
teaching.
in the chat. Martha, I always enjoy it when you come talk. Always.
Thanks. All right, see you guys later.
All right, thank you very much. We'll go ahead and kind of do this. And you can find her at ttrader.im/ms2409, or just click the link in the chat. That'll work too. Thank you very much, Martha. Let me go ahead and do this. I'm going to go ahead and do this. And then I'm going to go ahead and make myself the presenter real quick. Now, Vince, Vora, can I just ask if you're in the house right now? Are you available? Okay. If so, let's go.
I don't see his.
Hi, Jeff. Can you hear me?
Okay, yeah. I thought you might be logged in under Martha Stokes. I sent you the wrong login link. You're showing up as Martha Stokes.
Oh.
I had a hunch that, and that was my fault. But yeah, the thing is like if you go to just file, edit your name and email, you can change your name, and then that way you don't have to do the whole presentation as Martha Stokes.
Okay.
While you're doing that, I am going to go ahead and just kind of, that was all you had to do.
Right. Nice and simple.
Yeah. Let's go ahead and kind of transition real quick. Here, let me do this. Thanks for coming, everybody. Hope you're enjoying yourself. You should be able to see my screen. Again, the special offer we're doing for Metastock is if you want to buy a month, we'll give you a second and third month for free. Metastock DC, our end of day version, is $69 a month. See how many uses there are as we go through the week today. But you can do that at metastock.com/conf promo. You can go to metastock.com/sales chat, or you can give us a call at 800-882-3040. So I do want to say thank you real quickly to AAII.com. Hugely consequential nonprofit. They've been doing it for a long time. And I'm sure you've heard of the AAII Investor Sentiment Survey. That's them. They do a lot of research into companies. It's both fundamentally based, and as you saw with Raymond earlier, they also have an active investor that also focuses on a more active type of thing. So if you're interested in finding out about AAII, you can go to AAII.com. We appreciate them for sponsoring the event and kind of all the work that they've done with us to help us. So with that being said, we're going to move directly into our next speaker, Vince Vora, who is now labeled Vince Vora. Vince has been a fan of Metastock, or a friend of Metastock for a number of years. We've done a ton of work with him. Absolutely love kind of the develop. I've learned a lot actually kind of helping Vince with his methodologies, and not necessarily creating them, but getting him kind of plugged into Metastock. And he is a prolific and great system designer. The thing I like about Vince, and I always say this, but Vince can kind of tell you an idea and you get it. And I love the simplicity in which I can understand the things that he's talking about. And I think that goes personally to him as a trainer and being able to convey stuff in a good manner. So with all that being said, Vince, let's go ahead and get you started. I'll send you an unmute.
I'm sorry, I had it muted. How are you, Jeff? Now I can
problem.
hear you.
We always consider the mute button our nemesis here. Let me go ahead and put the presentation to you. And I can hear you. I can see that your camera's on, and I can see your screen. So I'm going to get out of the way. It's all yours.
All right. Thank you so much. I appreciate the invite again. I love doing these events. And as Jeff said earlier, I am actually a big fan of Metastock. We've been working together for about a decade now, and it's been great. The team over at Metastock, from Jeff to Kelly and William, and the whole team there, the sales team, the support team, they're fantastic. And I love working with them. I'm here to demo Victory 2.0. This is a system. Victory is one we programmed, I think it was late 2019 or so, just before the pandemic hit, and we've been trading with it ever since. And now we've made some upgrades and have come out with the 2.0 version. And Jeff just made another upgrade a couple of days ago, so I'll be happy to share that with you. Bit about myself. I'm Vince Vora, the head trader at Trading Winds, and I have been doing this for quite some time, getting close to 40 years now. So it's been quite a ride. I've done just about everything every part of this business, but one of the things that I've enjoyed most is coaching, and that's what I've focused on over the past 6-7 years, and it's fantastic. We have a group at Trading Winds, a membership group that we meet with 3 times a week over Zoom live. I just got off one of the calls now, actually. I'll tell you more about that as we go through, but great group of traders, and just love doing this. Before I get to the actual presentation, I do have to remind everyone that trading can be risky, so please don't trade with real money until you're comfortable doing so. But that's what we're here for, really, at Trading Winds, and that is to minimize risk, to teach you how you can do this without taking a lot of risk or you know, investing a lot of money at all, to do this the right way. If you follow just a short list of rules, you can do this in a very safe and consistent manner, and I hope to show you that throughout this presentation. So let's get to it. Let me bring up my Metastock platform, and what you see on here is our Victory 2.0 add-on. I want to take a few minutes just to explain all these symbols, what they mean, and then show you through examples exactly how we go about trading with this method. And then I also, I'm going to go through, before the end of the presentation, a couple of weeks of the trade ideas that we've shared with our members over the last couple of weeks. We keep a spreadsheet and where we track everything on a nightly basis, and I'll show you what we've done over the past couple of weeks. But let's start by explaining what we see on the screen. And one thing, by the way, this is interactive. I want it to be as interactive as possible. So please, if you have a question, type it into your chat. I will try to monitor the chats, but I know Jeff is there keeping an eye on it as well. Jeff, feel free to interrupt me with questions at any time. And also, if there's a symbol that you want me to bring up, you want to see how Victory would have handled that particular symbol, whether it's something you're thinking of trading, it's something you've traded in the past, or something that you like to trade on a regular basis, by all means, type it into the chat and I'll bring it up. This is a system that is based solely on technical analysis. You can absolutely marry it with fundamental analysis, absolutely, but it's unnecessary. This is based solely on technicals. It will work on any type of market, whether you're trading an index, an ETF, futures contract, a Forex pair, an individual stock, using options, crypto, you name it, anything, any time frame, whether you're a 1 minute, 3 minute, 5 minute trader, whether you're more of a swing trader, daily, weekly, whether you're an investor, trading on monthly time frame, and it doesn't even matter where you are in the world. And this will work on any exchange. Before we released it, we tested it on the market over in India, the Nifty 50, in Australia, the UK, Canada, US, across Europe. So it works consistently across the board. Okay, what you see here, first and foremost, is this blue line. And as I hover over it, I'm going to show you that it's just a 20-period simple moving average. That is something I've always traded with, something that I will always trade with. And the main reason is it helps me spot momentum. Okay, so in order to gain an edge when you're trading, there are 2 things that you want to make sure you're always doing. You want to make sure that you're trading with the current trend. So you need to spot what the trend is, whether it's up or down, or whether there's no trend at all, whether it's a consolidating market. That's helpful to know as well. But you need to spot the trend, and then you need to know what kind of momentum there is behind that trend. Is it a slight momentum? Is it a very strong momentum? That's what you need to know. That's where the 20-period moving average comes in. So what we focus on specifically with the 20 MA is its slope. When we're trading to the long side, what we want is this blue line to be sloping upward from bottom left to top right. And the higher the degree of slope, the more momentum there is behind that trade. The reverse is true when you're looking to short something or trade, or you're expecting something to drop. What you want to do is first identify that there is a trend to the downside. These, what you see here, are not trends. But when you get a sustained trend lower, you want to make sure that that 20-period moving average is sloping lower. It's sloping with the trend, okay? And again, the higher the degree of slope lower, the better it is for you. Okay, now, you're also going to see a bunch of arrows and dots and these little TPs that you see here. The arrows are obviously, it's when the system is alerting you that it is a good time. It may be a good time to enter. And if it's a green arrow, obviously it's to the long side. A red arrow is to the short side. Now they can also be used as exits as well. What I want you to remember about victory is that whenever there's a color change, so in other words, if we were long throughout here, if we owned, this is the SPY, by the way, the ETF for the S&P 500. If we were long, and then we see a color change from green to red, we want to exit our full position at that point. Sometimes you will see an exit symbol. Other times, it'll just go from buy to short, okay? Either way, I want you to remember that any color change means you exit. It doesn't necessarily mean that you're going to get short there. There are certain rules that we need to see, certain criteria that has to come together in order for us to take a trade, be it long or short. We have a checklist of 8 items, which we'll give you. And if you can meet all 8, you enter. If you cannot, you simply don't. But you do, if there's a change in color, treat it like an exit and get out of there, okay? Sometimes what will happen is it'll get you out and then it'll immediately get you back in. If, again, as long as this one, similar to this one, meets all the criteria. If that happens, you get right back in, okay? Now, whenever we go long, something like this with an arrow, let's say you get a green arrow like this and you were to go long. If you see a green dot here, that means that the same criteria that came together with the algorithm back here has come together here again. But the reason why we don't, if you look at the little box as I hover over it, it says long RE, that's long re-entry, okay? The reason why I don't call it a buy or just a long is because we're already in a trade. So if you missed this one, you can now get in, or if you did take this one, now you can add to this position. Add here, add, change of color, you exit everything, okay? The take profits here are just suggested levels, good areas where we think it's good to take some off the table. We like to scale out of our positions. Now, with this indicator comes a package of 2 training classes that you'll get. And in there, we go into more detail as to how we like to scale out of a trade. We like to identify targets overhead using prior pivot highs, using Fibonacci's, etc. We'll teach you all of that. Where there's definite levels where we like to scale off. What I like to do is I like to put on a position and then take a third off at one level, a third at another level, and then let the final portion run until we get a change of color, okay? Another way of doing it is you can enter, take some profit, put that back on if you get a re-entry, take more off, put it back on, take more off, put it back on, etc. along the way. It's totally customizable to your approach. Every trader is different. We have a slightly different style. Some find it very easy to enter and just wait for the exit and do nothing in between. Others get very anxious, are not as disciplined, need a little more help along the way. And that's why we designed it this way. But one of the things that is most helpful about victory is that once you do enter a position, long, for example, here, all the bars you'll notice are colored green until the system tells us to get out of there, okay? A reason being is for you to stay relaxed and help you stay disciplined and remain in that trade for as long as possible. A lot of people, especially the ones just starting out, right? When they get in and it starts going their way, they're happy, they're not nervous, they're good holding it. But as soon as you get a couple of bars, red bars going in the opposite direction, they start to worry whether they're going to give it all back, whether it's going to turn into a loser, etc. And they tend to get out of there too quickly and then only to watch it continue going higher. So we thought if we did all the bars in the same color, it would help you stay in. Now, before I go any further and describe the other symbols, I do want to say that this is completely customizable. So for example, if you didn't want to take profits where the system is suggesting you take some profits here, right? If you just wanted to buy and hold the whole way, all you need to do is go to here, where is it here? Expert Advisor, okay? Go to Expert Properties. You're gonna get this up, just hit cancel. And here it is, all these symbols pop up. So there's the long, the short, the re-entries, the take profits, etc. All you have to do is just uncheck those, right? Click OK, and it will remove those. So it's totally customizable. So you get to choose which symbols you work with, which ones you don't, okay? It's a great feature. Now, the other thing is that there are two types of arrows here, and we don't see many of them on this particular chart. But what you will notice is that there are some that are smaller and lighter, green or red, and others, see these reds, are thicker and darker, right? So that's one of the upgrades from the original version to now, is some of the bigger ones that are darker, like this, are what we call high probability. Okay, there's regular longs and then there's HPB, which are high probability. It works both on the short and the long side. Just an added feature. The high probability ones, the difference between them, they have a couple more layers of different indicators in the background that have come together to show us the same direction. So there's two more layers of confirmation with the high probability ones versus the regular ones. But I will tell you that the most important thing here that I want you to focus on throughout this presentation as we look at these symbols is the slope on the 20. The intent here is not to take every single symbol. For example, these are not short symbols that we would take. We would not go short in here at all. Not here, not here, not here, okay? But we absolutely want to go long here and here and here and here, etc. And again, I'll go through these rules in a second, but what we want is clear trend and clear momentum on our side. So as I flip through these charts, if you look at the areas that have clear trend, clear momentum, you're going to notice that the majority, the vast majority of these are winners. And again, I'll show you the recent trades we've had over the last couple of weeks and show you a typical example of what we do here, okay? Another big part of this are what you see at the bottom here, these two ribbons. Now, if you look here, the time frames, weekly, monthly. The reason why we're showing a weekly and a monthly is because we are on a daily chart right here. So what this does is, regardless of whatever time frame you're on, we want to look at the two higher time frames. Okay, so if you're on a 15-minute time frame, you want to look at the 30-minute and the hourly, for example. Or if you're on a 5-minute, you want to look at the 15-minute, 30-minute, for example. These are to confirm that the direction on the two higher time frames is in line with the direction that you are trading. So here I'm trading on the daily. The reason why these are both green is if I were to switch to a weekly chart, you'll notice that the victory bars are green. We're trending higher. Here we're green. If I switch to the monthly, it'll be the same thing. Okay, so when you're trading on the lower time frame in the same direction as the current trend in the two higher time frames, it really adds to your accuracy. It makes things much easier, much safer, much more consistent. And that's why we want to look at that. Okay, I'm not going to spend too much time showing you how to customize everything here, because once you grab a copy for yourself, you will have two training modules to go through that will show you everything from start to finish. They're about 2 hours in length each, I believe, something like that. Quite lengthy, and they're very, very good. So I'm going to start flipping through some charts and show you how and why we would take certain setups, okay? So let's use AXP here as a start. And again, please type in any symbols that you want to see, anything you're interested in. I appreciate it. Let's see, quick question. Kumar was saying, hi Vince, you are showing weekly and monthly charts. Does it work on 1 hour, 5 minute chart? Yeah, absolutely. And I can show you that. And I will in a minute, not a problem. Matt wants to look at 3M. We'll look at that as well. Let me just see if there's any other thing. Intraday or overnight. Yeah, you can use this whenever you want. The 20 is an SMA, simple moving average, not exponential. Okay, great. And then Palantir. We'll look at both of those. So let's look at here, for example, American Express, AXP. And let's look at this particular setup here. This is one of those wider ones. You see when I hover over it, it says HPB, high probability. This is why. What we want to see is, first of all, we want a symbol of some sort, either long or short, right? We want the system to tell us, hey, this is a good time for a trade. Now, secondly, we want to make sure that we have slope on the 20 in the direction of our trade. If we had a negative slope here showing a green symbol, like here it's pretty much negative, right? You can argue that it's flat, but it's more or less negative, right? So this isn't one I would take. There are conditions when we would take this, and I'll tell you that in a minute. But right now, the easiest thing you want to do, easiest trade you want to take are the ones with a slope in the direction of your trade. So we have a setup, we have slope, which is great. Then we want to make sure that the bar, the setup bar that corresponds to this arrow, is near the 20. When you get away from the 20, it tends to snap back. So you don't want to buy up here or up here, for example, because you're risking that as soon as you buy, it pulls back on you. So you want to make sure that we're as close to the 20 as possible. We have that. The other thing we want to do is on that particular bar itself, I'll zoom in a little here. You know, on that particular bar, you want to make sure that the close of the day or the close for that time frame, again, it could be a 5-minute bar, it could be a daily bar, whatever. I'm using daily here as an example, or actually this is the monthly right now. You want to make sure that the close is in the top portion of the bar. Okay. The closer it is to the high of that bar, the higher the likelihood that the next few bars will be in that direction as well. So it's always a good thing to look for. Okay. And then you want to also check the ribbons down here. Are they in line? So if I've got a green arrow, I'm looking to trade long, I want to make sure that both of these ribbons are green. Okay. If we had one green, one red, or one yellow one, yellow is neutral, by the way. Sometimes you'll see a yellow bar, price bar. It means you should not be long, you should not be short, you should be on the sidelines waiting for the next setup. Okay. Yellow means neutral. So we want to make sure that the two higher time frames are in line. And then from there, what we want to do is look to our left to see if there's a lot of previous activity just above where we're looking to enter. Any prior activity means overhead resistance, or to the downside would mean support. So we want to make sure that we have as clear a path forward as possible. Most of the trades, when I show you the actual trades we've taken over the last couple of weeks with our members, you're going to notice that most of them were making new all-time highs, which means the road ahead was completely wide open. That's the easiest time to trade. And this is the kind of move you can expect on a trade like this. We do it over and over again. Again, I'll show you some real life examples. But if you just look back at the area where you have that same criteria, meaning a symbol, slope, right? The bar close to the 20, two higher time frames in line, not a lot of activity overhead. When you see blank space, that's what you want, right? And off you go. So if you were to get in here, you can add to this, you can add to this, you can add to this. You're out of all of it here, okay? On any change of color, you want to exit completely. You never know when this can happen, okay? Now, the same goes for short trades, okay? Now, let me bring up a couple of those other examples. 3M was one of them, right? So we want to see, we'll try to find short examples here as well as we go through these. And I'll go through different time frames. So this is the monthly on it. You can go to weekly. Okay, here you had a nice downtrend on the weekly, so perfect. Let's go through the criteria for a short trade. And again, you need a symbol, right? And you need a slope downward. The more significant the slope, the better. What I consider significant is about a 45-degree angle. So like this to the upside, okay? It could be less, it could be more. The more the better, obviously, but it could be less. And to the short side, 45 visually is about like this to me. But any sort of slope is helpful, and a high degree of slope like this is very, very helpful. Okay, so we have our symbol, we have slope, and now we look at the bar. Are we close to the 20? We're right across the 20, which is perfect, right? Now here, we would look down here and say, are the higher time frames aligned? Now, you notice how the weekly is blank, but the monthly is red? Well, we're on a weekly time frame, and there is no higher time frame than the monthly that we look at. So if you're going to use weekly, you're only going to look at the one higher time frame. It is red, so we have the green, the green light, so to speak, to trade to the short side here. Okay, and then we look for support. And again, during those training classes, we'll teach you different methods to judge the amount of support or resistance in your way. But what we're looking for are those areas where there isn't much. And we typically look for a move like this. And then we start to scale out. We take a third, right? And then we may add to our position again, take another third, etc. Any change in color, we're out of there completely. So it's that simple, okay? And again, you can go weekly, you can go daily, and look at how this did. And again, when you look back, right, it's the trades that match that criteria that are going to be so simple and easy to spot. And trust me, there's so many of these that the scanner that comes with this is so incredibly helpful. It'll save you a ton of time. But whether they're re-entries like this, the dots, or they're arrows, they still qualify. And so your job is going to be to have that checklist in front of you. And as soon as you can mark off every little box that we ask you to, then you're free to take that trade. And that's the way it works. Now, you can customize this to your own style. We understand every trader has their own style. And we're not here to give you recommendations. We're here to teach you a method that has been proven to work year after year after year. The reason being is this. I also want you to look at, while I'm going through these charts, I want you to look at the ones that don't work out. So for example, let's say we bought this one or this one here, and we immediately get a red here. I want you to look at the size of the loss that we generally see compared to the size of a winning trade. There's a big difference, and that's by design. The whole reason for that is if you can keep your losses small as a trader, not only will you be in this business a long time, but that is the path to being consistently profitable. Anyone who's done this profitably will tell you it's not your entries that make you the money. It is how you manage that trade once you're in it and cutting your losers quickly. That's what matters. Victory does that for us. Okay, the algorithm in the background identifies when things are not going well, and they will get you out immediately. And sometimes, just like this, I mean, look, we're in an uptrend, and if you had bought here and ignored this, yeah, I would have kept going, right? So sometimes it'll identify that something's not right, it'll get you out, but then it'll get you right back in, okay? So you don't miss the rest of that move. But this, trust me, you want to pay attention to these because sometimes what looks like a little minor blip turns into something much, much bigger. So you never want to ignore those. Now, let's go to hourly, for example. Okay, there you go. Now, the price bars, the messy look that you see, the choppiness, means less volume here on the hourly. But this is the same kind of thing. The symbols that you want to take, the rules that you're going to use to enter, whether it's a daily, weekly, monthly, or a 1 minute, 5 minute, 1 hour, they're all the same. Okay, they are all the same. Let's look at Palantir. Someone else wanted Palantir. Okay, let's have a look. We'll start with the hourly chart here. Okay, same sort of thing. I've never traded Palantir on a 5 minute. I have no idea what it looks like. Let's go see and find out. There we go. So this is the most recent thing here. So this is today on Palantir on a 5 minute chart. So again, right from the start, you had a symbol, you had slope, right? Oh, the higher time frames, by the way, are on templates. You need to apply template and then go in and find the Vora ones here and the victory, and here you go. So if you're going to trade on the 1 minute, you want to apply this template. You want to trade on the 5 minute, you apply this one, okay, and so on. That will populate these ribbons down here, okay? And so all along here, you know, any of these symbols would have worked out, but I hope you understand why. The criteria was met on just about all of them, right? Meaning they're close to the sloping 20, right? There is a significant slope. I'm sure the higher time frame is aligned, and off we go. Let's look at it on a daily to see what's been happening here. Okay, there it is. So that was the most recent trade. Beautiful. Now, let me explain here. And I see there's a number of questions, number of symbols. I'll try my best to get to as many as I can, okay? I promise. Let me explain here. It'll go faster once I explain this part. Whenever you see a trade symbol, long or short, where you do not have slope on the 20, or you have negative slope. So for example, this green, the 20 is actually sloping against you. You can feel free to ignore those, okay? But if you're trying to get into the start of a move, here are the two rules you want to use to identify whether this is a good setup or not, okay? Number one is the only way you can take a trade when you don't have slope in the direction of the trade is whether that bar with that symbol, if it closes above a prior pivot high, okay, on that move, you can consider that. The other thing is a retest of the 20. What do I mean by retest? I mean, if we cross, say, from below to above and then come back to touch it and bounce again, okay? So when you look at a change in direction, here's what you want to look for. For example, we're moving higher, right? Then here it crosses the 20 to the downside, okay? But then it turns right around and goes right back up, okay? And then it crosses it again, but this time it doesn't hold it, does it? It goes a little deeper and it takes out a low, right? That's your change in direction. That's the difference, okay? You'll notice it a lot if you go to the higher time frame charts. Something that's been dropping for a very long time, for example, Zoom comes to mind. Okay? We talked about this in our group chat with our members just before I came on here. Okay, so let me go to either a weekly or a monthly chart here. Can I zoom in here a little? Let's see. Right? So you notice how Zoom was dropping big time here, right? For the longest time. But every time it tried to recover and it pulled back to test that 20, it failed. It dropped right back below, right? It came back above, dropped back below. Came up, dropped back below. Every single time. Now, on this most recent run, it crossed, it's pulling back, but now it's starting to go back higher. So if it does not dip back below the 20, it comes back and takes out this high, that's how you know you've had a successful change in direction. You don't know for how long, but you do know it's changed direction. And that's what's important there. Okay, so when you have a trade like the one we were talking about, let me go back to the daily so we can see it here. Let me try this again. Oops. On my PLTR, did I misspell it? No, maybe I did. There we go. All right, let's make that. Okay, we were here, right? So if it moves above, comes back, bounces off it, and takes out that high, now you know you're good. So those are the two rules you can use there. Otherwise, if you just focus on the ones with slope, that's what matters. So when I run the scanner and we go through some of these, you're only going to look at the ones with slope. And believe it or not, we have a filter that will do that for you on the scanner. So we've made it very easy for you. Let's go through some more symbols. Let's see. Cynthia is asking for HLNE. Let's see what that is. Bring it up here. And by the way, if there's a particular time frame you want to look at, by all means, type that in. Here's the most recent one, high probability symbol, right? We have the symbol, we have slope, nice slope in our direction. The bar is close to the 20, right? It closed near the high. You look to your left and there's a bunch of blank space there, exactly what we want to see. You look down here, both ribbons are in line. We enter the trade, and by the way, when I enter on a break above the high of the setup bar. So this is the bar. I allow that bar to close, okay? And then the next morning, since I trade mostly off daily, next morning or the next day, as soon as it trades one tick or 1 penny above that high, I'm in on that trade. That's the way I do it. If it gaps up, okay, and opens up here, I let it go. Because again, then we're too far from the 20, right? So, but otherwise, this is exactly the kind of trade we want to take, and this is exactly what we would expect. How we would handle it, on a prior pivot high right up here, when it got here, 3 days in, we would have taken a third of the position off. We would have banked a third. And now we would set another target using our fibs, etc., or if there was another prior pivot high, so on, and off we go. But this is a perfect example. And again, whether you're trading on daily, weekly, monthly, really doesn't matter. Okay. IBKR was another one you wanted to look at. Let's look at that quickly. So I'm going to try to get to as many as I can. All right. Again, they stand out. Now you can say, sure, hindsight's 20/20, but once your eyes are trained on this, whether it's just this was the most recent bar you were looking at, this is the kind of trade you want to target. This is exactly what we want to look for. You have a symbol, you have significant slope. You look to your left, nothing but a blank space. You look down here, they're both green. This is what you want. This is exactly what you want. And sometimes they don't trigger the very next day. Okay. Sometimes you have to wait a day or two. But if they come back and take out that high, off you go. Okay. So great. Let's see what else. Someone wanted to look at Shopify. Let's look at Shopify. How am I doing on time? Pretty good here. Sorry, I haven't been. Oh, great. Raygod from YouTube wanted to ask, does it repaint the buy signal? No, it does not. What you will notice is while the bar is still open, okay? So if we're talking about a daily bar, it's the whole day, right? It can fluctuate. It can go up, come back down, go back up. So you may see that arrow appear, then disappear, up here, while that bar is open. Once that bar closes, it will never change. It is there for life. It works the same on a 5-minute bar. During those 5 minutes, it can change on you. Once that bar is closed, that's it. It's there for life. Does not repaint after that. So that's why I wait for it to close, and then I mark that high. And if it trips that high, then I'm in. That's why we do it that way. Sometimes you'll be very, very glad you did it that way. Because, for example, we see this and say we're waiting for it to trip this high. Overnight, there's news, or for example, there's an economic data point like the jobs report that comes out at 8:30 a.m., right? Let's say futures are lower, the market opens lower, right? And this symbol opened down here. It would avoid you taking that loss, okay? What you're waiting for is confirmation that it is going in your direction. That's why we have that rule, okay? Great question, though. Anna was asking, what do I mean about the 20? I'm talking about the 20 period simple moving average. This blue line, if I hover over it, you'll see it's a 20 period simple based on the close. That's what I'm referring to. Basically, all that is a moving average that counts back 20 bars and averages out the price and plots it. So if price is moving forward, you will see that line sloping higher. If price is moving lower, you should see it sloping lower. The only time is that those changes in direction where it might be flat, where it might be in the opposite direction that you're looking to trade. So you got to be careful with that. All right, so Shopify. This is the daily. And again, we can go way back and you can look at the ones that, and again, here are some that work out for a little bit, not very long. Through periods like this, through choppy periods, this is where a lot of people lose money. And you know, the chop is what we want to try to avoid, which is why we look for slope on the 20 SMA. But even through choppy periods like this, which are going to happen, all right, many times we get to a prior high where we're at least able to take a third off, okay? And then we get stopped out of that trade, okay? Now, sometimes we're left with a small profit, other times a small loss, okay? But that is the key, a small loss, okay? So, and here's a classic example of that trade that you would take without slope, okay? Even though if you're just starting out, I would focus on the ones with slope, absolutely. But here's where you cross, right? And then you come back and you bounce off the 20, you hold it, and you break that prior high right here. So this one here, great entry, you break that high and off you go. So just one of these winners would overcome many of the losers because we keep our losses small. That's the whole reason why we do it this way. And yes, there will be weeks that are choppy, not that great. What I always tell my students is your P&L, your profit and loss in your account should not be going back and forth like this, okay? This is not what you want to see. That's not the kind of P&L you want to see. You don't want it looking like a stock chart. What you want it to look like is you go up and then you go through a period where it's more like this, right? And then you climb again, okay? You add to it. And then you kind of go sideways for a little bit, right? And then you go higher again. That's the kind of P&L that you want to look for. That's what victory is meant to do for you, okay? I'll explain the filters in just a second once I show you the scanner. Stephen, oh, hey, Stephen, how are you? That's great, thank you. He says, I like to keep my trading simple and your system seems to be very straightforward. Yeah, that's what we were striving for. You know, when I first started out, I had all sorts of indicators on my chart, all sorts of indicators. And then through testing and so on, what I realized is that the more I removed from it and kept it simple, not only did it clear up the chart and made it easier to find entries and exits and chart patterns, etc., but then there were more trade opportunities. When you cloud it with a bunch of different indicators, it's actually hard to find a good trade. Now, let me tell you a bit about what we do at Trading Wins, and I'm going to show you another couple of pieces here very, very quickly. We only have about 10 minutes. We have a membership group that we meet with 3 times a week, Mondays, Wednesdays, and Fridays, live over Zoom. We open our cameras, we talk about charts just like we're doing here. Our goal is to look for trading opportunities and understand what's happening in the markets. And also 5 times a week, every Sunday to Thursday, I send out a video nightly via email. And I share trade ideas. Now, again, these trade ideas are not meant to be recommendations. They're meant to reinforce the types of setups that I would take, that I look at. I'm just giving you a look over my shoulder. So as you can see here, I have the last couple of weeks. We're going to go back starting September 8th here and look at these. And you'll notice that some are highlighted, some aren't. The ones that are highlighted are my favorites, are the ones that I think are the type of trade setup that I would take. So on the 8th, we had DT, we had Costco on the 9th, we had TJX, TVA, etc. So all of these, I've written these down so we don't have to go back and forth, but I'm going to show you all of these on here to show you how it works. Now, not, where am I here? There we go. Not every 2 weeks is exactly what you see here. Again, there's those periods where we kind of chop, and then others that are great. But I'm going to go back and show you some of these trades. Okay. Oops. Let's go back up here. DVA. This was one of the first ones, right? And it was this one here. So again, nice little run, right? Exactly what I showed you, the types of trades we look for. Why was this a good one? Had the symbol, nice slope. Bar was right near the 20. You look to your left, blank space. You look down here, higher time frames are confirmed. Off we go, right? The next one was TJX, all right? And when you look at TJX, that was this one. So we moved up, we got high enough to take a bit off, and then we got stopped out. But again, a loss, but a minor loss, minor loss. That bit we took off helped absorb the bulk of it. So that was okay. Then we had PNTG. Let's have a look at PNTG. And there it is. Again, typical. And again, there's several, right? And once you identify a strong trending chart like this, look, it's going from bottom left to top right. This is exactly what you want to see. I told my group today, if you have time on a weekend, what you should do is go through all of the charts and make a watch list of charts that just look like this. And all you're waiting for is them to pull back, set up again, and off you go. Off you go. All right. We had MFC on that list. Okay. And there's another one. Nice and easy. Why? The exact same characteristics. We're moving into all-time high territory, or an area where there's very little resistance. Okay. You've got trend. You've got momentum, you've got higher time frames aligned, everything's stacked in your favor. Trading is about probabilities. It's about stacking probabilities on your side. If you can find a way to gain an edge, then all you have to do is exploit that edge. That's what we're doing here on a daily basis, excuse me. FTAI was another one. Here, let's have a look at it. There it is. And look, bottom left, top right. It's exactly what you want to see, okay? TKGP, sorry, TRGP, my mistake. Let's have a look. We only have a couple more here to go through. There it is. But again, bottom left, top right, over and over and over again, right? PGR. Insurance stocks have been doing great recently. There's another one, right? XLF, this is an ETF, right? For financials here. And there it is, right here. Doing out. And EAT, these are the more recent ones, so they've only had a few days to go here. There it is. EAT's worked out beautifully. Okay, they're not always going to be winners. There will be losses. There will. It's just the cost of doing business. But the whole point is to keep the losses small and let the winners run. And that's what we're trying to do here, okay? I'll show you quickly gold. So futures, right? It works the exact same way. There we are, just like this. It's been on a fantastic trend. Forex, JPY, US dollar, right? So again, it's the exact same thing. No rules changed, time frame, it doesn't matter. Let me quickly show you a couple other parts to this indicator. If you go to a view here and go to expert commentary, it's going to bring up a box that's going to tell you a bit about trading wins, myself, the system, etc. You'll see this little triangle here that populates over the most recent candle. Whenever there's a new setup, you're going to see some green text here for long. If it was a short setup, you would see red text, okay? And it'll tell you what to do. You can move to any bar you want by clicking either on that or using the arrows up here in the commentary box. Okay, let me show you over here. And once you're in a trade, it gives you a stop price. Okay, slightly different method than what is on here. This is meant for those of you who have a full-time job or a family, can't sit in front of your screen and need to put a stop before you go to work and so on. It'll be here. So as we move forward with the trade, you're going to see that price change here. So it's like a trailing stop. So basically what this helps you do is hold your hand throughout the life of the trade. Okay, but again, in the training classes, we will go through this extensively. Okay, and then lastly, we have the scanner, which is my favorite part here. If you go to Explore, first of all, go to the letter P up here, top left, your Power Console, go to Explore. Here are all the scans that are programmed. Mine are at the bottom because it's in alphabetical order, but you can save it to your favorites like I have here. And what you'll notice is that there's some that are called Vora Victory, others Vora Victory Filtered. Filtered means it's filtering for slope. So if you choose the one that is just Vora Victory, it'll give you all the symbols, arrows, re-entries, etc. If you want it to scan for slope in addition to the arrow, then you use the filtered one. Okay, you would go down here, you would select the items that you want to trade, and then come here, select your time frame. I've got daily. Click start, and you're going to notice this box pop up. You're going to see how many charts you chose here, roughly 5,500. I'm not going to let it run that long. We don't have time. But here it'll tell you how many were rejected and how many it has. So it's found a couple, I think. I'm going to cancel this for now, just to show you that when it pops up, these columns, okay, there's new long, new short. One will have a 0, one will have a 1. The one with the 1 means that's the kind of setup it is. So on this chart here, this symbol, it's a short setup. It's going to give you the slope, okay? If it's short, it should be a negative number because you want that slope going lower. These are filtered, anything a 5 or greater. So for shorts, it's a -5 or greater. So -11 is a significant slope. -8 is a significant slope. If it was a positive, it was a buy, you'd want this to be a +5 or greater. Now, a new upgrade that Jeff just added is it's showing you whether the weekly and the monthly trend are in line with the scan results. So if there is a -1, it means they are. So they're both in line with that. If this wasn't showing this, then you know right off the bat that the higher time frames are not in line, and you don't have to waste your time pulling up a chart and looking through it. Okay, so again, if you highlight it, you can copy and paste this, you can print this list, you can save it, do whatever, or you can hit the chart icon and it'll automatically populate a chart here. There it is. And you can, in an instant, analyze whether it's the kind of trade you want to take. Is there slope, right? Is there any support down here, higher time frames, etc., that sort of thing. Okay, let me show you one that we ran across today that I believe has a nice setup looking on it, and that's Walmart right here. So hopefully it'll close that way. We've got about an hour to go. We've got a re-entry here. If I zoom in for you, you can see that right now it's near the high of the day. It's close to that upsloping 20. Higher time frames are aligned. This is the all-time high. There's nothing higher. So no resistance overhead. This would be beautiful. So what I would do is allow this to close, then mark that high, and tomorrow or the next day, if it tripped that high, I'd be going long this stock. Again, not a recommendation. I'm trying to teach you the way that I do this, okay? I think I'm out of time. I know there's a ton of questions. If Jeff has time, we can go through some. I'm happy to stay as long as necessary. If you don't get your question answered here, you can always email us at info@tradingwins.com. It's tradingwins, info@tradewinds.com. But Jeff, I'll turn it back to you. If there's questions, happy to answer. If not, I'll let you tell everyone how they can grab their own, their own copy of this victory indicator.
For sure. Let's see. Adele, I was typing out. I've actually answered most of the questions. I wasn't.
Oh, that's great. Thank you for doing that. Thank you.
But one of the ones, Adele wanted to know if she can fully automate this.
Mm-hmm.
And I was actually just answering, no, you can't fully automate it, but it will help you find the trades and figure out exactly what to do with it. It's not a robot, though. So
right. No.
Aside from that, there are a ton of people that want to look at charts and that kind of stuff. And we didn't look at nearly all of the charts, but we would be happy to pull any chart you want. So if you want to get a hold of us at metastock.com/salespchat, we'd be happy to send that over to you. And I think with that and me typing out answers, I think we hit all the questions.
That's great. Thank you.
All right. I do want to talk a little bit about how to get it, though. Before I do, I want to say thank you for everything over the years, Vince. Great partner, done a great job with, and really appreciate it.
Thank you. Thank you, Jeff, for everything, and again for the invite. I appreciate it.
Awesome. Let me go ahead and make me the presenter here. I'll show you the two. One of the things that I think is really cool about this particular one is that we've actually already updated it twice. So if you, one of the suggestions we had was to add that new column that shows the short, or that shows the position of the weekly and monthly. I'm like, that's a great idea. Let's go ahead and get it added. So if you've already ordered Victory 2, you should have gotten a notice from us actually last week. And it would have said, hey, go grab the free update. It's available for you. You should have updated it twice now because there's some other changes that we made to the system as well. So if you've been using Victory 2 and you haven't updated it recently, like within the last week, go up to the My Downloads page, grab it. It'll allow you to actually kind of just download it and install it. That's all you have to do, and you have all the new versions. And if you have something that you think would be cool if we added it, send it to us. We'll probably, there's a good chance if we like the idea, we'll actually put it in there. So there you go. For those of you that haven't heard about Metastock or the Victory, it's actually one of our best-selling Metastock add-ons. It was our best-selling in the year 2020, and it's been extremely popular. So popular, in fact, that we wanted to kind of think of some things that we could add to kind of improve it and kind of make a new version. But I love it for the detailed commentary. Vince showed you that, the expert alerts, the full market scanning. You can do triggers and re-entries and all that kind of stuff. And we did have some questions about like whether or not you can do system testing with it. It does have system testing in it. So if you're using Victory 1 because it was so popular and you got it, what we added to the new version was we added high profit buy setups, take profit suggestions, the multiple time frame views for daily, weekly, monthly. We added a market dashboard, which you can open up. It'll show you all of the markets and the sectors and how things are kind of looking from a broad market perspective. One of the updates, we added that for Australia. We also added it for India. So those are available. Scans to help you find current setups, the expert advisors that list everything out, all that kind of stuff. So in 2.1, I guess we're on 2.2 now, we added the broad market views for India, Australia, the two new templates for both the 1 minute and hourly so that you can have the new ribbon at the bottom for higher time frames with it. And we added a small update to show the neutral state for those templates too. So here's the first version of the broad market, just to give you an idea of what this is. You get Dow, S&P, QQQs, all that stuff's included. And it just kind of shows you, you got monthly here, weekly, daily, shows you how everything is lining up. So Vince does a really good job in kind of walking through this thing, but it's a really, really good add-on. Here's the explorations that are included. This will just find you the entries. This will find you filtered where we actually look for the slope too as part of the entry. This will show you the re-entries and filtered re-entries. And then we put in a new exploration for high probability that you can use and run. So Vince showed the expert advisor. It'll show you entries. It'll show you the stop losses. It'll show you suggestions for getting in and out. and ways you can actually, suggestions for trading them if you want. So very, very good. And then, of course, the system tests. So one of the things that when we put together the package, we actually included, Vince has created a number of systems over the years. We actually decided to include 2 of his other classic systems, the winning momentum system, which was $500 on our web catalog, and Veracity. Both of those include systems. They include expert advisors. They include explorations, and they're just included in the install package. And even though we didn't talk about them today, they're still very, very good. So you're going to get both of those. You're going to get 1 year of Trading Wins membership, which is daily trading ideas, weekly training series 3 times a week, on-demand technical analysis training and trading ideas. You can actually go up to their website and sign up. It's I think about $97 a month, if I remember right, $1,200 a year. It's included as part of the purchase. So, and then we also have a boot camp. So we sat down, Vince and I sat down, and we recorded, how to get the most out of Vince, the Victory 2. And that's available to you immediately. I actually did a part where I kind of talk about kind of things you should do in Metastock and how to run scans. And Vince did a great job. So here's all that's included. It's a massive package. You get the Vince Vora's Victory 2.0. You get that Veracity system, the winning momentum strategy, the Trading Wins Pro membership. And if you just added the value of those up, it would be $5,657. The introductory price that we had for $990 was for $997. Here at the summit, we're going to give you a summit offer, the conference offer of $747. So instead of $56.57, you'll pay $747. You're going to get that bootcamp class. You're going to get Victory. You're going to get Veracity. You're going to winning momentum. You're going to get 12 months of the Trading Wins service. You're going to get a trial to Metastock. If you've never tried Metastock, there's a reason, I think, that it's been rated #1 31 years in a row. And you're going to get a 30-day money-back guarantee. So you can try it out if it's something that you think you like. Very, very low risk, high reward, which is the way we like to kind of let you do it. I wish my trades were like that. Metastock.com/conf-promo. You can give us a call, 800-882-3040, or you can go to metastock.com/saleschat. If we missed your question, I'm sorry. I did my best. But if you do have any questions, get in touch with us at the sales chat. We'll be happy to send charts to you, answer questions, all that kind of stuff. Metastock.com/conf-promo, 800-882-3040, or metastock.com/saleschat. So there you go. There you go. Very, very cool add-on. One that we've iterated on actually now 4 times with this new update. And the last update, the last 2 updates have actually been absolutely free. So there you go. Metastock.com/conf-promo. I'm going to go ahead and type some of these out. 800-882-3040. You can tell how good I am at typing and talking at the same time. /sales chat. All of those will actually get you to where you need to be. So there you go. Whew. Thank you again, Vince. We'll see you again very soon. We're going to do this. We'll go ahead and change over here. And then just a couple things. I want to talk about one of our sponsors, brand new sponsor, the Traders Forum. You can join thetradersforum.com. We have a lot of lessons up there that you can kind of look through and take a look at. There's a live market chat where you can share ideas, learn from ideas from people. It's a community of traders. It's growing. We just barely started it. It's going well. Tradersforum.com. Thetradersforum.com. Get up there, join it, be part of us, join the conversation. All right. And of course, we're Metastock. So I'll talk a little bit about Metastock. We are offering either a free trial if you get any of the products, or you can do an extended trial. Metastock.com/conf-promo, metastock.com/saleschat, 800-882-3040. Cynthia says, I am curious how long the conference offers are good for, noting that Martha's was 1 hour only. That's a really good question, Cynthia. I'm terrible about doing deadlines. I'd say you're good. I don't want to put a lot of pressure on you to kind of go and get it right now. I want you to kind of make sure you're confident in the decision. That's why we give you the money back guarantee. would say all of the offers that we're going to kind of talk about here that we're selling directly, so excluding Martha and some of the other things, we'll honor those into the first week of October. So we'll give you a whole week to think about it, go to the whole session, all that kind of stuff. So thank you for that question. Also, thank you for being interested in the offers. All right, our next presenters are Jake Bernstein and Brian Lotta. Jake Bernstein has a tremendous amount of trading experience. I believe, I said this earlier, but I believe Jake put in his first trade in the late 60s, if not, it was early 70s. He's been publishing a newsletter that has gone without interruption, I think, since the 70s as well. He's written a prolific library of books over the years. A very, very good trader. Took his very first trade in egg futures, from what I understand. But we love Jake. Brian also has a great take. He's actually taken some of Jake's ideas and he's kind of put them into a very, very cool JBXC channel or cloud that we're going to talk about today. So let's go ahead and get everybody started. Jake, I can hear you. Brian, can't hear you yet, but I believe you'll be the one sharing the screen. I'm going to go ahead and send you an unmute request real quick. And then I'm
unmuted. I was just waiting till you were done.
All right, let me make you you're the one sharing the screen right now, right?
Either one of us, whatever Jake wants.
Brian is going to do the screen share.
All right. I love having you guys here. Both of you. It's always so much fun. Thanks for joining us.
Thank you for showing my high school picture, Jeff.
You bet, absolutely. All right. I'll get out of the way. It's your guys' turn. Thank you.
Thank you, Jeff. Thank you, Metastock. Really appreciate the opportunity for Brian and myself. Please pardon the voice. I'm beginning to sound like an old man because I am an old man. Been trading for 52 years. And I think between Brian and I, we've got about 65 or 70 years of experience. So maybe we can teach you a few things. And Jeff, always a pleasure to speak for Metastock. And you are the most laid back guy in the business. Always laid back, always patient. Even when I miss an appointment, you're still there and happy. So I really appreciate that. In addition to that, the very length of experience that Metastock has had in this business is extremely gratifying because they can make everything look good. And I want to thank you again for using my high school picture there, Jeff. Really appreciate that. So many years ago, if some of you are old enough to remember, a man by the name of Newton Minow, who was the chairman of the Federal Communications Commission at the time, said that television was a vast wasteland. What he was referring to was the fact that there were a lot of commercials and very little content. You could say the same thing about the internet today, a vast wasteland, very little content in terms of reality, and a great deal of advertising. So if you were to go to the internet, to your browser, to your search engine or whatever, and type in, teach me how to trade, teach me how to day trade, you will get literally, and I'm not exaggerating, 210 million or more hits on that terminology. So what's a person to do? Where do you look? How do you know what's good? It's a vast wasteland and it's very intimidating to many people, especially to the many people who come into the markets every day thinking that their key to success is going to be day trading. But we know that ain't so. We know that the keys to success mean you need to start with enough money. You need to start with a strategy that's clear and consistent. You need to start with a strategy that's rule defined. All of the things that computers are good for, and yet people sit in front of charts for hours on end and interpret those charts and say, maybe we should do this. Maybe the seasonal is up. Maybe we shouldn't take this sell trade because the seasonal is bullish. Maybe we shouldn't take the day trade because the weekly signal, the weekly trend is up. Maybe we should take the weekly trend because the monthly trend is up. A ton of questions. The good news, there's a ton of questions you can ask. There's a lot of patterns in the markets, reversals, key reversals, support, resistance, breakouts, flags, pennants, you name it. The bad news, there's a lot of patterns in the market. And if you put them on the computer and test them and ask the question, does it work? Does it have any predictive validity? The answer most of the time is no. I would say probably conservatively 95% of most indicators do not work. They never did and they never will, because one of the reasons they don't is they require interpretation. We don't want to interpret anything. We want everything to be crystal clear, and that's what's so good about what we do. I hope you had a chance to listen to Vince Vora, the speaker before us, who made some extremely good points about trading. Take heed and listen to what he said. There's a lot of wisdom in what he said. Now, Brian, Lara, and I have developed our own strategies. I've developed many of them, put them in books. I've written about 45 books on trading, and I'm a real trader. I really trade practically every day, which does not mean I'm a day trader. And even though I wrote several of the best-selling books on day trading from McGraw-Hill, I don't favor day trading. It's a lot of work, and the only way you can make money day trading is with a good strategy and a large position. Most people don't have the money for a large position, and if they did, they'd have the anxiety of a large position, living and dying with every tick. At my age, I just want to take it nice and easy and have the computer tell me what to do, and that's what this is all about. So we use AI, actual intelligence, to develop AI, artificial intelligence. And fortunately, the methodology that Brian is going to explain to you while I sit here and make comments from time to time is the expansion contraction methodology, which has been programmed beautifully on Metastock here so that you could see exactly what the rules are, why it's indicating a buy or a sell, and it's visual. You don't have to interpret anything. You don't have to read anything. You just have to look at the charts. For me, it's red light, green light, red light, green light, red light, green light. Makes it that easy. Brian will explain all of that in great detail because Brian is a super nice guy. I will now give you the opportunity to meet Brian, and as I said before, I'll be standing by on the sidelines here to make comments from time to time, and pardon the raspy voice. It's allergy season here in California. Brian, to you.
Thank you for that, Jake. I am at least going to pop forward here if we can get to the next slide to get to the all-important disclaimer. You've seen this 1,000 times, but it would be important to put this up just so you're very sure that although the disclaimers that are required. So we do have a huge amount of research behind the expansion contraction indicator, meaning, of course, Jake's moving average channel system has been a profitable program for quite some time, and that's what I built this program on. So it is available in many of the different platforms also for free. Why we've done this is that Jake and I are really in the process as being older traders to give back to the community, and that's where we are with this. So you will want to study this recording, and if you're already owning Metastock, if you've already got the expert advisor, and you do want to make sure that you're at least back testing rules, this program has been back tested and forward traded. It's also been third party verified. So although we can't obviously promise that you'll be profitable with it because how you use it is out of our control. So Jake already went through his background on that. Obviously, Jake's going to jump in at any time when he's got some comments. My background, although not as extensive as Jake's, I've been trading since 2000. I have also started my own corporation back in 2007. I developed multiple trading systems in stock options and retail currencies. So between Jake and I, his experience in futures and stocks and mine in stock options and retail currencies gives you a pretty broad base of experience and available training on that. So and along the way, I have also trained over 4,000 traders. I will say I didn't count the actual number of traders, but I've got files that are literally a foot and a half deep, and that's how I basically calculated that. So as again, you can find out more about both Jake and I at expansioncontraction.com. If you're looking and have other platforms other than Metastock, and that is also available there absolutely for free. So we do know that. Go ahead, Jake.
Yeah, I just want to make it clear that what Brian and I have to show you today is 100% objective, no interpretation. So that once you learn the methodology, it's going to be crystal clear. If you don't reach the same conclusion that we do, then something's wrong somewhere. Either we taught it to you wrong, you learned it wrong, you have a learning disability, we're bad teachers, or the methodology doesn't work. Because everything is crystal clear, it was able to be programmed and put on the computer. If it wasn't completely algorithmic, it couldn't be put on the computer. And that's very important to remember. I don't want to sit and interpret anything at my age. I just want to enjoy my money. And so when I look at the indicator expansion contraction, which will appear at the bottom of the screen, it's either going to be green for long or red for short. And that's all there is to it in the big picture overview. Brian, back to you.
Thanks again for that, Jake. And since I did become your client in 2014, I will say I went to you to get programming, 100% objective, as you say, clearly defined, rules to get in, rules to get out at a loss, rules for taking profit. So simple a computer could do it. Although I know Jake and I both prefer to manually trade rather than have computers auto trading. Most, well, I won't say most, but a lot of the volume with the current market and increasing regularly is computer trading. High frequency trading, computerized trading is helping with a fair amount of the liquidity in the market. So literally, if you're not 100% sure before you get in what to expect, that's certainly what I went to Jake for, what to expect in the future from having clear rules that are back tested and verified. So I do want to at least pop into a comment here on some of the challenges of the current markets and using indicators commonly available. I've just pulled up a bar chart here on Trade Navigators. I'm a little more familiar programming in Trade Navigator, and brought up at the bottom MACD, which is actually just a common indicator with the default settings that may give us crossovers to get in to the long side on this or to the short side. So on that, I did pop up some sell markers and some buy markers when MACD crosses over. And you can see sell setups, buy setups, sell setups, buy setups. In this case, a 1-bar reversal, another buy sell. So typically we should see buy, sell, buy, sell, buy, sell over and over on this, as I did plot the B's and the S's on the chart here so that you can see when MACD crosses over, it gives you a setup. And then again, what kind of results could we expect out of that? So I did pop on here what I calculated just based on how much it went up or down. As you can see plotted in red or green, whether or not the trades were first trade a loss, second trade a small win, and so forth. And as you can see on here, there are several trades on here on MACD. I believe I counted 14 trades, and this is basically far left from January all the way over into the end of August here. On that. And there were some bigger winners on the top right there, though that says minus 6.47. That was a gain. Why it's green, it's just that price dropped 6.74% on that. So again, I've popped up on here some of the challenges. There are a fair number of trades. There are some sudden reversals. Obviously, what we're looking for is consistently positive outcomes, win more often, make more than you lose on average. Jake had originally said if your system's results aren't at least 60% winners or more, and if you're not making more than, say, 1-to-1 profit to loss ratio, you really don't have a statistical edge. So go ahead, Jake.
Okay, one of the biggest problems that traders have is the number of consecutive losses. If you take, for example, the very popular 50 and 200-day moving averages, the rule is when the 50-day moving average goes above the 200, it's called a golden cross. You're supposed to be a buyer. When the 50 goes below the 200, it's the death cross. The market's going to go down. If you put that on the computer and you back test it and ask the question, over the last 25 years, has it made money? The answer is yes, it has. That's the good news. The bad news is sometimes it will lose money 16 times in a row. If you're losing money 16 times in a row, you're wiped out. In fact, if you lose money more than 3 times in a row, most of the time you abandon your system. And that's the key issue here. How often is the system wrong consecutively? The more consecutive losses there are, the bigger the drawdown. The bigger the drawdown, the bigger the trader's emotion. The bigger the trader's emotion, the more money they lose. Back to you, Brian.
That's absolutely correct on that, Jake. In fact, statistically, even if you have a 60% win rate, you could get 7 or 8, maybe even 9 losers in a row. at least once out of every 100 trades. It's a 1% probability, which is just basically some statistical information to throw out at you. Ideally, you're not losing 9 times in a row, even though it's normal on that. So we will pop over to the next chart. And I'll put up stochastic at the bottom. You probably recognize that. It has crossovers also on that one. So I did at least pull up the crossovers programmed out so you can see that their buy and sell setups are programmed once again, unfortunately, in this case, with some 41 trades. Stochastic on the crossovers really just isn't useful, as it has way too many trades, few trades that go for any significant amount of time. And ideally, whatever system you're using can get big winners.
Beginning to look like a lot of BS to me.
Yeah, that's what I joke about quite a bit. I do have a fair amount of BS on my charts, but ideally, the less BS, the better. So I did kind of pop up the results on that, and you can see a lot of red on here where there's 1, 2, 3, 4, 5, 6 losers in a row, another 4 losers in a row. So unfortunately, on some of the basic programs or indicators available, there's just far too many trade setups on that. So I do want to pop up, obviously, the expert advisor that's been programmed for the JBXC or Jake and Brian's expansion contraction. It's clearly going to identify buy setups on here. Again, it'll have a B. A large B is the original setup on here that shows when you get in on the expansion contraction at the bottom, which I will explain a little more, but we've had it quite nicely plotted on here with Metastock on here to show the original entries and some potential add-on trades, or if you've missed the first trade, a secondary trade on here again, based on expansion contraction. And because Jake's systems generally use Williams accumulation distribution, we've included that on here. And a little bit later, I'm going to include all of the rules for.
Let me take a step back, if you don't mind.
Sure.
Let me give you the overview. Where the indicator at the bottom of the screen, which we call the cone, the big green and the big red areas, when they change from red to green, we change positions from red, which is short, to green, which is long. And you'll notice how long the green cone lasts. It just stays for a long time, which means you're getting the big moves. When you change from green to red, you're short, and back from red to green, you're long. So you can see there's not too many crossovers or choppiness in this methodology. I just wanted to tell the folks that before you continue, Brian. Sorry about that.
Oh, no problem at all. Like I said, jump in anytime. And as Jacob mentioned, the stability of this indicator will be fewer trades on this one and the potential for longer lasting trends. So at least from the trending component here, on average, it's some 24 to 30 periods to be in a trend. But it's also important to know if you're in an uptrend and price dips back down, are you in a buy setup still in an uptrend? And so there are some darker green bars which are identifying where the two components of expansion and contraction are both bullish. So we have the strongest part of a move up. And there's some lighter green bars here where we're short-term bearish, making a multi-day bear correction back down into the range. And we're still basically a buyer on that one. So if you're familiar with the terminology buy on the dip, we'd like to have a trend filter on there that helps us identify when price is dropping short term over the last few days, if we're still a buyer on setups. And although I don't have Jake setups on here too, that would be a bit too much information. We just wanted to plot up at least the JBXC original buy setups and sell setups and potential for add-on trades when price continues to trend. So this is basically just the first chart on here. And I did at least mark out on here, we've got clear entries, clear exit triggers. You will get bigger winners in trending markets and smaller losers in fewer trades than what we were seeing on stochastic and MACD. And that last chart, although I failed to mention, that was an RSI chart that had 24 setups and was running into the same challenge. Too many trades with 1 or 2, maybe 3-day reversals. And so consecutive losses on there are a problem. But you can see there's clearly S setups on here for short trading. with some ABCD type rules to get in, and also some extreme moves on here, which will include rules for taking profit on that. As I said, I will share all those rules a little bit later in the presentation. Also, sure, go ahead, Jake.
Yes, listen, folks, this is really important. No matter what time frame you trade in, the big money is made in the big move. We know for a fact that 80 to 90% of your money is going to be made on 10 to 20% of your moves, which means that if you're not in the move for the bigger picture, for the longer term, you're not going to make the big money. The problem with traders is not the methodologies. There's a lot of good methodologies, but looking at this one, for example, where the arrow turned green on the left and turned red on the right, that assumes that you're in the trade for that duration. With all due respect, most of you, unfortunately, don't have the ability to do that because you're sitting and watching the market and living in line with every tick. So if you have a $450 profit, you're going to say, take the money and run before it disappears. Next thing you know, it's at $900, then $1,000, then $1,500, then $4,000, and you're fighting the trend all the way, trying to get back in and saying to yourself, I will never do this again. I will always let my profits run. So the bad news is traders let their profits, take their profits quickly and let their losses run until they grow hair on them. If you're one of those traders, there's nothing that Brian and I or anybody else here can do for you today or anytime. You need to know how to be patient with it. And fortunately, this methodology gives you numerous opportunities at the bottom of the 2 moving averages channel on top to get back in once you've made the mistake and gotten out too soon. Now I promise I'll shut up.
Oh, no problem. Please jump in there at any time, because obviously your experience at 52 years is significantly greater than mine and probably most of the people on here. So your insights, even though I've been listening to you for 10 years plus, there are still times I pick up subtle nuances that I may or may not have heard before, but all of a sudden caught and add into my trading. So the main thing would be listen closely as you're going to hear clear, objective rules, and they will help you in the long run. So I'm going to pop up at least on this. As I said, it was all wrapped up nicely in the expert advisor on that one. So there's, as Vince had said before, the triangle marking on this. There's also a B programmed on here for the buy setup. This is actually showing the date on 11/3/2023. So as Jake had mentioned, you can get the big moves. This is the beginning of November through December, January, February, March, into the middle of April, and was a bigger winner. And if you're trading daily charts, are you going to sit through that, through the dips? Are you going to stay in through the dips time and time again? Without 100% objective, clear rules in advance, you're less likely to. That is certainly where I was before I started learning programming or program trading from Jake. Basically, so simple, a computer could do it.
Remember, most of your time as a trader should be spent doing nothing. Very little of your time should be spent doing something. Because every time you do something, you take the probability and the risk that it's going to be the wrong thing. So the fewer decisions you can make, the better off you are. You can't predict the unpredictable. There's a certain amount of behavior in the markets that's unpredictable. Don't try and predict the unpredictable. Get into the move, determine your risk before you get in, assume that the trade is already no good once you get into it. That makes the probability of a loss less painful when it happens, and then just let the darn thing go because the computer knows more than you do. And that's all there is to it. It took me 15 years to realize that, but I didn't have a teacher. Fortunately, you have some very good teachers here today. Back to you, Brian.
Thanks for that, Jake. And as you can see, I did mark reality at the right edge of the chart. Ideally, when you look at the last bar or last day or 1 minute chart, whatever you're trading, you'd like to know, is it bullish? Is it bearish? If I'm already long and I've had a trigger to get in, should I stay in on that one? Or if I haven't got in, are there additional setups to take on the trade to get in? So ideally, if you know reality at the right edge of the chart, you're more likely to stick with your system trading on that. So did want to pop up and pull up on this a bit about expansion contraction because it is different from most indicators. As you saw with MACD and stochastic and a little bit in RSI earlier, they have a tendency to lag the market. They require, in many instances, 13 or 8 or 12 bars in order to plot information. Just to get one plot of information requires many bars, and that's considered lagging. Expansion contraction is not lagging, basically, or non-lagging. It is just taking information plotted on every bar, one bar to plot information on here. It is a concurrent indicator. And of course, ideally, we're using leading or concurrent indicators rather than lagging indicators, as you saw with they had a little bit of a problem with too many trades, too many snapback reversals, too many consecutive losers. Ideally, if you could reach your results at the end of the year of growth, hopefully, you're doing it in the fewest number of trades with the least amount of risk. Also, the second key point here is expansion contraction adds a trend component, a filter. It's unique here in the way that it puts them both together in order to identify shorter term moves and longer term trends. Ideally, the longer the duration of your setup conditions are clearly plotted on the chart, you're more likely to stay in for the big move. So that's why it was pretty much red light, green light on the previous charts. Excuse me. So that's what it's saying in here. It marks every single bar with the current conditions. If the current pricing is strong up, you're going to see dark green bars. The current conditions are weak up, making some kind of short-term bearish correction. You're going to see lighter green bars. If we're weak down, the trend is bearish, but price is rising here short-term. You'll see light red bars and strong down, dark red bars. So basically red light, green light. We have strong up, weak down, and strong down. And some of the other conditions that expansion contraction will show you is when we're not trending. So ideally, those are very visual. It's a simple confirmation. Ideally, your setups are what they are, or it is what it is, as this is saying. You don't have to guess on the right edge of the chart what the conditions are. The second component, third component of expansion contraction is it does measure the strength or weakness of pricing. I'm going to keep this fairly simple because most people kind of glaze over if you start talking too much about statistics. But it will calculate the normal range. It does use 500 bars of past data to do that. And again, it helps if it's showing that the expansion contraction is above average over the last 500 periods. It is defined as strong up, or if it's below average, strong down. So ideally, we're taking a look at basically standard deviation over time. And that's just identifying the average range. And that way we can see if it's outside of the average range, it's strong. If it's inside the average range, it's weak. And we like that one to be 100% clear and obvious also. So as this says here, you'll always know what to do and when to do it. You'll always be on the right there at the right edge, and what the conditions are. Are they strong? Are they weak? Or have they reversed on that? Ideally, red light, green light keeps it very simple. It's not really required that you use the indicator at the bottom because the bars are color-coded to say exactly what the indicator at the bottom is telling you. So as I said, it was back-tested 5 to 20 years period of time to be at least 60% win to loss, better than 1-to-1 profit to loss ratio. In fact, I've been seeing closer to 1 2/3 to 2-to-1 on average losses to average gains. And of course, that at least meets the minimum statistics for us to win more often, make more than you lose on average. And of course, we're going to trade in some of the top weighted stocks and strong trending sectors, as obviously, Bob's Pizza Parlor may not be the best stock to trade for growth over time. So on that one. So even if you've never traded before, right, this should help you to be more consistent and have better entries and exits. In the 20 plus years I've been coaching, those are some of the most repeated requests. I want to be more consistent. I want to have better entries. I need better exits. And ultimately, of course, it's up to you individually, as it was at one point for me and certainly for Jake, You've got to get programmed. You have to be basically a human computer and have all this pre-programmed in advance, so you know what to do. Go ahead, Jake.
Thank you so much. No matter what methodology I teach people, and I only really have 5 basic methodologies, people always ask the same question. And nowadays that question is this: can we use this for day trading? Can we use this for crypto? Can we use this for Forex? Yes, you can use it in any market and in any time frame. But remember, the higher the time frame, the more consistent the method will be, no matter what method it is. Because in a shorter term time frame, the market is subject to all sorts of random fluctuations based on news events, items, announcements, and so forth. In the daily time frame, your accuracy will be good. In the intraday time frame, like 15 minutes, the accuracy will be less, but you'll have to work a lot harder to get that accuracy. In the weekly time frame, which is much my preference in my old age, the weekly time frame takes away a lot of the irregularities and the charts become very smooth, predictable, and so forth. The only thing that's lacking here is the ability to have patience. So if you look at it in terms of the Warren Buffett, for example, the Warren Buffett move, Warren can sit in a stock for 5 or 10 years. I don't have 5 or 10 years in me. Maybe I do if I'm lucky. But the bottom line is this: if you have the patience, you will see some amazing things with expansion contraction on the weekly chart. You will see some great things and some really big, beautiful trades on the daily chart. You may even see some on the intraday chart. But remember that the time frame is very important. If you want the best time frame for the least amount of work, go to the weekly charts. Most people hate that because they all want a day trade. That's what I said. That's my piece right now, Brian.
Thanks for that, Jake. And you're absolutely right. I'm going to say I spend the least amount of my day actually placing trades because they're already setups are obvious and they can be scanned for. So if we look at a scan and we decide what we're going to trade, it takes a few minutes a day, and certainly do not want to spend my time day trading all day. But again, if you've got a clear system and you want to sit there and day trade, expansion contraction can meet that type of a resource also. So as the original slide did say, we've got long-term trends and trend strength. We've got short-term swings and swing strength. So again, I've popped up on this one with the green cone or the cloud on this, showing you the trend feature. So this is the same setup we had a little earlier from the 3rd of November. Continued to trend all the way over into, I believe that was the 15th of April. So the overall trend was up. We did have the green cloud through all of that. Quite often it was exceeding the strong component with the standard deviation lines. Weakened just a little bit as it made a bear correction in here. I'll have to admit there's a bit of subtle coloring on the darker green bars and the lighter green bars here on that, but you will see a little bit onto the right side of the chart, we've got red and a little bit more purple bars on here to show when it's weak. On that. So we've got long-term trends. Again, the average trend component on here is 24 to 30 periods. That was even true on the weekly chart. I have seen over 40 periods from time to time off that. So that's why the averages are so long. But we have short-term bear swings may lead to a continuation setup. There's also a secondary B on here, a little bit smaller, that's showing when we started to go swing up in an uptrend. And so we have an original reversal from sell to buy and an add-on trade, another bear correction, and another add-on trade. Ideally, if you've gotten up on the first trade and you have no risk, the suggestion is to add to your winning position, because obviously if you're looking to maximize out your gain in a long-term trend, if you could add to your winning trade when you have no risk and multiply the net potential. There's an add-on. We had a correction in here with another add-on. Price made new highs, pulled back into the range, gave us another add-on, made another new high, pulled back, gave us more add-ons, all the way till we get up to the top of the chart on here. And then we started to see a bear correction turn more bearish and give us some weak to stronger sell setups. And the entire market, of course, again, red bars are showing us a downtrend, and there is a S or sell setup there on that. It didn't last very long, but you'll notice that there are some diamonds on here as price exceeds the right price range on here using some counter channel values. If we were hitting a price extreme support or previous on here, a price extreme resistance with the green diamonds, these are profit target suggestions. If you hit the first target, go to break even. It allows you to add the winning trades because you have no risk on the previous trades.
Yeah,
We'll have go ahead, Jake.
Speaking of add-ons, you know, everything that Brian is telling you is explained in the expert advisor so that it's much more clear in terms of being written so that you can keep going back to it and refer to it if you don't understand something. But the bottom line is, in order to teach something, we have to pick a chart that's crystal clear. If we have time today, we can pull up any chart on Metastock and show you how that works. In reality, they won't be as beautiful as this chart, but they will nonetheless be very beautiful. As long as you stay with stocks that trade high volume, you don't want to stay with these little penny stocks that don't trade hardly ever, because they will give you very bad signals. So the key, longer term time frames and stocks that have heavy volume or futures that have heavy volume. Well, excuse me, there's a guy with a motorcycle outside my office door. So the bottom line is you need stocks that trade actively, otherwise nothing will work. Back to you, Brian.
Absolutely. In fact, I know my filter is at least 5 million shares average 20-day volume on stocks. And because I'm an option trader, I need to see weekly options available with high open interest. So there are some additional setup conditions on there that we'll both use and are also both willing to share the individual's programs and systems and rules we both use. I'm noticing the time here. I may need to speed this up a bit. But again, range expansion and contraction, since it's called expansion contraction, we want to see when the cone of the cloud is expanding, generally getting wider. That's the strongest part of a move up. We might see where the cone of the cloud is contracting in here, and we'll have some correction to potentially some consolidation, as I did mark out on here, where price was pretty much going sideways. We were seeing the cone of the clouds starting to contract on there, so I did just put up the arrows on here to identify those expansion and contraction market markings, as well as when the cloud expands to its widest part and starts to contract. It is going to give us, in this case, since the trend is up, a resistance definition, and in a downtrend, when the cloud is at its maximum and starts to contract, a support definition. So I don't really like the terms support or resistance, overbought or oversold, but they're commonly used, and so we want to at least make sure that it's easy to identify on the charts. Divergence is also available, at least to see when the trend is up and we're making new highs. As Jake has said, price makes a new high. Your indicator is not making a new high. We have a divergence, and we've got clear rules on how to trade the divergence on that. And certainly if we've had on the left side a move up into a strong trending component here above average, and we pull back, we'll see when we get breakouts of that as we continue to expand, and then certainly expand up to new highs. So all of those patterns ideally are very clear. I did also mark a divergence here in Apple. The trend was down, price was making new lows. In this case, expansion contraction was contracting, getting narrower, not getting larger on that one, and that identified a divergence just prior to the bottom, a secondary divergence just after the bottom, and that was just in advance of the big move up. So again, we've got multiple setups on here that it shows. Jake had also mentioned that the expert advisor so nicely tells us what the conditions are precisely, where major support and resistance are. Minor support and resistance, is the range expanding? Is the strength strong or weak on that? The expert advisor does an ideal job on that. So I kind of marked out, just in case you're curious, the setups as a continuation sell. The arrows, blue arrow is the get-in price, red arrow would have been the stop, green arrows are the profit targets, because I did want to go in here and start marking out at least what might have happened had you gotten in back on November 3rd and started taking these setups, first trade was a gain. Price pulled back. We got a secondary buy on here on one of Jake's swing trades on here. Show the entry and the stop and the profit target. That trade was a small gain. We had an add-on entry on this, an expansion contraction on a continuation setup that would have showed in the expert advisor. Also get profits. If you're curious on these gains, I generally start with say $100,000 account, 2% risk on this. So if you're seeing a 2% risk and a 5% gain, that's a nice 2.5 to 1 profit to loss ratio. Since I've shown this a few times before, I will pop up on here. There was a swing trade on here that did go down on the red arrow, hit a stop out. So are all the trades winners? No, they're not. But right after taking the next trade set up is a continuation that hit a profit. We also had another continuation. That trade hit a profit. And then a pullback trade to a swing trade from Jake setups. Also a small gain in this case. Not all winners will be big. We had another pullback and another small winner on that one. And then, of course, we had another pullback. You're seeing how these are just adding up. Since on that last chart, I hadn't really pulled it forward to closer to current time, although this isn't right up to the most recent. After that last chart on here, we had a sell trigger that made a small gain on 2% risk, an expansion contraction buy, gain, continuation trade, gain, a swing trade, a gain, a continuation trade, a small gain, clear setup on that. That hit some targets and was also a gain. So are they all winners? No, they're not, but I did want to at least plot out something that you could expect to see out of results. I did plot back the green triangle there is showing back here. We're on 120 on NVIDIA on a weekly chart. And as you can see all the way up into the end of August, this has been a strong uptrend with lots of continuation trades on that. But if we're taking this buy setup, which says January 20th, 2023, I'm going to pull up an option program that would show, had you gotten in back on that date, January 20th, 2023, the risk was $610, total return sizable, and they can see even on the percentage of that. So when we're talking about option strategies, you can get some big winners and take a small amount of capital and see a significant gain. I'm going to pop up into the top right. This is basically just rolling once a week. One thing that Jake had said at some time back that I heard on weekly charts in the 8 open close, say uptrend or downtrend, you will see more up weeks than down weeks, and the up weeks on average should be bigger than the down weeks. So that does allow us to take weekly options and basically just roll them. That did make 63.1% on 53 winners, 31 losers, rolling every week, not all gains, but the average win at 1,400, average loss at 859, better than 1-to-1, better than 60%. We want to show that it could be on the individual charts or even with options. So I did say we're going to pop the rules in here. I'm pretty sure that Jeff won't have any problem sharing them with everybody as we typically do. But you can see if we've got an expansion contraction buy, what type of order to place to get in, where to put the stop, what's the profit target 1, what's the profit target 2 with a couple of variations, and a stop and reverse, exit the entire position on a reversal or if Williams AD changes on that. And of course, as I've mentioned, adding to winning trades, once you're break even, you can add with the JBXC on that or another swing trade on that from Jake or from myself. So I'm going to pop through these pretty quickly looking at the time. Week buy setups, same set of rules. If you're wanting to get these right now and you know how to take screenshots, well, take a quick screenshot because again, these are the rules that have been back tested and forward traded and third party verified. In fact, even the option results have been third party verified. So again, we have strong and weak setups. We're into the strong expansion contraction sell. The rules are fairly much inverted from the buy setups. And also here, a weak setup on the expansion contraction rules. And I've also popped in here and did Jake's swing trading rules. I know he doesn't mind if we had these in here because we want you to have clear rules, when to get in, where to get out at a loss, when to take a profit in advance on that one. And then the swing sell setups from Jake's programs are on here also. I included the swing setups of what are the strategies I've defined. On that one, it is using the 20-period simple moving average, similar to Vince Vora's previous programming. We do see that a lot of individuals tend to gravitate towards similarity when it comes to setups that seem to be consistent on that one. Go ahead, Jim.
And to be clear, these are all in the expert advisor, right?
My swing buys and sells are not in the expert advisor. I don't think your swing sells or buys are, but I know you've got your programs that are available in Metastock also, as they've got your original moving average channel rules with all those 5 setups on that. So again, that is available, but it's not in the expansion contraction expert advisor, but we are giving multiple setups.
What is in the expert advisor is when it changes from red to green or green to red, right?
That is, right. And the continuation trades are in the expert advisor. So go ahead, Jake.
Because that's what I do, the green to the red. It keeps me busy enough to make some trades and good money. And then it keeps me free enough in my time so I can use what's left of my old age. Go ahead, Brian.
Right. Well, we're both older. You got me by a few years, but not by much. And again, ideally, I'd prefer to be doing other things with my day than continuing to trade all day. So literally, because many days are do nothing, stay in the trade, let it play out another day. First minutes are required, but the expert advisor will give you the clearly defined setups and the triggers distinction here, A, B, C, D on the setups, reason to get in. And then there'll be that one bar that say turns green and gives you the buy setup on that. STF stands for Jake setup, trigger, follow through. And I just emulated that for the process on all of the setups that I do on that. And as you can see, rules to get in, such as A, B, C, D, rules to get out of the loss, rules to when to take profit, rules clearly on the chart for when to add to a winning position that has no risk. And as I said, long-term, these have been back-tested. In fact, I know Jeffrey's run some tests in like the entire S&P 500 and actually showed a fair amount of stability on a wide base, although certainly wouldn't recommend you trade every stock there is. Ideally, you're trading a small basket. That is something I learned from Jake. The smaller, the better. That may have some reasons to rotate in and out of stocks, but if you're looking at 100, 200, 500, 1,000, you're really just going to get stuck in too much information. And I know when I have TMI, I do nothing. So I think Jake will agree. Smaller is better, right, Jake?
Small basket is better than a large garbage can.
Absolutely, because I know even what you've said with artificial intelligence is that garbage in is garbage out. And although AI is fantastic, Jake had shown at one point, if you don't ask the right questions, the answers that it's likely to give you will not be reality. I saw that program that you put up with the seasonal trades as you tried to get AI to confirm what you already knew. If you're looking for like the most consistent profitability, higher win rate on that Jake seasonal program, is a very high win rate on that. And of course, secondarily, what I've seen, and Jake has confirmed that expansion contraction is also, say, secondarily, a very robust and consistent program. Does it win all the time? No, it doesn't. That has an acceptable win rate with a positive profit to loss ratio. Average loss divided by average gain and win to loss are how you define your equity curve. As I mentioned, at least in the picture on here with the entire program, you can run an exploration on that and do a test. And this was the S&P 500 results through everything. More winners than losers, bigger winners on average than smaller losers. So at least graphically on here, we can pop that out and see what those results have been over time. So if you have questions for either one of us, there's the contacts, phone numbers. emails. Jake and I are both willing to answer email questions. I'm also willing to do, say, some one-on-one go-to-meeting, share screens, show you, answer questions, because a fair amount of this would be show me. Jake and I are also doing the small group mentoring program, so we're both taking on small groups on that one in order to reduce the coaching costs at a reasonable value. Trading on that one, showing clear rules on that also over time. And again, that would be not just one-on-one, which can be fairly expensive, but in a group, so that you can ask questions and have contact with each one of us and actually see or get questions to your answers graphically and visually. So basically, that's what I've done here. Jake, do you have any final comments or any questions?
Great explanation, Brian. I learn something every time you do it, but I'm going to stay with my very simple approach, red to green and green to red. I want to thank Jeff and Metastock for doing such a great job in getting this program for us. Truly remarkable. Just don't make things too complicated. As long as you do that, it's going to work for you. Don't be too anxious to trade. Don't trade in the very small time frames, even though the basic day trading methods that I put in my books in the 1980s are still valid, still work well. It's just really not a good use of time. So thank you, Brian. Thank you very much again, Jeff. And Jeff, we're going to turn it back to you now.
Sounds good. Thank you, guys. Appreciate it. Oh, is it okay if we ask a couple questions?
Of course.
All right.
Absolutely.
Well, go ahead.
Absolutely. I was just agreeing.
Okay. This one's more of a comment than anything. Brian says, or Tom says, as Brian stated, the more I listen to Jake, the more I learn. Wish there was just a way to download direct knowledge from his brain. I think Elon Musk is working on something like that, but I could be wrong.
I don't think you'd like what you see if you look in my brain. You wouldn't like it at all, believe me.
Marlene wants to know, do trailing stops fit into this strategy?
Absolutely. We have two trailing stops that we use, the 3-period moving average of the low or the 3-period moving average of the high, and the parabolic as a stop instead of a stop and reverse system. So we set our parabolic settings at 0.2 and 0.2, and those two indicators, those two methodologies will work very well as trailing stops in any system that you use.
Derek wants to know if the jakebernstein.com website is still active.
Last I looked, it was.
Yeah, it should be. All right. Let's see. Carlos wants to know, do divergence buy and sells get plotted on the chart?
Brian?
Well, they're going to be in the expert advisor, so I don't think they're plotted on the chart currently, but they should show in the expert advisor. Isn't that correct, Jeffrey?
That is correct. And I believe you can scan for them too. So, yeah.
That may be an upgrade at some point, as we would obviously like to make things.
And you're showing your rules. It's like, well, why we could create a couple of these things. So let's talk about that after the conference.
Okay.
Awesome. Thank you, Jake. Thank you, Brian. Big thanks. I do kind of want to talk a little bit about the scanner, but before I do, always a pleasure. Thank you, Jake. Thank you, Brian, for everything.
Appreciate the opportunity.
All right. Very cool.
Thank you.
Let me do this. Okay, and let me do this. Oops, wrong one. Oh, there's a few buttons to push to kind of get the next thing moving on. But let me go ahead and kind of make me the presenter again. I'll show my screen. You got Jake's high school pick, as he was saying it was earlier, as well as Brian's pick. I do want to kind of just talk a little bit about what's in JBXC Complete. And when I introduce it, sometimes I like to refer to it as the Swiss Army knives of indicators, because it helps you identify long-term and short-term strength, short-term swing and swing strength, range expansion, contraction, support and resistance levels, divergences, short-term breakouts. So let me kind of skip through this just because they do a great job of covering it, but I do want to kind of show the expert advisor because we've talked quite a bit about it. And one of the things that I really like is when we designed it, we put together a expert advisor to kind of give you an idea of what all those tools in that Swiss Army knife was saying. So for example, right here, you can see right here, this was on GE when it had a strong buy. I just took a screenshot of it. The long-term trend changed to bullish. You have a breakdown of everything that's going on. The long-term is bullish, the strength is strong, the trend is in an upswing, it's also strong. Range is in a contraction and the strength is a weak contraction. You've got your major support and resistance levels here. There's not a major breakout. It's not overbought or oversold, and there's not a divergence. So if you're getting in this because you came up on a scan, it's going to give you quite a few things that I think are super important when you're trading, like your maximum loss, your profit target, your second and third profit targets, and kind of all that kind of stuff. So Expert Advisor is a great way to kind of help understand what the indicator is saying, because when you're looking at a new indicator, especially when it has a lot of shading like the JBXC, this does a good job of outlining exactly what that is. So let me go ahead and kind of go, we'll talk a little bit, and yes, I was right. You have bullish and bearish divergences that you can scan for. So if you wanted to run a scan on the bullish or bearish divergences, you can. You can also look for long-term bullishness, long-term bearishness, buy signals, short-term and long-term breakouts. Those are all scans that are available. And as we've shown, very, very easy. I think Metastock has one of the best scanners that are out there. It's very, very quick when compared to some of the other scanners. It actually does scanning and filtering, and so it can take a big list and just identify those candidates that are likely to move. And I just love this scanner. And of course, a system test. And we did run the system test on it, and we put it together. We're like, yeah, this looks really, really good. Let's make sure this gets included. So the system includes the entry conditions, the exit recommendations, the stop loss, that dashboard view. Everything is kind of included. We did sit down and also created, I like to create these classes to kind of help you get running, especially when we release products. And so Jake and Brian sat down and they talked about how to use JBXC, how to implement it in your training. I go in and actually talk about how to run scans in case you're brand new to Metastock and never run a scanner, how to navigate your charts, how to use the Expert Advisor, how to make sure you're looking at the right indicators and the views, and how to set everything up. And so that'll be available. It's instantly available as soon as you get the purchase in. Normally the purchase on this is $599. It's only a one-time cost. You pay for it, you own it forever. We are doing it on a conference promo of $499 here. That's a one-time purchase. It includes that boot camp. It includes a trial to Metastock. If you haven't tried Metastock, you want to find out why it's been rated the #1 software in its price category for 31 years in a row. It'll help you do that. And you can do that at metastock.com/conf promo. You can give us a call, 800-882-3040, or you can go to metastock.com/sales chat. All of those are there. So there you go, in any case. And let me go ahead and type some of these out. I know that Greg is going to be putting them in the YouTube chat for me too. So conf promo, if you have any questions, and then www.metastock.com/sales chat. Here we go. All right. Very cool. Do you want to say thank you this time to Stocks and Commodities Magazine? You can find Stocks and Commodities Magazine at www.traders.com. They're very smart to capture that URL early on in the internet years. They've been publishing magazines since 1982. They've got 1.2 million subscribers, 17,000 articles. Annual subscription costs about $89 and well worth it. One of the things that I think is true about life, about trading, about whatever you want is you're either going forward or you're kind of, it's like swimming upstream. If you're swimming, you're learning more, you're doing better and better, or you're kind of drifting backwards. So one of the ways I like to kind of make sure that I'm kind of improving my trading knowledge is to come to conferences like this. And also, I love getting my Stocks and Commodities magazine in the mail. So if you're interested in kind of checking out Stocks and Commodities magazine, go to www.traders.com. And great partner. We appreciate them. Okay. Of course, we are Metastock. We're going to do a prize right now. Greg, are you available to do a prize?
I am so available.
All right, let me go to my prize sheet. Why don't you tell people how that are watching on YouTube Because if you're not watching on YouTube, you're watching on GoToWebinar, and you do qualify already. But why don't you tell people on YouTube how they could qualify to get a prize?
Yeah, if you're watching on YouTube, the best way to do this is just go to our homepage at metastock.com. There's a big banner right at the top. Click on that banner. Then you can see all the information about today and the next 4 days, as well as register, and then be eligible for the fantastic door prizes like the one we're about to give away now.
I'm going to give away, this prize is valued at $2,500.
Wow.
It's a Mad Hedge technology letter. You know, John Thomas, he comes in and he does actually a pretty good job of looking at macroeconomics, is how I would call it. He's got a newsletter that highlights the most important developments in tech. It's sent by text and email, and somebody's going to be the lucky winner of a prize, and it just depends on if Greg Lewis picks your number.
Let me tell you real quick. I saw a thing on YouTube about the most randomly pulled number between when people are asked to pull a random number between 1 and 100. Do you know what that number is? Excluding 42, because that's because of the movie. What's the most random number?
51. No. Okay. What is it?
It's 37.
Interesting.
Yeah, but I pulled up a random app so I could give you a proper random number, and right now it is 4204.
4204. Okay.
Yeah.
And that would be Sean B. Okay, Sean, you've won that prize. We'll be giving away a lot of prizes. As long as you're registered, I'm looking over here like the camera's over here. As long as you're registered, you're going to be able to qualify to get the prize. And so, actually, that's the start of your email address. Sean B, congratulations, you've won. Thank you very much for the assist, Greg. I appreciate it.
You are certainly welcome.
Derek says, great seminar. I appreciate that feedback, Derek. I'm glad you're enjoying it. All right. Our next guest is not, actually, Rick Sadler could not make it today. I forgot to take his stuff out of the thing. I hope he's okay. He had a little bit of unforeseen circumstances, is what he said. So Dave Aquino is our next speaker, and he's going to talk a lot about kind of the patented methodologies that they've used. He's going to talk about the MQ Trender, the Trender methodologies, a product called MQ Trender Pro. They do a lot of really cool design over at Microcont. We're actually going to talk about their patented methodologies in just a couple of days. But for now, we're going to have Dave talk to you about the trending algorithms that they got to help you identify really good trends in the market. Dave, can you hear me?
Yes, Jeff, can you hear me okay?
Yeah, you sound great.
Excellent. Excellent. It's really nice to be with you again. Nice to see you. It's been a while.
It has been way too long. I'm glad you're back. How have you been?
Thank you very much for the invitation. I've been busy.
Yeah, okay. That's life, right?
I've been busy, and markets have been exciting.
For sure.
Things are always happening over here at Basecamp Trading, and we're really excited to have this opportunity to work with you guys again. Last time I saw you, I think it was out in California. You guys invited me out there and got to speak in front of a group of people. So it's a wonderful opportunity. Thank you.
I think that was definitely pre-pandemic. Like
that
was a minute ago.
I had to think back also. I think it was maybe the December before.
Yeah, I think you're right. All right, cool. Well, we can hear you. I know we're starting you back 10 minutes late, but don't worry about time because you're taking us home.
Okay. All right. That sounds great. Thanks a lot, Jeff. All
right.
My pleasure. All right, everybody. Well, again, thank you very, very, very much for this opportunity to speak with you all. I probably have one of my longest relationships with trading with Metastock. I actually used their platform prior to joining Basecamp while I was still a stockbroker. So it's a really good opportunity to speak with you all today. So Jeff was telling you a little bit about us, and we're going to actually talk about some indicator-specific methodologies. One primary method that we use to identify trend and trading with the trend is our indicator I'm going to highlight today called Trender Pro 2.0. Now, We do use it in conjunction with some other indicators. I'm going to show you how we do that. But again, it is what I think functionally one of the most efficient trend following indicators and the one that really gives us an advantage in the market. So just, thinking about our audience today, how many of you have tried reading about or heard other traders that have made it big? I'm sure what you hear a lot from people is like, how much money have I made? Showing you big numbers. Okay. You might think about like, well, this is why I'm going to keep working at it. So I can find this success too. I think today you're taking that good step forward. That the one thing we stress at Basecamp are fundamentals, fundamentals of price action, trend, and momentum. So I thank you for letting me speak with you today. Really quick risk disclaimer. We just want you to know that trading inherently is a little bit risky. Before you trade or invest, you should carefully consider your investment objectives, experience, and ability to tolerate risk. Now, we've done everything we can to ensure this information is accurate, but we're providing it for the sole purpose of education and helping you make your own investment decisions. Again, past performance is not necessarily indicative of future results. Here's Rule CFTC 4.41. U.S. government wants me to let you know that trading futures and options is inherently risky. All right, so just a quick show of hands. How has your trading been so far this year? Are you guys actively making money in the market? Okay, this has been a little bit of a period of volatility, I would say, especially in the last 5 to 6 weeks. For some of you, it's been a little bit disheartening, maybe a little bit volatile or chaotic. Maybe some of you have taken advantage of it and made money. If you are losing money, take heart, because there are ways to streamline your trading and to a certain extent simplify it, because sometimes traders, and this is my experience, I've been doing this for over 10 plus years now, and the traders that come in to Basecamp, a lot of times they're either brand new and they still don't know what they're doing, or they've been at it a long time and they're inundated with indicators and techniques and strategies and all of that. And just because you have all this knowledge doesn't necessarily mean you're going to be automatically profitable. If you can get yourself to the point where you're just breaking even, that means you're just a step or two away of refining the way you trade so that you can get into the realm of making money. Okay, so just a really quick introduction. My name is Dave Aquino. I am a partner and head options trader at Basecamp Trading. I've been in the financial markets for over 27 years as a general securities broker, registered investment advisor. I work for the Vanguard Asset Management Service, Ultra Client Group for about 5 years. But I've been at Basecamp Trading as a trading coach and a mentor for over 11 plus years now. This is a picture of one of our in-person boot camps. And we at Basecamp have a combined experience level of over 50 years in the hedge fund and professional money management field. We are a trading technology and education company. We've got patented technology that have been featured in Bloomberg, CNN Money, Barron's Money Show, and a Traders Expo. And we help traders go from consistently losing money to some running their own investment funds as professionals. Again, we think of ourselves as a community in which we can support each other and encourage each other to continue to grow. So again, after getting through the point of, are you consistently making money? Because I'm sure you know your bottom line. are your current tools working for you? What are you actively using when you're trading? Okay. And because of your either technique or your tools, is your account up in 2024? Because I heard this morning that the S&P 500 is up over 20% year to date. And if you as a trader are not at least 20% up on your account, you are actually below the index. Okay. Most traders that are trained can outperform the markets on a regular basis. You just have to be able to do it. Okay. So if you're not at that level, I'm sure that's not where you want to be right now. Okay. Do you lack confidence in the trades that you take? Okay. One thing you'll learn is new people, they will actively trade while they're making money, and they will hide under a rock when they're losing money. So the question is, where are you in that kind of range? Do you have confidence in what you're doing every day? Okay. Do you feel maybe you're taking a lot of risk because you're not consistent yet in making money in the markets? Okay. Are you going from a bunch of different strategies, hopping from one to another? One will work for a while and you'll jump to another when you start losing money and then jump again, right? You can't make progress that way because you're not going to be consistent in the way you trade over long periods of time. Okay. One common thing, and this is where we're going to start talking about trend, is that one way to increase your odds of success is to trade with the trend. Make sure the trend is your friend. You all have heard those terms before. One way a lot of traders shoot themselves in the foot is that they're trading on the wrong side of the market. Okay, an example like this, right? So another way, one of our traders, his name is John Osborne, he puts it this way: you're trading on the wrong side of the mountain. Okay, so in this case, let me back that up. We see a nice trending market running nicely higher, and all of a sudden we get this pullback. Now on that pullback, you're like, oh, this is a great opportunity. So I'm going to go ahead and buy right here because it's still bullish, right? I'm going to go ahead and buy, and I'm going to catch it right at the bottom. I'm going to make a lot of money. All right. And once you do that, it pulls back even more than you thought, and you get stopped out. Right? That's because you were trading on the wrong side of the mountain when you entered that trade. You had a bullish entry on the way down. Now, how could you have known that market was bearish? You were on the wrong side. Now, that's the question we're going to get to today. Now, after you get stopped out, you try really hard, and now you're looking for the next entry opportunity. You think you see it here, but because you lost money previously back here on your last guess, you hesitate, you wait, and you say, well, I'm not quite sure. Maybe what I'll do is I'll wait and see. And then while you're waiting, the market takes off to the upside and leaves without you, right? It turns out that the location where you originally thought to get in was the right trade, and you missed out on an explosive move to the upside. How many of this has happened to you guys? Okay. This is just one example of trades that seem to go against us, right? Sometimes it feels like the market is always working against me. It's painful, right? It hurts you in the wallet. It hurts you in terms of your confidence, right? Some of you, after you get beaten up after a period of time, maybe even think about giving up trading, right? You feel like a failure, and you're just trying to make it work. So you might think, this isn't all fun and games, is it? The real problem is this, okay? And we'll talk about feelings here for a second. all traders pretty much feel feelings like this. All long-term successful traders have experienced the same exact feeling. The market is complicated. It seems to be highly unpredictable and random. It seems to know just when you get in so that it can go the other way. But in reality, it's not. The market is not out to get you, even if it seems like that at many times. Okay? The market actually doesn't even know you're trading it. Okay? Experienced long-term traders hang in there and try to figure out what the market is doing, that it's not out there to get them. Actually speaking, it's there and telling them what to do at what time. You just have to know how to read the chart so that it can tell you what to do. Okay? As a saying here is the chart's telling you what to do. You just didn't hear it. Okay? So this is exactly what MQ Trender Pro was designed for, to analyze the market for key factors that underlie the market movement and make them easier to see, easier to anticipate for any trader, new or experienced. Because if you can see what the market is telling you and act at the right times, you can finally get to the insight into what moves the market and where the market is going. So imagine being able to anticipate stock market movement, entering and exiting trades with confidence, finally feeling connected with the stocks as you watch your accounts grow. Basically, being in tune with the market, because the trend is your friend. And when it's revealed in a way that you can use it, it's going to make a huge difference. Okay? Let's see here. So what we're going to talk about today is the introduction to the MQ Trender Pro, why momentum trends can help you no matter your trading style, and how Trender Pro 2.0 performed with recent market movements. Okay, so what does Trender Pro 2.0 do? Right? Trender Pro 2.0 is designed to quickly and easily determine the market environment and direction on any time frame. It helps traders stay in winning positions longer and filters out lower probability trades, increasing profitability. And it's easy to determine if the market is strong bullish, neutral bearish, or strong bearish. You see the spectrum there? So if you know what the market's preference is at that time, you can isolate which side of the market you're going to be trading on so that you will be trading with the market. Other ways to put it, you're going with the current or you're sailing with the wind, right? Or in John's description, you're on the right side of the mountain. So why use Trender Pro 2.0? Again, to keep you from trading on the wrong side. The other benefit of Trender Pro 2.0, once you know which side, bullish or bearish, the market actually favors, it helps you hold on to winning trades longer. Okay, how many of you have taken a trade, been pleasantly surprised that it moves in your direction, and you have a nice profit, and you close it out feeling pretty good about yourself? Then 10, 20 minutes later, you look at it, had continued going, and you would have at least doubled or tripled your money from there. What you're doing with Trender Pro 2.0 is identifying when the ride is over, when the trending move is over, and it really helps you maximize your gains. The other thing Trender Pro 2.0 does is that it helps you avoid choppy markets. How many of you, maybe as day traders or swing traders, get into positions and feel like all the market does is bounce around, right? Clearly, you're getting into a position hoping it moves, and then it moves a little bit your way, and then it comes back, moves a little bit your way, and then comes back against you. Okay, if you're a stock trader, it's frustrating. If you're an option trader, all that time you're losing money. Okay? And worst of all, if you're getting in and getting out at the wrong times, you're just actively losing money too in those choppy markets. Okay? Trender Pro 2.0, by the fact that you're trading with the trend, increases your win-loss and increases your reward risk. Okay? Because you're taking higher probability trades and you are holding for more profit. Okay? This is a quick snapshot of Trender Pro 2.0. You can see it's up here in the top left, in the top portion of the charts. This is a stock chart that is actively moving in a choppy pattern. I'm just highlighting a couple of things here, that the markets go from green, which is bullish, blue, which is neutral, red, that is bearish. Okay? So when the markets transition like that, you see it's a natural progression. You go from green to blue to red, red to blue, and this time goes back to red, goes back to neutral, goes back to green. So in order to go from bullish to bearish, you transition from green to red, to blue to red. And that's how you know how the trend is changing over time. And you put that pattern on top of MQ momentum, where you see both price momentum moving higher, price momentum moving lower, and moving higher, moving lower, so that not only can you trade, like in this case, bearish Trender Pro 2.0, but also bearish momentum. When they are in line, you have the potential of a very clean moving market, okay, that has the ability to follow through, because the price action in Trender Pro 2.0 is already bearish. The momentum is carrying bearish momentum lower, price action lower. So put those two together, you have higher probability trades that way. Same thing for the upside, the bullish move to the upside. We go from neutral to green. Price momentum has been bullish the whole time. So we continue to move higher, bullish momentum, transition from blue to green. You can enter at this point. Sorry, looks a mess. So here's the transition here. This is that's your natural entry point. Market goes higher. Momentum was already bullish. Price action goes higher. Technically also, you know, to get out, because momentum starts forming a divergence, and right here is your exit. So you can use them in conjunction with each other. This is bullish up until the point your momentum indicator tells you get out, and shortly after you transition from green to neutral. See that? And then here, upon the break, momentum is red. We enter here, price action goes down. You actually stay in it till we exit here. We actually have a trade setup we use with Trender Pro 2.0 is when we transition from green to neutral to red with a concurrent directional momentum. That is an entry point, and you exit when it stops being red, and that's where it exits there. So that's just a really quick look. So let's dig into some of these signals. Okay, I already showed you the bars here. These are actually open, high, low, close bars. Okay, and what the indicator does is actually paint the bars the specific color. Okay, and I'll get to the color itself. This is inherently bullish. So we're clear to do a bullish trade, and you can verify that the momentum is also bullish. Okay. And another thing that this indicator has is a group of signals that, let's say here's that transition from neutral to green. So we enter. The yellow bars are trailing stops. So if I enter here, my stop is underneath. As we get to this point right up here, we move the trailing stop below those yellow bars. They come up, they go here, another yellow bar. This trailing stop moves up. Price action moves up, bottoming. The gray means it's extended. That means we can't add on more calls. But once we start going, trailing stop gets moved up, continues to move higher. Trailing stop moves up. Now you can either use the trailing stop to get you out, or the fact that it turns blue and actually turns red here. So that's your exit. Okay. I mean, that's the strength in that market. And that's a significant move on the daily chart, right? That whole time, what Trender Pro 2.0 is telling you is that Apple is in a bullish trend, that it is very likely to continue to move in that trend, especially with the strength in the momentum at various points. There's a little bit of a bull flag right here. But it also is telling you either one, to maintain your bullish position, or two, continue to trade only the bullish side. Don't be looking for reversals. To maybe continue selling, in the case of the daily chart, continue to be bullish when you're selling maybe credit, maybe covered calls, or buying covered puts, or selling covered puts, I'm sorry. Selling covered puts, that's another strategy, right? Everything should be leaning towards the bullish side. Hold on if you have long positions, etc. Okay. So let's talk about how that works. And I'm going to get into the details now. Trender Pro 2.0 references multiple price action and momentum filters to determine bias. Okay, bias is really important. That's another word for what's the current trend that I should lean towards. That's the market bias. It adapts and references different variables from different market environments to do that. Now let's get into the mechanics. How do you read Trender Pro 2.0? Okay, there are 5. The filters market. Trender Pro 2.0 filters markets into 5 color-coded categories. The first one is strong bullish. That's the bright green color. There is a neutral bullish. That's the transition from bright neutral, which is blue, to bullish, which is green. So in the middle, there's a neutral bullish. And then we have strongly bullish. To the downside, we have an intermediary neutral bearish that goes to, which is dark red, to strongly bearish, which is a bright red. When you are in a trending trade, you really want to see bright colors, either bright green or bright red. It gives you a lot of confidence to continue to hold the position. Okay. I already showed you the yellow bars, and basically those are formed in a trend, either bullish or bearish, when we get a price move that pulls back to a certain extent, that it could, if as the market continues to move in the direction of the trend, as a very good place to move your stop loss, right? To move your stop loss up to. Again, strongly bearish, strongly bullish, or neutral, right? And then there's the neutral bearish and neutral bullish in the middle. Okay, again, If you get extended, sometimes people get confused, like, oh, it's not green anymore or red. It means it's gone so far, so fast that it gets extended. Now, this is not like one place this gets confused. When we say extended, it is not like an oscillator, like it's a reversal opportunity. It's not the case. We don't want to play the reversal in an extended situation. When the markets are either red or dark red, at certain points you can still add bearish positions. When we're green or dark green, you can still add bullish positions, basically pyramiding, adding more and taking more advantage of the trend. But when you get to the point where it's maybe moved too far, too fast, it gets extended. And at that point, you want to just let it ride. You don't want to add any more at that point. That's all it means. And then finally, trailing stops. Pretty simple. A lot of our traders will reference their trading stops, but they usually use either price action or they're using the transition from either green back to neutral or red back to neutral as a potential exit point. Maybe not the trailing stop. Okay, so again, it's pretty simple. Most of the time when we are actively trading, it's either going to be in a green state or in the red state here, right? So what you notice is when the markets are trending, they'll usually stay one consistent color. And as they change, they may dip, go red, neutral, and then sometimes they'll hit a period of place like this. You see where we get green, we get red, we get blue, we get green, we get blue again, we get green again. You see that? That shows us there's consolidation. So if you're going from a period where it's consistently green or consistently red, usually you'll transition to neutral, but sometimes neutral will be within some sort of range. So that's where you have to be careful because you don't want to trade the chop. You wait for the trend to this actually is a pennant, I'm sorry for my drawing, turn green again, and then now you're trading with the trend. Trading with the trend this entire time. So let's just say, clean this up again. So this is bullish. This is a pennant. This is a breakout. So let's say you put your stop down here once you enter here. Okay, you're green, you have a little dip. It's still green under that yellow and it moves higher. So I'm going to move my trailing stop here. Okay, one tip, if you can identify the general trend of the market, either bullish or bearish, and you isolate, say, the hotter stocks that people are consistently buying or selling, depending on which direction the trend is going. That's where you should use Trender Pro 2.0 on those stocks. Now, this works fine for the index, but you're going to get a little bit more back and forth in the index, right? But there are times where you will get stocks, because the last time we used this slide, I asked Thomas, like, where'd you get this slide? So he told me the stock. I can't remember exactly which one it was. But at the time, it was a very, actually, it's Apple. It's Apple. And I said, it's very consistent. And I said, yeah, because this is the thought process there. Remember that period of time when all stocks were having, all the Magnificent Seven stocks, some of them were having some issues, some of them weren't really doing as well. And then Apple was where everybody was going, right? That's what I'm talking about. That's the pattern. That's the type of situation that Trender Pro 2.0 is really good for. Because if you know that the money is flowing into that stock, a lot of times the reason why you have trouble trading it is because you don't know when the trend will when everybody will jump out, right? Like this stock is so hot, it feels like at any time it could crumble, right? And you're like, I have no idea, because you have a dip here, you have a dip here, you have two dips here, you have a dip here, a dip here. You notice that? But technically, Trender Pro 2.0 kept you in the trade. That's super important, because if you exited at this point right here, you felt really good to capture this big move, right? But then when you look at it, maybe 2 months later, you missed out on all of this. The key is identification of the trend. And once you're in that trend, be able to ride it out as long as possible, right? This is kind of a surging move, and this works very well. And I would say, in my experience with Trender Pro 2.0, if you get a situation where you can apply it to the bullish side, that is probably the best situation you can use this type of directional move, this surge in a stock, because this could run for 6 months, okay, and have a massive move. And I'm sure you throw NVIDIA on this, it does the same thing, okay, because this is where everybody is moving to. And the thing is, but most of the time people know what those stocks are. It's hard to keep those a secret. That's the best place. Someone asked me before, what about the bearish side? This is harder on the bearish side. Not so much because Trender Pro doesn't work so good. It's hard because the moves are crazy. You can actually see it here. See the drop? It's Trender Pro 2.0. Look at the bounce, right? So if you short it here, you're good. You made money in the first 4 or 5 days, and then the bounce took like 3 days. And all of a sudden, all the money you made is gone. And then all of a sudden you freak out a little bit, right? So the downside bullish moves move like this. That's why I suggest it. Downside moves look like this. And you get thrown off on every single bounce, right? That's a crazy ride down. It's fast, but I'd rather be strong and steady for a long period of time. It's much easier for traders, okay? Just a little bit of tip. How do you use Trender Pro 2.0 again? Again, simple. Enter long on the green, enter short on the red. It gives you, like I said, confidence to stay in longer. And if you're short, stay in as long as you're red. It really is a very simple formula. Here is a long entry. Okay, trailing stop, trailing stop, trailing stop, long exit. That's really the simplest way. Now, there will be times it's not perfect like this. Every once in a while where those trailing stops are, it could pull back enough, it actually turns neutral. And then it'll turn back and turn green and then go on and keep moving higher. So what I tell traders in those particular cases, I said, look, if you have multiple contracts, when it turns neutral, you can take your profit. The other thing you can do is look at the higher time frame and see if it is continuing to be green. Because if this is the daily chart and the weekly chart's still very bullish, chances are it's going to have a good chance to continue higher. And then after a bit, you can maybe adjust your trailing stop. Okay. All right. And again, just a couple more highlights of Trender Pro 2.0. The trail stops based on price action. Usually, I have some traders that like to put their stop loss right under, basically touching the trailing stop. That's not a good idea. Leave a little cushion so you're more likely to stay on top of it. Okay. All right. So again, here's that trailing stop, and once it keeps going, right, I like to let it. I don't like to put it right here. Like if you put it right as the low, you're going to get stopped out and it can continue to move higher. So give it some space, right? Give it some space. Okay. And like I said, here's just another example. Long entry. Again, MQ momentum, I really look at the indicator line. The histogram bars are also useful, especially if you're reading reversals. But when I'm using in conjunction with Trender Pro 2.0, and I'm getting in when the price action and the momentum is bullish, I'm getting in when it turns green, I'm getting out when it turns not green, which is blue, right? And then you can enter here with the red, it comes back down, and this is where you exit. Okay, you see how it can spike and then move higher? And here's long entry, trailing stop, and then you can either get stopped out here, right? Sometimes what our traders will do also, if you get stopped out because it turns blue and it turns green again, you can enter on the first green or the second green. Re-enter, and it continues. See that? So again, if all you did was that, enter on the green, exit when it turns not green, enter on the red, transition from blue to red, and then exit when it's not red. It works very, very well. Okay, let's see here. And again, I just want to talk a little bit about MQ momentum. MQ momentum, it's kind of like you've seen momentum indicators before, like MACD. We actually developed MQ momentum as probably one of our very first indicators. And so it has two lines, a solid line, a fast line, or a slow line, which is a gray dotted line. It's just like MACD. And the difference between the fast line and the slow line are represented in the green and red histograms. So those are important, especially when you're comparing one set of histograms to another. Like if it's a topping pattern, let me see if I can find a good one here for you. Yeah, here. Sometimes they're hard to see. There's a double bottom there. Sometimes they're a little delayed. There's a histogram bar here. Here's one bottom, here's a second bottom. That usually results in a bullish move because all you see is the momentum. That is a bullish divergence. One thing that I actively do, I pay attention. I actually draw lines sometimes on my momentum indicator line. Like what is the line through that? So I understand which direction it's going in. So I clearly know that's going down. That's super easy. That's going up. This has moved down, right? That clearly moved up. It's a little bit bumpy, but then that's a quick move down, quick move up. It doesn't have to be super scientific. This move down and this a move up. So if I use Trender Pro 2.0 and they are moving in conjunction with the momentum line, okay, and I'm looking for those signals that transition from neutral to bullish and then from bullish to neutral. That is my entry and that is my exit. And then when I go from neutral to bearish, that's my entry. And then from bearish to neutral, that's my exit. If they coincide with MQ momentum, I have a very good chance of having a move. And this is basically what we refer to as an impulse trade, a market that has both momentum and direction, and it is already moving, right? The reason why Trender Pro 2.0 transitions from neutral to bullish is because the price action has moved, right? From neutral to bearish, the price action has turned down. You see, most of you all will get into a position because the setup says it should go up or the setup says it should go down, right? We don't play that type of trade. We will get into a trade when something is already happening. And then we have the movement, the price momentum pushing behind it, okay? MQ momentum's lines here, as you can measure it on this. This is actually, this is positive momentum, this is the zero line, and this is negative momentum. For those of you that love physics, this is velocity, okay? That's what those numbers represent. Velocity in terms of going up, velocity in terms of going down. So let me ask you, you math folks, your physics folks, what is the slope of this line? If this is velocity, what is this? The slope of the line. Acceleration. Acceleration. A-C-C-E-L. Acceleration. So if I have a bullish trend, and Trender Pro 2.0 says it's bullish, and it's going from neutral to green, and I'm entering it, and this line says it's accelerating in the bullish direction. So speed is accelerating, it's increasing its movement up, the rate of its movement higher. That's the trade I want to get in, right? It's like getting into a car and it accelerates away. How likely is that to turn around and go in the opposite direction where you lose money? No, you're getting into a car that's pointed in a direction, and that's the direction the traffic's going. That's the trend. And then you're getting in, and that car is already moving and accelerating higher. You are very unlikely to lose money because there had to be a huge force that turns around the car and pushes it in the opposite direction. But the market can't turn and go bearish when the acceleration on the momentum line is bullish. You see that? I stress this. I teach this to my beginning traders because I want them to have a feel of price action and understand what it represents. It's not a bunch of numbers. It's not a bunch of symbols. It's things happening to price and price momentum. So that's what we're trying to measure, and that's where our advantage is. Someone asked in the past, why MQ momentum? Because you see, let me just erase a little bit of this. Do you see how sharp these lines are? You see how they pivot? You see how they turn? Sometimes they're like little peaks. MQ momentum was created because we were frustrated with the MACD indicators and other momentum indicators out there, because we wanted a highly responsive indicator, something very sensitive to changes in momentum, because it gave us an advantage to see that quicker than anybody else. So we created it so it didn't look smooth like MACD, because if it has a natural smoothing mechanism like MACD does, it's hard to read the change in momentum. It's kind of the difference between a Toyota Camry, which is generally soft, it's a passenger vehicle, you feel comfortable when you're riding in it, and then when you're in a Lamborghini. When you make a left in those two cars, a sharp left, the difference is the Camry will be nice and easy when you turn. You'll feel it, but it's nice and easy and soft. And the Lamborghini, the reason why you're strapped in is because the thing will turn on a dime, and then if you weren't strapped in, you'd be in the other seat, because it pivots and it goes. That's what MQ momentum is. We want to be highly responsive. Okay. Let's see here. So a couple of other things on Trender Pro 2.0. I tried to show you a couple of ways we make money with momentum and trend. Again, let's see here. The one other thing I would suggest is that I kind of alluded to this earlier. I don't know how many of you are day traders, how many of you are swing traders, but Trender Pro 2.0 works in all time frames. I use it to trade not only here's how useful it is. I actually use it in a strategy that uses it on a 30-second time frame in conjunction with a 2-minute and a 5-minute. Okay, so that's my day trading tool. I also use it on a 5-minute to determine, trend in the morning and in the afternoon. So that's kind of a longer term day trade. I take a look at it on the hourly. I know Thomas Wood and at Basecamp uses it on the 240 for a lot of futures. I also personally use it on the daily and the weekly when I am considering repositioning assets in my long-term accounts, especially the weekly. And the one thing I did notice, one place I do notice is back in 2022, when the Fed started raising interest rates, there was a transition to from bullish to neutral in bonds, and then shortly after from neutral to bearish in bonds. And bonds, which was, I was looking at TLT at the time, bonds proceeded to fall for the next 18 months. Okay, I mean that's how useful it is in so many different time frames. But that reminded me of a couple of things. But this multi-time frame confluence, if you use Trender Pro 2.0 on a 1-step up chart, so if I'm trading a 1-minute, I'll use it on a 3-minute or a 5-minute. Okay, because if I am looking at the 5-minute trend and it's clearly bullish or bearish, I won't take bullish, or I will only take, if it's a bullish 5-minute trend, I will only take scalps or quick day trades in the bullish direction. If the 5-minute time frame is bearish, same thing. If the 5-minute momentum is neutral, I'm very careful before I do a bunch of scalping, because the market is neutral. It's not going to move, right? How many of you are day traders and maybe tried to trade the last 3 days? Market hasn't moved in the morning, right? You get chopped up. Like, how will my trader asked me today, how will I know when the opportunity comes back so I can trade? Well, wait till we get out of the channel. Wait till we actually have a good trend, right? That would be a good thing. And I would watch for that maybe on the hourly chart. And then that hourly change in the hourly chart's trend out of this consolidation pattern will lead to a trend on the daily. It's going to work its way out. It always does. And honestly, the same thing, you can do it in Tesla. No, I'm not Tesla. I'm sorry. Tesla's been bullish because I just did a thing on that. NVIDIA. That's what I wanted to tell you. NVIDIA. When NVIDIA starts moving, use Trender Pro 2.0. It will lead you to the next big move, whichever direction that is. All right. So let me go ahead and talk about what's included in the Metastock add-on, because you can get Trender Pro 2.0, MQ Momentum, and a couple of things. Let me just talk about that. Here you go. It is MQ Trender Pro right there, and MQ Momentum. All right. I actually did not touch too much on MQ Trend, which is another thing. Let me just quick pull it up. It's been hiding out right here. See this trend ribbon, the very bottom? This is Trender Pro. This is MQ Trend. So if you have 3 things now, you have Trender Pro 2.0 saying it's bullish. You have a secondary trend indicator right there telling you you're in the bullish zone. And then MQ Momentum telling you this is bullish. 3 things telling you that's a good bullish trade and should run for a while. That is when everything lines up the right way, it greatly increases your chance of success. Okay, and that's what MQ Trend is. You have Expert Advisor in there. I'll show you that in a second. And you have some explorations, bullish explorations and bearish explorations that you can run. I'm sure a lot of you are familiar with Metastock explorations. We have a very extensively written user's guide, and we have a bunch of different layouts to suit your preferences. Okay. So again, 4 indicators, 3 are background, so you don't have to do a lot of different stuff. And then MQ momentum right there. So they're kind of on the chart already. Expert Advisor displays Trender Pro 2.0 results. It has highlights, symbols, and alerts, and trend ribbon displays. And that's the MQ trend that I was talking about. Again, it's highly customizable. So you can, again, everything is laid out in the manual. To be honest, I don't play with the controls. They know better than to let me mess with the controls. I'm the guy that they give the new toys to. Figure out how to use it to make money and see if you can break it. So I usually don't tinker with it. That's usually Thomas Wood and John Osborne. But from what I understand, this is John Osborne did a lot of this, and Expert Advisor is extremely useful there. Everything again is laid out in the there's the ribbon right here. I'm doing showing you. I knew I was at a place to show you that. And then they built in alerts, expert commentary. You can pull that up also. So Trender Pro 2.0 highlights, signals, and trend status. So it can kind of spell things out for you. And then these are the explorations, just different usages of Trender Pro 2.0. 2.0 bear new short entry, bear surge breakout, bear surge breakout 5, and the same thing for bull. Bull new long, bull surge breakout 10, bull surge breakout 5. Okay, and let's see here. Yeah. Oh, those are 5 and 10. Those are based on the number of bars. That's what it is. That's not time frame. Okay. And again, everything is right here in Trender Pro 2.0's Metastock book. Again, there's 46 pages of that manual. And again, the different layouts. So it will help your preference, how you like to see it on your screen. Okay, so what makes Trender Pro 2.0 a great choice? Right there, easy to understand, intuitive color coding of bars, clear signals of entries, exits, trailing stop points, MQ momentum included to see the hidden direction and power behind price. Remember what I showed you about that indicator, MQ momentum. Just remember the slope of that line, that is the acceleration. You just remember that aspect about it. You will almost always be on the right side of momentum. MQ trend based ribbon gives a broader trend bias. That's another trend filter. User enable alerts to bring attention to key signals. Works in all markets and works in all time frames. Explorations provided, scans that align with entry signals and breakouts. This is great for novices and experts alike because, guys, we're dealing with trend, we're dealing with momentum, we're dealing with an indicator that says it just turned green or turned bullish and it's trending. And then when it's not trending, it'll turn neutral. Or same thing, it just turned bearish, it was trending bearish. Oh, it's not that bearish anymore, it's just turned neutral. Super simple signals getting you in and out of positions, right? Even if you need a double check, like, hey, I have this good setup, I think it's gonna work. Let me just take a look at it, what it looks like on Trender Pro 2.0, because I wanna take a bullish trade. I don't wanna take it if the trend is bearish. At least that way it keeps you out of trouble, okay? This is super easy to understand, simple to use, and is very consistent. Remember, this goes for any time frame. Okay? So if you're ready to learn, this is what we have for you. This is the Value Charts Trender Pro 2.0 bundle. Now, normally there is a $2,240 one-time cost and $1,495 for both. That's the normal cost, $22.40. Sorry. What we have for you today is a special price of $14.95 for both Trender Pro 2.0 and the MQ Momentum Indicator. Plus, you're going to get a 30-day money-back guarantee, plus a free trial to Metastock RT with data. Now, the link to go ahead and get it, let me just type it up here. I want you to make it super simple. Thanks, Jeff. Jeff beat me to it. All right, so Jeff just placed in the chat the link, so you don't have to type it. www.metastock.com/sales chat. Okay. That's kind of interesting. And then, or you can just go, sales chat right there. And then that way you can get to it. The phone number, in case anybody needs some assistance, 1-800-882-3040. Again, the link is www.metastock.com/sales chat. Okay.
All right. Perfect.
All right.
Yeah, and you can go to the sales chat link if you have questions, or if you just want to pick it up, you can go to metastock.com/valuechartc. That's value charts, plural, with a C for combo at the end.
All right. Well, Jeff, I really appreciate the time. Thank you
It's
very
good to
much for
see you
having
again.
me.
You did great.
Thanks. See you later. Bye-bye.
Thanks, Dave. Bye. All right, very cool. Let me go ahead and do this. And let me go ahead. We've got, where'd the control panel go? All right. Let's turn this over. Okay, and do this. Presenter, show my screen. We also do have, it is also available up at the conference promo page. If you just want to get, you should get both of them, but if you just want to get MQ Trender Pro, you can get it for $747, which is about half cost of what is on the Value Chart C page. So that does come with a 30-day money-back guarantee, a trial to Metastock, all that kind of good stuff. 800-882-3040, metastock.com/saleschat, or metastock.com/conf promo. All right, Gregory, I want to, Gregory, if you're there, well, I'm going to go ahead and give you a minute to find your mic.
Here.
How you doing?
I'm doing good.
Let's do a prize real quick. Well, we didn't give away. I skipped a couple sessions, and
I
I don't
several
want.
random numbers prepared.
All right. So this one, let's see. The prize that we're going to give away next is 1 month of platinum recommendations. Let's see. And access. Okay, so this is a Trading Wins prize. It says Vince Vora. Vince spoke earlier today. It's 1 month of platinum recommendations, or 1 month of recommendations to his platinum recommendations. Gives you the entry, stop price, objectives, and updates as they approach us. I'm sorry, this is actually a price from Oscar Carboni, the Omni Room. I didn't have it exactly written down, but it also gets. Oscar's great, yeah. We're going to give away 1 month of his access to those, and that is a normal value of $199. Give me a random number, Greg.
The first random number is 3515. 3515. 3515.
That's a Dave J with a Yahoo address. So I'm going to go ahead and make a note of that. And for good measure, because it sounds like you want to, let's give away one more prize.
I say yeah.
All right, cool. Let's see. This one will be the access to the Silas Peters Price Action Weekly Playbook. This is weekly at price action alerts. You receive top of the trade weeks and avoid hours of research in the market. The value of this is $9.97. And give me a number, Greg.
Are you ready?
I'm ready.
2491. 2491.
Oh, this is a winner from India.
Awesome.
Yes. Let me go ahead and make a note of that real quick. Okay, and this is the 3. You know what happens is if I forget to write it down right now, I have to go watch the video. So, all right. Thank you, Greg. I appreciate the assist. Let's talk about our great sponsors. And we have Stocks and Commodities Magazine. Really appreciate Stocks and Commodities Magazine. You can find more about Stocks and Commodities Magazine. Get a subscription. You can actually even get a free sample issue sent to you. www.traders.com. Highly recommend. Thank you again to the CMT Association at www.cmtassociation.org and AAII.com. While you have some free time, you should go join our partner, the Traders Forums community. It's live market chat with other traders. You can share market ideas, learn about trading, lots of information up there. All that completely free at thetradersforum.com. Go up there. Go sign up. Of course, we are Metastock. All of the offers we talked about today, and there was a ton of them, can be found at metastock.com/conf-promo. There you can also sign up for a buy one, get 2 free of Metastock. And also take advantage of, we talked about some really, really good add-ons today. Vince Vora's Victory, JBXC, the MQ Trender, just to name the first 3 that I can remember. All of those are great. All of the stuff that they talked about today was great. So metastock.com/conf-promo. A big thank you for everybody for being part of the event today. Tomorrow we have another lineup of great guests. I'm just pulling that up right here. We're going to start with Zahir Anwari, who's going to kick us off at 10 a.m. Eastern Time, followed by Fausto Pugliese. Fausto talks about how to trade with level 3 data, does a really, really good job. Have John Seville of Acorn Wealth Corporation come in. John Thomas, guy with an excellent first name, Jeff Tompkins, runs a hedge fund. A very, very good trader. He's going to talk a little bit about his slingshot method. Kelly Clement, Oscar Carboni, Adrian Mann. So another really good lineup tomorrow. I hope you can I hope you're here with us again tomorrow. And aside from that, if you have any questions, if there's anything we can help you with, give us a call. I want to say thank you for being here. It's great to have you. I hope today was helpful for you. I hope you picked up a few things or a lot of things. I hope it was helpful for you. So thanks for coming. Thanks to all of the speakers and the participants and everybody that helped make it happen. See you again tomorrow. Thanks, everybody.